Yesterday, there was a report indicating that Henry Hub prices have gone up quite significantly. And some of the brokers indicated that this could be maybe a bit negative for IGL and MGL. Now, the stocks didn't fall at least yesterday. But how do you interpret this, this whole event? And then throw in the currency angle as well. What should we be in for? So let's start with the gas companies, the importers, and the downstream distributors, that is the city gas distribution players.
So just the first question, which is the Henry Hub strengthening. Obviously, what has happened over the last 6 months is that a lot of these CGDs have actually moved away from buying LNG on spot rates or even term rates and have actually resorted to buying it on linkages to Henry Hub. So obviously, given that Henry Hub prices have started to move up, that means that the cost of gas would start to get expensive, at least on the tranches that they have tied up. To their credit, however, what has been seen at least over the last 6 to 9 months is nobody is really tying up the entirety of their volumes in extremely long-term contracts. There is probably a movement away from contracts which are very long-term to maybe mid-term contracts with a little bit of flexibility built in. So what really happens, I think, is that there is obviously a take or pay percentage that is inbuilt into a lot of these gas contracts, which could be 80% or which could be 90%. That depends, frankly, from contract to contract. So to the extent that you can restrict your volumes to the take or pay quantity, you can actually shift to other gas sources which are maybe cheaper at this point of time. And very clearly, what is happening is the US, with the kind of rise in exports that it is seeing, it is obviously seeing its domestic hub prices actually starting to really strengthen quite substantially. And I think that trend will probably continue as more and more with the kind of LNG export capacity that is slated to come online from the US in the next couple of years, that will probably continue. What will happen is you will probably shift your contracts once again, maybe to midterm or even to spot contracts, because there the kind of excess capacity that is likely to come on stream in the next 12 to 18 months will help you reduce the costs. Having said that, to sum up, cash cost will probably rise in the near term to a certain extent because absolute prices are rising. And as you mentioned, the rupee depreciation, I think, is obviously a major impact. As of now, I think 88 to 89 is something that anyways most companies have been working with. We'll have to see whether there is any other hedge that the companies have taken against the further depreciation that's happened. But as of now, I think directionally, I think margins will continue to remain under pressure for at least the next couple of quarters. I think that's how one has to look at it.
All right. Hi, Prabal. Good morning and good to see you, Ben. Reliance Industries has seen a rating upgrade coming in from S&P. How does this change things? Are you tweaking things a little bit? If you could tell us in terms of, how will this affect some estimates, if at all?
No, I think with Reliance, we've always assumed, and that's something that they've demonstrated, that their rating is always close to, if not better than the sovereign. And that reflects in the kind of competitive gas cost, rates that they are able to negotiate from the market. And I think that is something, this new rating upgrade is something that's a reaffirmation of that. I think their cost of capital continues to remain the most competitive amongst any large cap companies in the country. And I think that is something that will probably continue. What is I think going to be interesting is the kind of downstream margin strength, and we spoke about this earlier as well, the kind of downstream margin strength that we have seen, particularly in the refining space. How does it actually reflect in their OTC earnings in the third quarter earnings? I think that is something that will be interesting to watch. Our sense is that sequentially they should actually see quite a bit of growth coming through in the OTC segment, which would help, offset the I beg your pardon, which will help offset the damage of the depreciating rupee to a certain extent. But this rating upgrade, I think, is not really something that will change anything as such. We anyways build in fairly competitive cost of capital for Reliance on all of their debt.
Probably lastly, ONGC and Petronet signed this big long-term deal, right? 15-year deal, ethane loading, unloading. Now, I don't know if this is just logistics or if this really plays into something more significant for the P&L accounts of either of these two companies. Your thoughts?
No, I think Petronet LNG has stated before in terms of communication, and I think this is essentially again confirming what they have said, that they are setting up the new lines, the new expansion that is happening at their terminal is the first of its kind, where it will have handling of ethane, propane, as well as LNG, all at the same jetty. And they had always stated that one of the monetization strategies in terms of as part of their petrochemical expansion would also be that they would be able to supply ethane to relevant players within their territory in and around. And Opal has a requirement for ethane. It has a dual fuel feed capacity for its petrochemical plant, where it's slated to use ethane as well as naphtha. So this is something that is something that has been guided to for a fairly long time. The signing of the contract obviously creates comfort as far as execution is concerned, that they have revenue visibility on one part of the expansion that they're doing. So in that sense, it's definitely a positive that the what they have basically stated in terms of how they will be able to monetize the large investments they are doing in downstream chemicals. That's something that is actually playing out. And even for Opal, in a way, it's actually a positive because ethane will be at slightly lower cost than naphtha. Sorry, go ahead.
Yeah. No. Point taken, Prabal. Thanks for explaining that. Appreciate it, as always, here on CNBC TV18. Thank you. Thank you for your time. Have a good weekend. Mayuresh Joshi is with us, head of equity at head of equity research at William O'Neill. Mayuresh, thanks for waiting. Appreciate your time here. Let's just dive straight into some individual names here, because markets, of course, not too much by way of Q. Keynes, if you have a view, sold off pretty sharply yesterday. Keynes Technologies, that Kotak note was doing the rounds. They dated the 3rd, which is day before yesterday. Some concerns around working capital, etc. So if you have a view there on Keynes. And Hitachi is the other one. Low this year was about 8,800, still at about 20,000. Nimesh was talking about Hitachi in his D Street Chatter segment yesterday, saying that the market is fearing loss of a contract to a rival company. So these two names, Keynes and Hitachi.
Morning, Prashant. No, as far as Keynes is concerned within the EMS space, obviously I think the Kotak note has created a sentimental impact. But apart from that, I think what really is happening for these players is there is expectations of a strong tailwind coming through in terms of both the PLI incentives as well as revenue growth coming through different product segments. But the margin profile still continues to remain restrained because the ODM part, which is the original design manufacturing part, which has a better margin profile, still remains a little soft. And that will take some time as a market share gain as well as a product mix percentage to probably go higher over the next few quarters. On top of that, I think the clarification that the management will now need to give in terms of related party disclosures, etc., is something that will still play out. Even from a valuation perspective, they're still very, very expensive, Prashant, as we speak. Therefore, I think it's a neutral view that we carry. For Hitachi, I think the expectations in terms of the news that is probably going on is obviously going to create an impact. But if you probably have a longer term view in terms of the structural story, the kind of orders that can come through from a medium to long-term perspective can still be better off with better margins. And therefore, I think the long-term story probably stays with Hitachi, though I think an order loss might create short-term impact as far as near-term revenue visibility is concerned.
Okay, all right. Thanks for that, Mayuresh. Stay on. We have more questions for you. Taking a break and coming back in just a bit. And of course, we'll have our technical experts join in as well with today's trading calls.
Okay, welcome back. 12 minutes to go for the pre-open session to kick off at 9 o'clock. Hormuz is here with the big movers from yesterday. Price action and volume action as well. Hormuz, take it away.
Good morning, Prashant. And some big names in the list today. India Cements was one such mover in yesterday's session, up almost 10%. Its biggest single-day gain and volumes since March of this year. And it snapped a 4-day losing streak in yesterday's session. Close to 70 lakh shares were traded yesterday. The 20-day average is only around 4.5 lakh shares. And out of those 70 lakh shares, close to 7.5 lakh shares were marked for delivery. The 20-day average of around 2 lakh shares as well. And the stock, after its recovery, it's also trading above the open offer price from Ultratech, and also it's near its 52-week high of 430. Hindustan Copper also saw its biggest single-day gain since May of this year, and has declined only twice in the last 8 sessions, moving higher courtesy the global copper prices. Volumes were the highest in the last 3 months. Almost 6 crore shares were traded, 20-day average of around 85 lakh shares, and the number of shares marked for delivery yesterday were the highest in 2025. Almost 1.5 crore shares were marked for delivery. The 20-day average is close to around 30 lakh shares. And lastly, Kaynes Technology is the big talked about name in the last hour of trade yesterday. The second straight day of losses, and out of the last 25 trading sessions, the stock has gained only in 5 of them. It's the last 5 weeks would gain only 1 day, and the rest of the days it has declined. The second highest volumes in the last 3 months for the stock. 27 lakh shares traded, 20-day average of around 8 lakh shares, and 10 lakh shares marked for delivery. The 20-day average was around 3 lakh shares, and below key moving averages, down for 3 months in a row, and is also down around 36% from its 52-week high, which is well above 7,800 rupees.
Okay, all right, got it. We will keep these names, especially Kaynes, on our radar. Thank you for that, Hormuz. I want to just get back to Interglobe. Yesterday, the stock, of course, closed down about 2.5–3%. And the sentiment continues to be very, very negative. I mean, the update, as I'm sure most of our viewers already know, is that Indigo has sought relief. It has sought, an exemption from these new crew rostering, pilot rostering norms for almost 3 months. They're saying give us time till the 10th of February and we'll get, our crew management in order. The DGCA has not yet confirmed this. They have not agreed to it just yet. But that was pretty much the sum and substance of the meeting. And the flight disruptions continue, as you would have seen on the screen already. There are 2 brokerage notes on Indigo. There's one on Citi. Citi is still retaining a buy call, target price of 6,500. Citi is only noting that these new norms will reduce the flexibility in rostering. Normalization could take some time. But the one that's a little more interesting is actually the Morgan Stanley note, the one that's on your screen. Morgan Stanley is still overweight. However, it's cut its target price, in a bit. The bigger issue is it's cut its EPS estimates for FY27 and 28 by 20% on Interglobe Aviation, saying that there is going to be a rise in the cost of average seat kilometer because they'll have to hire more pilots, hire more crew, etc. And that could put a lid on the earnings growth expectations. Mayuresh is with us. Mayuresh, very quickly, big debate on Interglobe. Is this a dip to buy or is it the time to stay away? What's your thought?
No, so our view is that we don't see a structural decline for 2 primary reasons, Surbi. I think Indigo still controls the majority in terms of the fleets and sky operations. So the market share is relatively huge. Competition is very, very scarce. I think Air India, Vistara through the flights that it operates, and SpiceJet with limited flights. On the domestic scene, it still continues to rule the skies. They're adding new routes as we speak, both domestically and on the global front, which are far more margin accretive in terms of revenue per square kilometer. And therefore, I think if one really perceives that what kind of impact will these norms have, it will have some element of an impact. But on the earnings front, because of the dominance that it probably has, and passenger load factors still having relatively higher share because there are no optionalities available, I think structural declines look a little bit improbable at this juncture. So not a buy at this juncture, but we also don't see a structural decline.
Okay, all right. Hi, Mayuresh. Morning. ITC Hotels, a large trade has got cleared out. 18 crore shares changing hands. What's your scene, Mayuresh? Where are you checking in? And view on ITC Hotels.
Morning, Nigel. So no check-in this year. I think my daughter's appearing for a 12th. So staying at home this year. So
wow, 12th. I'm wishing out all the best, Mayuresh.
Yes, thank you so much. No, but as far as ITC Hotels is concerned, I think our take is that we still continue holding this stock in our local and global portfolios. Our take is that for the hospitality industry as a whole, I think the organized players are still a very relative small portion. And therefore, I think the strategy that these hotel players are probably adopting. The expectations in terms of average room rates actually staying consistent. The GST rationalization on room rates below 7,500 rupees also probably aids, and the product mix itself. Also, let's not forget the F&B part and the MICE events which happen, which also keep margins at relatively high levels. So I think we continue liking the space. ITC hotels and Rementry both find a space in our local and global portfolios.
All right, Mayuresh, we'll leave it there. Thank you very much for joining us. Good speaking with you, and really appreciate your time here. Have a good weekend. We'll take a break. We are back in just a bit. Technical trading ideas on the other side. Stay tuned. Welcome back. 17 minutes to go for the market open, 2 minutes to go for the pre-open session. Siddharth Rai is with us and Mitesh Thakkar are with us as well this Friday morning with what they'd like you to do as far as specific trades go. Gentlemen, morning. Appreciate your time. Mitesh, you go first. A little bit of a attempt at a bounce from the lows yesterday, but finally ending slightly higher, flattish. What would you do?
Good morning, Prashant. I maintain that we'll possibly see some kind of consolidation. I think that process is on. Repeated failures around 26,300 suggest that that's the upper pivot point, and supports at about 25,850 broadly, give and take a few points. I think that's the lower end of the range. So I think as of now, I think most of the volatility indicators are also turning flat, which means that this range might extend for next few days as well. So on the index, nothing much. I think you try to buy it near the lower end of the range. Keep a stop below 25,800 and try to take profits as we get closer to about 26,200, 300 areas.
Okay, all right, got that. Let's go to Siddharth as well. Siddharth, morning. What's your call? Nifty trades?
Hi, Surbi. Good morning, and thanks for having me on the show, first of all. See, Surbi, if we talk about Nifty, the last couple of sessions have definitely shaken some confidence among the bulls since we came down below 26,100 very strongly. And we've also been playing, Nifty has also been playing zigzag around 26,000 for the last couple of sessions. So that has definitely affected the long side momentum in Nifty. Now, initially, I do think today will be opening on a waiting mode because of the central bank policy. But after the policy, we have to just look at one level, and that is 26,100. We have to watch out at the 26,100 level very closely, because if Nifty manages to go back above 26,100, we'll be seeing that momentum coming back in the index. But if we fail to do that, if we fail to see that happening in Nifty, so we can definitely see the index going back to touching those 25,900 levels. I in fact probably even below that towards the 25,850, 25,800 levels. So 26,100 is going to be very crucial for today. And that is the one level which we have to watch out for in Nifty.
Okay, all right. Hi, good morning, gentlemen. Sid, you go first. Tell us, what about individual stock trading calls?
Hi, Nigel. Good morning. See, two calls, two stocks, both of these we have to buy. The momentum is very good in both these counters. The first one is from the pharma space. The name is Torrent Pharma. See, Nigel, there was a consolidation in this counter for probably 7-8 sessions, but yesterday with a very good move, the stock came out of that consolidation. The breakout was very strong. So I do think the momentum will continue from here. Torrent Pharma, you can buy it here. The spot last I saw, it was around 3,795. We can buy it here. The stop loss will be at 3,770, and our targets being the first target 3,840, the second target 3,865. The second stock is UPL. See, this stock has a very strong base in the 750, 740 region, and exactly from that base, yesterday we saw very strong turnaround in this counter. So UPL can also be bought. The momentum will continue to be strong. Right now the spot I think is around 756, 757ish. We can buy it here. The stop loss will be at if we get it here, we can buy it, and the stop loss will be at 747, and the targets being the first target 780, second target 795.
Okay, got that. Mitesh, what about you?
I have a mix of buys and sells today. On the buying side is in Zinc with a stop at 491 for targets of 508, and Bajaj Auto does look good as well. Keep a stop below 9040, look for targets of around 9200. On the selling side is SBI Cards with a stop at 870 for targets of 830. And also Biocon, I think there was some kind of a breakdown yesterday, negative candle, on the price chart. So sell with a stop at 394 for targets of 376.
Okay, all right, gentlemen, thanks very much. We'll come back to you for some final trades closer to market opening. For the time being, let's quickly shift our focus to the IT space. Nomura recently came out with a note saying that revenue growth for IT companies could improve marginally in the next financial year. And it's also saying that mid-caps will continue to outpace large caps when it comes to growth. We have Abhishek Bandhari, Executive Director, Technology and Internet at Nomura joining in. Abhishek, thanks so much for being with us. So interesting point, and you're saying that growth could eventually get better. I think you're saying 4.5% for large caps versus 3%. But before we come to the growth question, I also want to discuss the rupee question with you. Now, how are the active hedges at Indian IT companies? And when you talk about this 4.5% overall growth, have you factored in the rupee depreciation to this extent?
Hi, Survi. Good morning, and thank you for having me on your show. So on your rupee question, I think the math is typically 1% depreciation in rupee yields around 25 to 30 basis point improvement in margins for the IT sector. But that's a very short-term thing. Eventually, if you look at the long-term trends, the currency benefit is not kept by the IT companies. It's eventually passed on to the clients. As far as the growth number is concerned, that's the dollar growth, which includes the rupee movement.
1% depreciation of the rupee leads to 25 to 30 bips margin improvement, right?
That's right.
Okay. So if we take this into account, you're talking about next year, even a slight margin improvement. So can you just tell us what the range is going to be for the large cap space?
Yeah. So if you look at our forecast, we expect rupee on an average to, weigh around 89 rupees versus dollar compared to around 87.5 this year, which is why we are baking in closer to 30 basis point margin improvement for the large cap next year.
Right. Got that. Abhishek, so on the back of all of it, the IT, the entire space has been swinging up and down. I mean, there's a lack of clarity, really, right, in terms of whether, and some of the most divided opinion out there in the street. On one thing, everyone agrees that maybe it's a space which is kind of under-owned and has not done, well for a while. But beyond that, there is a big debate which is afoot. What kind of pushback do you hear from investors when you kind of sort of, pitch ideas from this space? Is it largely all centered around AI and what it'll do to growth rates?
Thank you, Prashant. I think, globally, the big narrative going on in the tech space is identifying winners versus losers. And, the whole investment globally seem to be, flocking into the winners circle. And IT services in general are perceived to be quote unquote AI losers because they haven't really participated in the AI wave so far. In fact, they are more on the negative side that, they're seeing some bit of deflation in their revenues because of accelerated discounting that they are forced to give to their customers. So I think the pushback generally what we get from the clients is, when will that perception of, IT companies being an AI loser change into the other side? And two, even X of AI, I think the sector is, kind of a low growth sector. Even assuming 3% going to, call it 4.5% next year is actually a low growth compared to some of the highs, investors have seen during the COVID period, especially. But having said that, I think if you look at the long-term cycles in the IT services companies, businesses are predicated on tech changes. Generally speaking, over longer term, they have benefited from the tech changes cycle because whenever the cycle changes, typically there is more spend happening on the newer tech because every enterprise globally wants to anchor themselves to the new tech where most of the innovation happens. This time is not going to be any different, according to us. It's more of a timing issue. The delay actually has been longer than expected because the winners in AI is still not identified. Look, every month, every week, we are seeing the models getting better than the other. So it's very hard for the enterprises to, really to anchor to one particular, AI stack and go around with it. So I think it's a combination of, the ongoing innovation pace in the AI, which is still not giving the podium finish to the AI winners.
Yeah. Abhishek, so since we're running into market opening, sorry I'm rushing you, but so net, what's the call? For instance, there are two brokers in the market, and I can remember CLSA and Motilal very, very clearly. They came out with actually a contra-positive view on IT, saying that Indian IT services actually will start benefiting. They'll be great adopters of AI. We're not in the build-out stage, but adoption in India will perhaps, really come on top. What's your sense? And overall, are you still neutral on the sector? Or will you have a positive inclination now?
We are positive compared to what we were last year, simply because we think the narrative on AI is likely to get better from the IT services point of view. We are already seeing evidences of, the POC projects moving to point solutions, which is generally the start of AI spending. If you look at the commentaries from some of the bigger, global IT services companies like Cognizant, etc., they seem to be indicating start of smaller projects in AI, which I think is a good news. Even otherwise, if you look at the, AI thing, the investments in application layers are going to start. As the investors in the AI, which are typically the global large cloud companies, will have to start eventually monetizing their investments. And that's where the IT services companies will definitely participate. So we are more positive compared to what we were last year.
Abhishek, we had more questions, but running into market open, and we want to address what's happening with Keynes as well. Thank you for joining us, and I hope you come back for a slightly longer conversation. We were just getting warmed up. Thank you. We have Ramesh Kunikanan, Executive Vice Chairman of Keynes Technology. Keynes sold off 6% yesterday. Stocks down about 30-35% from the start of the year. Although, I mean, from where it was, say, 2 years ago, it's still a huge, huge wealth creator. So thank you for joining us. There has been, of course, as you're well aware, this Kotak analyst report, which has been doing the rounds. You've responded to exchanges this morning. I just want to start by addressing a few of what the note pointed out. One is multiple inconsistencies, sir, what the analyst points out, between disclosures that you've done, which is Keynes Technology, and your subsidiaries, like the smart metering company. It's Iskraemeco and Keynes Electronic Manufacturing. This is regarding intercompany transactions, payables, receivables, Iskraemeco's disclosures show that some of the purchases, payables, receivables, etc., involving Keynes Technology, that is the parent, and Keynes Electronic Manufacturing do not appear in corresponding disclosures of the other two entities. Could you clarify what exactly is happening, and whether when you present consolidated financials, all of this will be taken, will be figured out? They will all be proper. Go on, sir.
If you see in the balance sheet and P&L, there is no mistake at all. It is only in the standalone we have missed, which we clearly clarified.
Okay.
Notes to accounts, it is missing. That's all. That is also in one company. But if you see the P&L as well as in the balance sheet, it is all appearing.
Okay.
There is no inconsistency, whatever he is saying. However, we agree that there is a miss there, and which we will take corrective action and then move forward.
So all these intercompany transactions are being corrected in the consolidated...
As far as balance sheet and P&L is concerned.
Okay. Just one more point on this, the smart metering company. It's reported a significant amount of receivables due from its parent. 46 odd crores outstanding for over a year. Could you talk to us a little bit about the reason behind this delayed collection and the cash position of the subsidiary?
See, this is an age receivable in Iskraemeco books. Whatever, when we acquired itself, it was there, which we will be reconciling and closing it.
Okay. By when, sir?
By this financial year end, we should be able to close it.
Okay. So you're saying when you acquired this was already there?
Yeah.
So it's delayed collection, but you will collect it this year?
Yes.
In this financial year?
Yes.
Do you feel there is a need to kind of review and strengthen your internal controls, disclosure policy across subsidiaries, sir? Given all of these points which have been highlighted?
We are improving as far as this is concerned. As on today, I have put strict controls in this, and I feel that is adequate and system, but we will review this once again.
Okay. Would you be, this is a specific one analyst who has pointed this out. Would you be, I'm sure others have reached out as well. And, one of the ways, of course, is this interaction, which I think will be viewed by investors, etc. Would you be reaching out to other stakeholders as well? Have others reached out to you?
Yeah, many of them have reached out to us. We have clarified. That is why today, if you see, we have filed in the exchange also clarification for all these things. And we are also planning to have a group call for everybody to clarify their viewpoints.
All right, so one final question before we let you go. Actually, the street would have liked you to actually come earlier and clarify it, not after a 25% fall in the last 1 month or so. That said, we're looking ahead. So as you're saying, you're making some amendments now, and things should get aligned in a manner that's desired by the street. A quick question with regard to your working capital cycle. That's been a pain point, right? That's been elongated. So tell us, what is the level that you're looking at, and the cash flow, sir. So the cash flow, sir. So the cash flows as well have been negative. When does that turn positive? Because both your operating cash flow and your free cash flow has been negative, and that's been a bit of a pain point. Please go ahead.
See, this is a capital-intensive business. However, we are working, and by the financial event, we will bring it to sub-90 days cash cycle. So with that, it will become positive. And we are having plans put in place to achieve this.
By when, sir, will it come down to less than 90 days?
By this year end.
And you turn free cash flow positive, operating cash flow positive?
Yes.
By when?
By this March, it will be OCF positive.
And sir, the changes, accounting changes that you are going to undertake, they will reflect from the next fiscal onwards? I mean, how quickly will you be able to?
There is no major change. It is only one line item is omitted.
Okay, all right. So
in one, I don't know how to explain this. It is done in one. But otherwise, if you see balance sheet, P&L, everywhere it is tallying.
Okay. Okay, fair enough. And we'd running into market open, but
I understand.
Appreciate you coming on and clarifying on some of these points, and look forward to that call that you're saying that you'd hold with a wider set of stakeholders, etc. Thank you for that. We'll see if the market responds any which way to the clarification to the exchanges, and of course to this interaction as well as markets open. But some acknowledgement, of course, that there are some inconsistencies, but they will be corrected in consolidated financials, working capital, cash flow. Those things also be. All of it. The assurances will be corrected this year, this financial year that is ending March 2026. 26,000 is where the Nifty is at, slightly higher. The Nifty Bank is up about 0.15. The Sensex is up about 0.17. Small cap index is up about 0.25%. Is down 0.25%. So across the board, there is a tinge of red, but nothing very dramatic at this point. Usually, as it often happens, on RBI policy days, it's almost like a holding pattern till about 10 o'clock when the decision comes through, and then of course, there's a press conference later on, commentary, all of it is watched. So it's more tentative till about 10 o'clock, and then action starts to pick up. If you remember the last RBI policy day when the slew of announcements came through, that was a big one. Outside monetary policy, there were lots of announcements. So there were specific moves post all of that. 27-30 points lower, so flat right now, more down than up. That's a Nifty heat map. Shriram Finance, Eternal, Wipro are higher. Reliance, Indigo and Max Health are on the other side. So that's the Nifty 50 picture as it stands right now. Surabhi.
Yeah, I was just looking at Keynes, if there's any reprieve after this conversation. Not really. Still down about 2%. That's Keynes for you. By the way, Delta Corp promoters have bought some shares from the market, and that stock's doing really well. Promoter buying usually seen positively, and that's what's happening on Delta Corp. On the large cap screen, we don't have too many, not Asahi Songwon, Delta Corp is the stock, 5% up. On the large cap screen, not much to go with. Interglobe Aviation is still sulking down about 1%. Reliance, no immediate reaction to that S&P ratings upgrade. Stock's down about 0.5%. What else is weak? Axis Bank, HDFC Bank. Banks are very cautious. ICICI Bank. All of the banks are flat to slightly negative right now. There's Apollo on the way down, JSW Steel on the way down as well. But however, on the upside, let's see what's working. Eternal, 1% higher. Maruti, SBI Life, Eicher Motors, and Kotak Mahindra Bank is actually bucking the rest of the private sector banking weakness. That's holding up, and a little bit of buying on IT. Wipro, Infosys, I can see them bouncing up about 0.5% or so, but absolutely flat. Bang in line with what the GIFT Nifty was indicating. Absolutely quiet. 2 points on the Nifty.
Well, that's right, Surabhi. Delta Corp, that's the one. It's an interesting one in there. Mr. Jaidev Modi going ahead and buying some shares from the open market. The stock is a fourth of what it was, I think 18 months or so ago, before this entire GST fiasco blew up. It was close to around 290 to 300 rupees stock. So encouraging to see a promoter entity coming in there and chipping in. What else is doing well? Lloyd's Engineering. They have an agreement with the Italy-based Virtual Labs for development of radar tech. Street likes that. Stock higher. That as well has seen a big correction from the recent peak. Railtel, they have bagged a second order this month from the CPWD for around a 60 crore order or thereabouts. So you have Railtel, not 63 moons. Railtel should come up for you on the screen. Zentech, they have got close to around 120 crore order for supply of comprehensive training node from the Ministry of Defense. So that's why that stock is up. And CMAC as well. They have bagged a $43 million order, 5-year charter hire contract from HAL. That one as well, trading well in the green as we speak, 3% And, there's a sharp uptick as well on that one. Filatex, the court has quashed a GST claim of around 92 crores. I think I saw a favorable reaction on that particular name. A quiet start to trade, but it'll get interesting once the RBI governor takes center stage.
Yeah, no, it's, this news at the bottom of the screen, sobering news. Simone Tata has passed away at the age of 95 at Breach Canning Hospital this morning. That's on your screens right now. Well, you got market open, which is, of course, it's almost waiting and unchanged from yesterday's close. Even with regards to single stock moves, I mean, they usually start to appear with some amount of clarity on RBI days post the policy. So that's where we're at. 1:1 is the advanced decline ratio. It's early to look at this, but for what it's worth, we are up a little bit. Capillary, the new listing is, saw that big move yesterday. And it's up another 3% this morning. So it had gotten to about 710 rupees or so. Sorry, $800 was the high, within 3 days. Then it sold off sharply to about 600. And now it's back above 700 once again. Number one volume-led gainer, by the way, Capillary. Grow had a sharp correction yesterday. Grow is down. Grow is up about 2.5% at this point. Shriram Finance, of course, part of the Nifty, is the top gainer. M&M Finance is up about 2.6%. Delta Corp is coming up with a sharp move. So 66 rupees to now 72 in 2 sessions. So that's the move on Delta Corp. On the downside, apart from what we mentioned, Keynes is trying to come up a little bit, but not. It's by the way, the largest volume-led loser right now on the NSE, but it's down 2%. The big correction, of course, is already, happened yesterday and days prior to yesterday. What's happening with HCC? Or am my screen's showing up something? It's seeing a big downtick, but we'll wait. Idea is down about 2.25%. Okay, Idea, HCC down 7. HCC had a big move up yesterday. That's what we're seeing across random moves. 10% up one day, 10% down the next day.
I think I'm not sure, but I think it goes X rights. I think so. Probably. Okay. I think today's the X rate of HCC.
Right.
So that could be one of the reasons why it's down.
Yeah, and I think CAMS as well, right? CAMS is showing a big adjustment. So we'll have some of that come up. Okay, India Cement, another one, right? Ended up 10% higher, India Cement. India Cement is down about 3% or so. Hikal is down about 4%. And so it goes across the board. 27 points higher now, 26,060 is where we're at. Kenneth Andrade is with us, CIO, Old Bridge Mutual Fund. Kenneth, good morning. Great to have you with us on the program. Thanks for joining us. Kenneth, just give us an outlay of your views as we head into 2026. Are you more constructive? Many have turned more constructive. But I suspect there isn't this element of just time correction. Other markets have done well, markets have not done very well, and as you can sort of flip the chapter into 2026, expectation that maybe things will look a lot better. Would you kind of agree with it, and how would you back it up with arguments?
Okay, 2025 calendar year, you've been in a reasonable consolidation phase. It's been a time correction. I think you'll have to have a little bit of patience into 2026. What you see right now is the breadth of the market actually becoming weak. I think for the first quarter of next year, this cycle will continue. The headline indices might hold steady, but I think the breadth of the market might continue to get slightly weaker. I think the good news is that we've come out of 2025, 23, 24, 25 with single digit headline numbers. There, I think we're looking a little promising as far as corporate India is concerned, and I think growth should head back in 2026. Second half of 26 and 27, I think we should be much better. We have a much better outlook than what looks like it now. So I guess the time correction that we've been through for a while, as we head into the end of the financial year, I think you'll see a little bit more of that before things ease out a little bit.
Mm-hmm. Okay, hi Kenneth. Good morning and good to see you in. What are the themes that you're identifying? You're sounding a little bit more optimistic that this time-wise correction gradually will move behind, and actually it could be a good time to get into stocks you like. That said, what's the top theme that you all are betting on? I think in the past we've spoken a little bit about defense, you spoke a little bit about real estate as well. I think you had a bit of tech, if I'm not mistaken. So your view?
I think it's pointing out towards what's happening to the currency, and that's essentially where we have been positioned for a while. There's a domestic economy, which is discretionary consumption, and there are companies that are growing international franchises. I think that's where we are. Valuations, capex-led growth, capex-led growth are basically two thematics that we think on a financial standpoint is what we like. Any business that's putting capex to work or at the end of its capex cycle, we think pharmaceuticals is there. We think automotive is there. Metals should go through that cycle in a year and a half. You should see significant volumes coming through that entire pack. I think that's where we are. Real estate, there is enormous amount of supply coming in across the country, but this market will get consolidated. I think consolidation is the theme in real estate. We've seen prices top out, but now we're going in for a volume drive. So given the little bit of everything that is there, I think the domestic economy is going to hold up. You're not going to see too many negative surprises. The upward surprise comes in with all the negatives of 2025 actually balance themselves out. So the big negative of 2025 has been our trade. I think 2026 trade balances should look a lot better than what they look at this point in time.
All right, let me probe you a little bit on the metals pack. As you said, a couple of pockets could look up. I was just looking at the data points with regard to aluminium, where growth is expected at around 3.5%, and supply may not keep up. And after a while, we could see a bit of a deficit on aluminium. Just to probe you a little bit on the metals, what you like, ferrous, non-ferrous, and from either segment, I mean, what do you more focus on? For example, ferrous, is it more longs? In non-ferrous, is it silver? Is it zinc? Aluminium? What is it?
We've got a little of everything out there. I think our exposure to commodities currently is at about 12%.
Okay.
Ferrous, aluminium, and zinc all put together. Ferrous, we're looking for more diversified geographies. Non-ferrous, which is aluminium and zinc. Aluminium is obviously a trend which is more value-added in nature, and zinc, they are all primary metal companies. So it's not. I mean, one is commodity prices that should give you your upside. But over the next 2 years or 3 years, you're also seeing a lot of capex in that cycle coming to an end, and capacity is coming on. So whether you get a price, which is your upside in the near term, or whether you get volumes in the next couple of years, I think you're pretty much well placed on both counts. If you get price and volume put together, I think then you're hitting it out of the park with this category. But that's not what we're counting for. We're just looking at companies putting capital to work, and sensible capital to work. We're waiting for capacities to go on stream. These businesses are very capex in nature, and when capex comes on stream, their ROIs are low double digit. I mean, they earn lower in the first couple of years, and as time goes by, their efficiencies and inflation actually adds back to ROIs. So that's the cycle that we are in. It's not about 6 months. It's not about year. It's not about commodity price. It's just capex driven. It's just capex driven investment that's leading volumes in the cycle.
Going by the description you gave me, zinc, aluminium, it looks like you're betting on the large conglomerate that has a little bit of all. Is that correct? That's undergoing a corporate action?
I mean, there are very specific plays out there, but as a category, they should do well. I mean, if you step back again, you can't have capex cycles going through without all commodities doing well, right? When you sit back and look what's happening across the world, everyone's trying to build capacities internally to be self-sufficient. And that's essentially what the world's going through. You're going to go through a small capex cycle, and all commodities should work well.
I think, Kenneth, morning. I think Nigel's basically asking you, do you like Vedanta?
Well, we got an exposure to all businesses that we like.
Okay.
Yeah.
Okay, fair enough. By the way, I was glancing across Asian screens, and it's largely red, barring mainland Chinese markets. And there's been a very interesting listing in China this morning. It's called China's NVIDIA. It's a company called Moore Threads, and they make these graphic processing units. It was a $1 billion listing this morning. Stock's gone up 400%. It's astounding. 5x on listing. That's what's going on. That's the tech craze for you. But Kenneth, now we don't have these AI plays. So let me ask you about the next best thing that the market was fixated on all through this year. Anything related to technology in India. It could be consumer tech. It could be a lens cart. It could be a urban company. Of course, you have Swiggy, Zomato, or payments tech. We had Pine Labs listing. So we don't have AI, but anything else on the tech side, new age tech, the market really latched onto. What are your thoughts around some of these businesses and the valuations at which they trade now?
I mean, everyone's got an opportunity out there. It's all about execution, and it's all about managing cash flows over a long-term cycle in some of these companies. They've done well. They created franchises, and I think they will continue to grow. We're a little different in terms of our thought process in trying to capture businesses. We like cash flows. We like companies that have demonstrated capabilities and their ability to grow with internal cash flows, right? So we watch these companies. We're fairly positive on the franchises, but they're not anywhere close to where we would like to acquire them from just a valuation standpoint. Either they have to grow dramatically, or the stocks have to correct. So one of the two things will happen over the next couple of years. But I'm sure these companies are going to be around for a pretty long time. But we have no investment view on most of them.
Okay, not so interested. What about IT services, legacy IT services? That's the debate, and we've been having it with so many different brokers. Two are fairly optimistic, and this morning we spoke with Nomura, and they also said that incrementally they're turning more positive on IT. There's also the rupee tailwind, and maybe ultimately when AI moves from the build-out stage to the adoption stage, then our large companies will know how to use AI to their advantage. So, I mean, that's the new thesis in the market. Do you subscribe to that view?
We've been holding on to that for a while. Exposure into IT services has been around 10% for a while. And we've got valuations in our favor. We've got cash flows in our favor. And some of these companies are migrating towards what you've just mentioned. And it's been a continuous process. So here you need a little bit more patience. I think most of it will come through sometime in the next couple of years. But I must say, going into the future, there are significant challenges in IT services. It's not going to be a universal shift. I mean, it's not going to be universal. All companies are not going to benefit from whatever is happening in artificial intelligence out there or in automation out there. There'll be few that will take significant market share. I think you'll have to identify them in this cycle itself.
Got it. So you like, Kenneth, just to wrap it up, you like metals. What else sectorally?
Okay. Just to wrap it up, any business that has got a reasonably large dollar exposure, even if it's in the domestic environment, is what we like. See, India has been struggling for growth in the domestic environment. We've had a tailwind of policy which has held up the economy for a while. But to find that growth, we need to find new markets. I think that's the cycle that we've been aligned to. So any business which has got a large tailwind in terms of a franchise getting created outside the country with domestic cash flows, I think that's what we are aligning to. So to put it simply, thematically, the market, if it has to grow sizably, we need to create in-depth kind of Indian companies that create franchises out there. You've got a number of industries who are already established. You've got a huge amount of capex that has already gone on the ground. I think the utilization of that capex that is on the ground has to come from newer geographies, newer markets. If India holds up, I think that's if India holds up and creates that demand, I think that's a topic. But we need to move the scale significantly higher than where we are today.
Okay, all right. Thanks very much for that. Appreciate it, Kenneth, and good luck. See you in 2026. Well, Sudarshan is now joining us on Interglobe and some of the brokerage calls which are coming through. Morgan is one of them, but I think there are others as well. So take it away.
So most of the brokerages have maintained this positive stance on Indigo despite the problems that the company has been facing for the last few days. Citi has maintained positive stance as well as the target price, but Morgan Stanley has maintained positive stance of overweight call but has cut target price to 6,540 from earlier target price of almost 6,700 per share. It says company has been seeing the increase in the cost headwinds and it believes the entire industry is going to face the same going forward, and it expects AFS to rise gradually as a partial offset because demand trends in the month of November had seen a significant increase if you compare against last few months. But it has cut FY27 and FY28 EPS estimates by 20% each. And as far as the valuation is concerned, currently Indigo is trading at 9x FY27 EV EBITDA versus pre-COVID level of 8.5 times. It expects Q3 yield to see a growth in Q3, but in Q4, yields are expected to decline on a high base.
Okay, all right. Thanks a lot for that, sir. By the way, Keynes Technology is the stock of the morning actually on the downside. It's down 6.5%. Slam dunk on there. Keep in mind that that's a stock that's already down close to 25%. The management acknowledging that there are some kind of lapses, but they're assuring us in the way ahead, things should actually, improve. So, that's the stock that we're actually keeping an eye on. I don't know, at times I think the management, when they know a couple of sell-side analysts are already pointing out some of these facts, why don't you come to the table and, in fact, speak to the analyst community? Because today, in fact, any kind of bounce is getting sold into, for the year to date, it's down. But I think the pain that you're seeing in the last 30 days itself, where the stock correcting 30% or thereabouts, and they're now addressing concerns after the stock is down 25%, not giving you a good feeling. Yeah. Management is saying they're going to rectify things, but for the time being, I think there is some intense selling that we're seeing this morning.
No, absolutely.
And I'll just like to point one more thing, right? We usually, absolutely point taken, Nigel. We spoke with the executive chairman, right? Obviously, he knows everything about the business, but usually we have Mr. Sampath, right, who comes on and he talks about specific numbers, etc. So, to push out at a time like this, someone who usually is not talking to us every quarter, on numbers, etc., etc. I don't know how that makes sense, but that's the other thing I saw. I mean, but we'll try and have Mr. Sampath on as well. But the point is that we spoke with someone who really,
the market's not seen that phase before. And also, I think, the market is not comfortable if a stockbroker or a market intermediary has to come out and point out an anomaly in the way the accounts are being prepared. And then the management does acknowledge, though the gentleman said that it's only one line item. But even then, I think that just makes you feel a little uneasy. And this is a very widely owned stock. So perhaps there's just that disappointment that's played out.
And at around 5,500 rupees, they came on in the middle of this year itself and they raised some money via the QIP route. So that's why those shareholders will be wondering what's going on. Yeah. The stock currently is sharply lower in a matter of a few months. Came to I think 5,500 rupees in June, July, if not mistaken, 2025 itself.
And it's very clear that stock exchange clarification that's gone, the point-by-point clarification, that's not really, worked to soothe nerves at all, and there's enough ambiguity.
Yeah. No, what we'll do is we'll try and have maybe we can play out a soundbite of Keynes if we have. We spoke with them just before markets opened, so that coming up in a bit. Okay, I think we have it.
Astral?
So let's just we have Astral, I think, right, guys?
Yeah, I think we have the Astral management joining in. Now, the stock is down about 30-35% overall in the year, but the company had a good second quarter. There is obviously that question about overall demand and whether we'll see a recovery in the second half or not. And now we have the company management joining in. We have Mr. Hiranand Savlani, Executive Director and CFO at Astral. Mr. Savlani, thank you so much for being with us. So we want to focus on three key points. Let's put them up for our viewers. The fact that there is still no anti-dumping duty for PVC and how that's playing out. We need to, of course, understand what is happening with the second half for demand and pricing. And then, of course, the capacity expansion, also the backward integration that Astral has announced into CPVC resin. So let's take all of these points one by one. Mr. Savlani, let's talk about this lack of any protectionist measures so far. So as of now, there's no anti-dumping duty. Are you hopeful it'll come? Is it still required? Tell us what's happening with respect to imports. What is happening with domestic PVC pricing?
So anti-dumping duty, time being, it is postponed. So still there is a hope that it will come maybe in the form of anti-dumping duty or maybe in the form of MIP, minimum import price. But it will take some time. So it is very difficult for us to give the guideline that by when it will be there.
Okay, let's talk pricing, sir. Just explain to us how pricing is in the market. Is there a lot of, are there a lot of imports still flooding the market? What is happening with local prices? Have they stabilized at all?
So in anticipation of anti-dumping duty, the raw material price has gone up. But now, since the anti-dumping duty is not coming, so because of that, the prices have cooled off. So prices have come down. And we are of the view that it is going to stable down near terms. Maybe 1 or 2 rupees here and there will be there, but otherwise it will go down. Because today's pricings are such that the raw material manufacturer are bleeding right now. Even last quarter number, if you see the raw material manufacturer, they are bleeding. So at some point, somebody will stop the production. So because of that, we are of the view that these prices of raw material are not acceptable because that is the bleeding to every manufacturer. So sooner or later, temporary phenomena will be there, that fear is there that the dumping can happen from the China. But actually, if you see, the Chinese players are not giving the lower price than the current price. So I don't think any challenge will be there. Sooner or later, prices will stable down. And from here on, we are seeing that the prices have come down. So demand has already started picking up. Last 10 days, demand is robust. So we are of the view that whatever guidance we have given, that minimum double-digit growth for the full year, we are confident that we will be able to deliver that number.
Okay, all right. Hi, sir. Good morning. Good to see you, Ben. Can you quantify the company's exposure to the Jal Jeevan mission-related projects? Do you have an exposure?
No, we don't have a Jal Jeevan exposure.
No exposure at all.
No,
All right.
no.
Since you were focusing on demand, let's get that out of the way. The second half of the year, volumes would be much better. And I think for the year, you were guiding for double-digit revenue growth. You're sticking by that? You want to quantify it?
Yes, we are stick to that, and we are confident that we will be able to deliver. You see, last quarter also, there was no anti-dumping duty, but still we have delivered a good number. So we don't see any challenge into delivering the double-digit number.
So double-digit, you want to quantify it? Mid double-digit?
I think let this quarter settle down and prices where it is going to settle down. Based on that, we will be able to guide. So maybe Q3 end, we will be able to guide, because historically, you see, Q4 is always robust in our industry. And same thing with the Astral. So we will be able to guide you maybe by the end of the Q3 number.
Okay.
Sir, just want to understand what your outlook is on margins, because you just said that PVC pricing is largely going to be stable, even without any anti-dumping duty. You did about 16% EBITDA margin in Q2. Can you tell us how this will play out? And also then, as you get into the next year, you're going into backward integration with this CPVC resin facility that you're setting up. So just give us a margin outlook over the next few quarters.
I think this year we have already given the guidance of 16 to 18% EBITDA margin. So we are stick to that margin. Definitely next year onward margin will shoot up because of the backward integration. You see the CPVC manufacturers margin, which is already there in public domain because all are the listed players. So they are working very high margin. So even if we maintain the same margin to Astral, it is going to be a game changer for Astral. But I don't want to speculate too much at this stage. Let us plant be operational. We see the actual number. Right now, whatever the numbers are there, only on the paper. So once this will be there, we will be able to guide how.
And when, sir? When does the CPVC facility, when does it come on stream?
September, our plant will be ready. October, November, December, we will try to settle down and do the trial runs and all this thing. From 1st January, maybe little early, commercial production will start.
All right, so give us some more color. Will that be an inventory loss for the quarter? And also, if you could help us out with the EBITDA per kg for the full year, what should it look like? If a rough number you could help us out with?
So I think we have never ever given the per kg EBITDA number to the street. We always say the percentage term. It is very difficult because the reason is that the product mix keeps changing quarter on quarter. In the monsoon quarter, the product mix will be different. Our peak quarter, Q4, the mix will be in favor of CPVC on, so that always will be higher per kg. So we never give the guidance of per kg basis because of the mix. But otherwise, percentage term EBITDA, whatever we have given the guidance, we are stick to that.
All right, Mr. Savlani, a short but crisp chat. We have a lot more questions. Please do join in sometime towards the end of this year or early next year. Thanks a lot for joining in.
Thank you.
Wishing you all the best. Well, time to slip into a short break, but on the other side, we begin our coverage on the RBI monetary policy, which is set to be announced at 10 a.m. Ritu, Lata, and a whole host of economists are waiting for you on the other side of the short break. Stay tuned.
Hello and welcome to the Reserve Bank's monetary policy, coming to you from CNBC-TV18 straight from the Mint Street headquarters here at RBI. It's a very, very tricky policy because before the policy we got a huge GDP number and we are seeing the rupee lose more than 2% in just 2 weeks. So suddenly the policy has become extremely tricky. One sign of the trickiness is that when I did my Citizens Monetary Policy Committee, the CNBC-TV18 shadow committee as it were, we got a 3-2 poll saying they want status quo. Narrow majority, but still a status quo. But my colleague Ritu, who's waiting by, when she did her poll with a large band of economists and bond dealers, she got a 60-40 saying there will be a rate cut. Again, narrow majority. Well, with that, it's over to you, Ritu. Welcome to this monetary policy show. And tell us what else your poll said.
Well, Lata, it's deeply divided, like you said, so it's going to be a close call. 60-40 is what our poll is showing us, 60% in favor of a 25 basis point cut, whereas the rest are betting on the MPC staying on hold this time around. But irrespective, the easing cycle is going to be very short. At best, we're going to get one more 25 basis point rate cut, so not much to write home about. In fact, 60% believe that December will be the end of the rate cut cycle, and the rates, the terminal policy rate, will settle at around 5.25%. 0.5%. Now, GDP, that's the number we're going to be focusing on. Of course, RBI will have to revise it. We already have 8% for the first half of the year. So that 6.8 is likely to be revised to 7.1 to 7.2%, according to our poll. And the CPI forecast, 2.6%, is likely to be revised downwards to closer to the 2% mark. No change in the stance is expected. The tone is expected to be a bit dovish, acknowledging that headroom from inflation, which is at record lows at 0.25% the last reading. As far as the rupee is concerned, now that is complicating matters, but our respondents say, RBI is not going to be influenced by the falling rupee just yet. In fact, it may show some comfort. What it does on liquidity is also something that the markets will very keenly watch out for, because remember, there will be withdrawals from the system, in this December to March period. So they want some comfort from RBI that there will be some maybe bond purchases or something of the sort.
Oh, yes, you said it. Actually, the last one, which Ritu pointed out, will be perhaps a point that the market will look forward to very keenly, whether Reserve Bank comes and buys bonds. So that will push down yields, that will give liquidity to the system, and that may be the most important to watch. So it may not come in the policy statement. The liquidity announcements, like an OMO, normally come in a separate press release. So at the end of the policy, we may not yet have a clear understanding of the liquidity. But we have our experts to guide us. Joining us are Parul Mittal Sinha, the head of Treasury at Stanchart. We are also joined by Kaushik Das, the economist from Deutsche Bank, Indra Nilpal, the economist from Yes Bank, and Lakshmi Iyer, who is now Group President, Investments and CEO at Bajaj Alternate Investment Management. Ladies and gentlemen, it's an even house. Thank you very much for joining us. Parul, first, what the market wants. Tell us if there is a cut and if there is a no cut, how bonds will react. And more importantly, whether now, because of the rupee, the Reserve Bank has to be a bit careful. Because this year, we have 17 billion equity outflows and 8.5 billion bond inflows. Do you think the governor has to worry about the rupee angle also while setting rates? So two questions here.
Yes, Lata. So thank you for inviting me. Like you said, this is a very tricky policy. And this time, the market sentiment is driven more by fear than greed. So normally we have greed driving market sentiment. And why I say that is because market pricing, if you look at the OIS curve, is pricing in a 40% chance of a rate cut in this policy, not even more than 50%, which means market is really fearful that with the strong GDP growth number, RBI may not deliver a rate cut. We at SCB feel also that RBI may not deliver a rate cut and want to keep their powder dry. One of the main reasons may be the rupee depreciation, that it is depreciating very sharply, and it also has implications for inflation going forward. Now, if the rate cut doesn't happen and the commentary is not sufficiently dovish, I think markets have a room to sell off by 10 to 12 basis points. If the rate cut gets delivered, it will be a positive sentiment, but yields may go down only by 2 to 5 basis points. So asymmetric reaction on the side of fear.
Okay. Oh, that's very precise. Thanks for helping us out with that. Kaushik Das, over to you now. And I mean, I'm not asking you to defend a rate cut or a rate hike action. My simple point is that considering that we have $8.5 billion of bond inflows, the idea that India is a growth country and not a rate differential country, perhaps that argument is not holding. Maybe the rupee becomes important, you think, while setting rates?
No, Lata, we are of the view that RBI always keeps interest rate policy and FX policy different. And if you remember, in the beginning of this year, when rupee was going towards 88, at that time, the all-time low, the same question was asked whether RBI should be cutting rates. That was obviously the start of the cycle. But the same question was asked that rupee is weakening, whether RBI should be easing rates, can it lead to more financial sector problems? But RBI went ahead and did 50 basis points rate cut. And when the flows came back between January to June, we saw in May rupee coming back to 84. So rupee, I think, will be a different, discussion altogether. RBI will decide the levels. And also, depends on how much flows come in compared to the current account deficit, rupee will, find its own value. And RBI has been prudent to kind of let it find its own value, but just taking care of excess volatility. So I think the rate decision today, we are in a favor of a rate cut call of 25 basis points. The bond inflows that have happened can continue next year as well. If you have bond index inclusion, which we're hearing that there's a possibility that India could get included in another global bond index, which can bring in 15, 20 billion, depending on when it is starting. So I think, the rate cut will be, if it is delivered, it will be delivered because there is so much space on the inflation front, which RBI will have to revise quite significantly, not just for this year, coming down to 2%, maybe next year also the 4.5% that they've given, that has room to come down. So from a real interest rate perspective, RBI has space to do one more rate cut. And the timing is more important. I think, if you're not doing it in December, when inflation is at 0%, it's difficult to justify more rate cuts in February.
Well, Kaushik, of course, we'll watch out for that. And RBI is a forward-looking central bank because monetary policy acts with a lag. But Lakshmi, not asking you your rate call, that's very close. What I'm going to ask you is more on liquidity. What will the markets want to hear from the governor, if he doesn't announce an outright OMO? What are some of the cues you'll be watching out for in the governor's speech?
Yeah, hi, good morning. So I'd say that the markets are very much akin to what Cinderella's wish list was. Cinderella never asked for a Prince Charming. She actually asked for a day off and a pair of shoes. I think the markets, specifically the bond markets, are clearly asking for some liquidity infusion. And I would say on a more sustainable basis, given the fact that because of RBI intervention and, of course, GST, etc., there has been a liquidity outflow. And I think on a sustained basis, that is going to be the key. So today's narrative, either which way, as you rightly said, is going to be so close, but is going to be more focused on how much is it going to be through, FX buy-sell swap? Is it going to be more of OMOs, which is what the markets are expecting? I think that is going to be the crux today. Not so fussed about the rate action as is evidenced by the OIS curve.
Mr. Indraneel Pan, not so fussed about the rate action, of course, but either way, we're unlikely to see much of a reaction as far as the bond markets are concerned with just one more rate cut priced in already. What are you going to be watching out for?
So I think as most of our panel members did point out, liquidity and the announcement on the liquidity is likely to be more important than the rate cut at this point in time. I am not expecting an OMO calendar in this policy, and the OMO calendar can come whenever it is necessary and when we clearly see liquidity being on the tighter side. The RBI has allowed the currency to move and establish in a new range, which necessarily means that they are not really possibly too keen on sort of stopping the depreciation pressure on the currency, and therefore worries on the rupee liquidity side due to that is possibly reduced. On the liquidity front, I think the markets would be looking at very clearly the guidance in terms of the amount of rupee liquidity that they want to maintain on a regular basis. And I think they will not change that 1% NDTL sort of direction that they had been providing previously. And as I say, the bond purchases on the OMO side can continue on the secondary market rather than a calendar coming out.
Yeah, okay. Okay, but then the market is expecting something like over 2 trillion. So there you will have to do a proper OMO auction. Otherwise, I don't know if in the secondary market window so much can be, is usually, bought. But Parul, there is this other point that Lakshmi is making. Are you expecting that they could also announce something like an FX swap, which may come in the statement itself?
We don't expect that kind of liquidity measures to come with the statement itself. We know that the buy-sell had reduced in the secondary market, but that is not the expectation. I do think market is expecting some kind of comfort from RBI on the liquidity front. I also want to mention that the stance will also be very important, because if the stance remains neutral with a pause, then it will be really disruptive for the market. But however, the stance, if that changes, that can give a lot of comfort to the market, and then rate cut becomes less important.
That very few people have raised that issue with us about stance. So I think we'll have one more question time. Kaushik, is there even a possibility? Two external members actually asked for a change of stance in the previous one, in the previous policy. Are you expecting that, or is there even a small chance of that? And secondly, how important are these GDP and inflation forecasts? Suppose they didn't make the GDP as high as the market is expecting, 7.4 or 7.5. Then do you think that's a dovish signal? That they don't give a very big growth signal and, even the inflation number is lower than 2, for instance. Say it's 1.9. Would those be treated as dovish?
So, Lata, very good questions. On the GDP front, I think what's more important is the future growth forecast, not for this year. This year, it's known that it will be above 7%. RBI is forward-looking. I'll be more interested to see the FY27 growth forecast, which is at 6.6%. Whether that is pushed up to 7% or that stays at 6.6%. And, if you see RBI's forecast carefully, the last time that they gave the quarterly forecast, from October, December onwards, all the forecasts were 6.5% or lower up to, July, April, June. So I want to see whether RBI is revising up that above 6.5 or keeping the forward-looking forecast at the same level. If the forward-looking forecast for FY27 remains at 6.6, that means, your growth is still below potential. And your inflation next year, again, not this year's, whether it comes down to 2% or not, that is well known, that it will come down from 2.6 towards 2% or 2.1. What is more interesting is whether the 4.5% inflation that they've shown for FY27, whether that comes down towards 4% or 4.2, then you'll get a feeling that RBI is being more dovish by saying that the future-looking growth is lower than this year and inflation also will be lower. What was your first question? I just forgot.
Okay, 30 seconds to go. Mr. Indranil Pan, are you expecting any change in stance? And what is your one-year ahead GDP and CPI number?
Okay, this year our headline GDP is 7.4. Next year it is 6.6. Inflation next year we are at 3.6%, and I think the RBI would reduce it to 4% or thereabout.
Okay.
And in terms of the stance, when you know as a central bank that you are almost near or absolutely at the end of the cycle, you can't change the stance from a neutral to an accommodative. So I'm absolutely ruling out a change in stance.
All right, moments to go. Thanks very much, all of you, for sharing what to expect. It is going to be a close call, so we're standing by to hear from the governor any moment now. As far as our experts are concerned, quite split again on the cut or the pause. But liquidity, that's something we're all going to be keenly watching out for, what the governor assures the market with, whether it is that 2 trillion number or lesser. And of course, the macro forecast will give us a sense of how dovish or not dovish the RBI wants to sound. We have the governor. Let's take a look.
In the last month of an eventful and a challenging 2025, we look back at the year so far with satisfaction. The economy witnessed robust growth and benign inflation. The banking system further consolidated, and the regulatory framework was refined to strengthen the financial system, enhance ease of doing business, and improve consumer protection. At the same time, we approach the new year with hope, vigor, and determination to further support the economy and accelerate progress. Since the October policy, the Indian economy has witnessed rapid disinflation, with inflation coming down to an unprecedentedly low level. For the first time since the adoption of flexible inflation targeting, average headline inflation for a quarter at 1.7% in Q2 this year breached the lower tolerance threshold of 2% of our inflation target. It dipped further to a mere 0.3% in October 2025. On the other hand, real GDP growth accelerated to 8.2% in Q2, buoyed by strong spending during the festive season, which was further facilitated by the rationalization of the GST rates. Inflation at a benign 2.2% and growth at 8% for the half year of for the first half of this year presents a rare Goldilocks period. Globally, contrary to earlier expectations, growth has been relatively strong. Evolving geopolitical and trade environments, however, continue to weigh on the outlook. Inflation paths remain divergent, with headline inflation remaining above target in most advanced economies. Pressures in most emerging markets, however, are contained, providing them the room for accommodative monetary policy. Conflicting pulls and pressures from AI-fueled optimism and concerns over high valuations are playing out in global equity markets. Divergence in monetary policy trajectory of central banks is adding to the uncertainty on the capital flows and yield spreads. I will now come to the major decisions of the MPC and the RBI. The MPC met on the 3rd, 4th, and 5th of December to deliberate and decide on the policy repo rate. After a detailed assessment of the evolving macroeconomic conditions and the outlook, the MPC voted unanimously to reduce the policy repo rate by 25 basis points to 5.25% with immediate effect. I repeat, the MPC voted unanimously to reduce the policy repo rate by 25 basis points to 5.25% with immediate effect. Consequently, the STF rate under the LAF shall stand adjusted to 5% and the MSF and bank rate to 5.5%. The MPC also decided to continue with the neutral stance. Moreover, in view of the evolving liquidity conditions and the outlook, the Reserve Bank has decided to conduct OMO purchases of government securities of 1 lakh crore rupees and a 3-year dollar-rupee buy-sell swap of $5 billion this month in December to inject further durable liquidity into the system. I shall now briefly set out the rationale for the decisions of the MPC. The MPC noted that the headline inflation has eased significantly and is likely to be softer than the earlier projections. This is primarily on account of the exceptionally benign food prices. Reflecting these favorable conditions, the projections for average headline inflation this year and Q1 next year have been further revised downwards. Core inflation, which had been rising steadily since Q1 last year, eased at the margin in Q2 this year and is expected to remain anchored in the period ahead. So both headline and core inflation are expected to be at or below the 4% mark during the first half of next year. In fact, the underlying inflation pressures are even lower as the impact of increased prices of precious metals in this inflation number is about 50 basis points. Growth, while remaining resilient, is expected to soften somewhat. Thus, the growth inflation balance, especially the benign inflation outlook on both headline and core, continues to provide the policy space to support the growth momentum. Accordingly, the MPC unanimously voted to reduce the policy repo rate by 25 basis points to 5.25%, and the MPC also decided to continue with the neutral stance. I will now spell out in some detail our assessment of growth and inflation. First of all, growth. Real GDP registered a 6-quarter high growth of 8.2%, as you are all aware, in Q2. This is underpinned by resilient domestic demand amidst global trade and policy uncertainties. On the supply side, real GVA expanded by 8.1%, aided by buoyant industrial and services sectors. Economic activity during the first half of the financial year benefited from income tax and GST rationalization, softer crude oil prices, front-loading of government capital expenditure, and facilitative monetary and financial conditions supported by benign inflation. High-frequency indicators suggest that domestic economic activity is holding up in Q3. There are some signs of weakness in few leading indicators. GST rationalization and festival-related spending supported domestic demand during October-November this year. Rural demand continues to be robust. Urban demand is recovering steadily. Investment activity remains healthy, with private investment gaining steam on the back of expansion in non-food bank credit and high capacity utilization, which is of the order of about 75%. Merchandise exports declined in October amid subdued external demand, accompanied by softer services exports. On the supply side, agricultural growth is supported by healthy kharif crop production, higher reservoir levels, and better rabi crop sowing. Manufacturing activity continues to improve, while the services sector is maintaining a steady pace. Looking ahead, domestic factors such as healthy agricultural prospects, continued impact of GST rationalization, benign inflation, healthy balance sheets of corporates and financial institutions, congenial monetary and financial conditions should continue to support economic activity. Continuing reform initiatives, moreover, would further facilitate growth. On the external front, services exports are likely to remain strong, while merchandise exports face some headwinds. External uncertainties continue to pose downside risks to the outlook, while speedy conclusion of various ongoing trade and investment negotiations which the government is undertaking with various countries and jurisdictions present upside potential. Taking all these factors into consideration, real GDP growth for this year is now projected at 7.3%. This is up by about 0.5% from our earlier projections. Q3 is projected at 7% and Q4 at 6.5%. Real GDP growth for Q1 next year is projected at 6.7% and Q2 next year at 6.8%. The risks are evenly balanced. I will now move to inflation. Headline CPI inflation declined to an all-time low in October 2025. The faster than anticipated decline in inflation was led by correction in food prices, contrary to the usual trend witnessed during the months of September and October. Core inflation CPI remained largely contained in September-October, despite continued price pressures exerted by precious metals. Excluding gold, core inflation moderated to 2.6% in October. Overall, the decline in inflation has become more generalized. Turning to the inflation outlook, food supply prospects have improved on the back of higher kharif production, healthy rabi sowing, adequate reservoir levels, and conducive soil moisture. Barring some metals, international commodity prices are likely to moderate going forward. Overall, inflation is likely to be softer than what was projected in October, mainly on account of the fall in food prices. Considering all these factors, CPI inflation for this year is now projected at 2%, again about 0.6% downwards from our earlier outlook. Q3 is at 0.6%, and Q4 moves up to 2.9%. CPI inflation for Q1 and Q2 next year are projected at 3.9 and 4% respectively. I may, however, add that the underlying inflation pressures are even lower, as the impact of increase in price of precious metals is about 50 basis points. The risks are evenly balanced. I will now draw your attention to the external sector. India's current account deficit moderated from 2.2% of GDP in Q2 last year to 1.3%. This is a decrease of about 0.9% in Q2 this year, on account of robust services exports, which continue to do well, and strong remittances. In October 2025, merchandise exports contracted YOY, whereas merchandise imports continued to increase for the second consecutive month. This resulted in widening of the trade deficit. Healthy services exports coupled with strong remittance receipts are, however, expected to keep our current account deficit for this year modest. On the external financing side, gross FDI to India increased at a robust pace during the first half of the year. Net FDI too increased significantly due to a decline in repatriation despite a rise in outward FDI. FPI to India recorded net outflows of $0.7 billion this year so far, basis figures till December 3, primarily due to outflows in the equity segment. Flows under ECB and non-resident deposit accounts moderated as compared to last year. As on November 28, 2025, India's forex reserves stood at a healthy $686 billion. This provides robust import cover of more than 11 months. Overall, India's external sector remains resilient. We are confident of meeting our external financing requirements comfortably. I will now talk about the liquidity and financial market conditions. System liquidity, as measured by the net position under the LAF, stood at an average surplus of 1.5 lakh crore rupees for the period since the MPC last met in October. Money market rates have remained largely aligned to the policy repo rate, which was 5.5%, amidst comfortable liquidity conditions. GSEC yields have remained range-bound since the last policy. In response to the cumulative 100 basis points cut in the policy repo rate, the weighted average lending rate of scheduled commercial banks declined by 69 basis points for fresh rupee loans during this period. In fact, the interest rate effect is even more at 78 basis points. The moderation in the weighted average lending rate of outstanding rupee loans has been to the extent of 63 basis points, which again is very satisfactory. The transmission has been very broad-based across sectors. On the deposit side, the weighted average domestic term deposit rate on fresh deposits has declined by 105 basis points, while that on outstanding deposits has softened by 32 basis points over the same period. I would like to take this opportunity to reiterate that we are committed to provide sufficient durable liquidity to the banking system. We continuously assess the durable liquidity requirements of the banking system, which happens due to changes in currency in circulation, forex operations, and reserves maintenance. Going forward too, we shall continue to do so. And after reviewing the liquidity situation and the outlook, as mentioned earlier, we have decided to conduct OMO purchases of government securities amounting to 1 lakh crore rupees in this month. Moreover, we will also be conducting a 3-year dollar-rupee buy-sell swaps this month. The details will be notified separately later today. We are hopeful that these measures will ensure adequate durable liquidity in the system and further facilitate monetary transmission. I would also like to clarify that injection or absorption of liquidity through purchase or sale of government securities under OMOs and that through operations under the LAF, which is VRR or VRRR, which are of short-term duration, serve very different purposes. While the objective of purchase and sale under OMO is to provide or absorb durable liquidity, the purpose, which is long-term, and the purpose of repo operations is to manage transient liquidity, which is of very short nature, so as to align the operating target, which for us is the weighted average call rate or the Walker, to the policy repo rate, which now stands reduced to 5.25%. So it is quite possible that on the one hand, we inject durable liquidity through purchase of government securities under OMO, while simultaneously withdrawing transient liquidity through a VRRR operation on the other hand. I would further like to reiterate that the primary instrument of monetary policy is the policy repo rate. It is expected that changes in the short-term interest rates will transmit to various long-term rates. At the same time, the primary purpose of OMOs is to provide sufficient liquidity and not to directly influence GSEC yields. I will now talk about financial stability. The system-level financial parameters related to capital adequacy, liquidity, asset quality, and profitability of the scheduled commercial banks continue to remain robust. Similarly, the system-level parameters of NBFCs too are sound. They have adequate capital position, and they have improved gross NPAs. The total flow of resources to the commercial sector has been strengthened. This is bolstered by greater non-bank intermediation. In the current financial year so far, the total flow of resources was more than 20 lakh crore rupees, precisely 20.1 lakh crore rupees. This is against 16.5 lakh crore rupees in the corresponding period of the previous year. Outstanding credit from bank and non-bank sources put together increased by 13% year-on-year. Bank credit too has seen an uptick. The latest number that we have is 11.4%. Sector-wise data reveals that growth was supported by sustained lending in retail and service sector segments. Industrial credit growth also firmed up, aided by buoyant credit flow to the MSMEs. Large industries too recorded an improvement in credit growth. Now, before I conclude, I have one additional measure to announce. You are all aware we have been focusing on improving customer services. We have taken a large number of measures in this regard. Re-KYC, financial inclusion, Aapki Punji, Aapka Adhikar campaigns are some of the initiatives taken in association with other stakeholders, including Government of India, Ministry of Finance. Earlier in the year, we reviewed our Citizens Charter too. We made applications for all our services online. We have the Prabha portal. Some 204 services are online over there. We are publishing the summary of our monthly disposal and pendency of various applications on the 1st of every month for the last 3-4 months now. And I'm happy to note that more than 99.8% of the applications are disposed of within the stipulated timelines given in the Citizens' Charter. However, in the recent past, as a result of inter alia receipt of a large number of grievances, pendency with the RBI Ombudsman has increased. I therefore exhort all regulated entities to kindly keep customers central in their policies and operations, improve customer service, and reduce grievances. Further, in this regard, we propose to hold a 2-month campaign from 1st January next year with an aim to resolve all grievances pending with the Ombudsman, with the RBI Ombudsman, for more than a month. I elicit the support of all regulated entities in this endeavor. Let me now conclude. Despite an unfavorable and challenging external environment, the Indian economy has shown remarkable resilience. It is poised to register high growth. The headroom provided by the inflation outlook has allowed us to remain growth supportive. We will continue to meet the productive requirements of the economy in a proactive manner while ensuring macroeconomic stability. Thank you, Namaskar, and Jai Hind.
Well, the governor has given everything that the market and the economy wanted. You've got your 25 bips rate cut and a little more than just the OMO. My sense is this is the first tranche of OMO. The governor has promised they're going to buy 1 trillion of bonds, 1 lakh crore of bonds. That liquidity will come in. Plus, there is this 5 billion swap that they're going to do, FX swap, which will also push in liquidity, $5 billion worth of liquidity into the system. We don't know the dates yet. That will be separately announced. But that explains why you have seen a good 5 basis point fall in the 10-year yield. The market's clearly celebrating. The rupee has been steady today. And the governor clearly indicated that they are watching every possible external data. That's about all he came to say in terms of the rupee. You know, what's the current account deficit? What is the deficit in October? What are the FPI and FDI flows? Usually so much details are not there on the external sector in the governor's speech. He just stopped short of saying something about the rupee, but otherwise he has given an extremely dovish signal. What I am waiting to guess, ask the market is whether they are smelling another rate cut, because there was no indication that this is the end of dovishness, nor was there any indication that there is a long rope left. After all, it is still neutral stance. With that, let me invite our guests. Do we have the biggest banker? Do we have State Bank with us? Okay, let me first invite Mr. Ashwini Tiwari. We also have economists and bond dealers with us. But Mr. Tiwari, good morning. What have you made? This rate cut is going to once again push back margins, or do you think that you know, it's going to be temporary? So one question on margins and another on how much might it push up credit growth?
So Lata, as you rightly said, there will be initial pressure on margins as it has been in the past, where the loan rates have transmitted quickly, but the deposit rates, especially the fixed deposit rates, correct only on maturity. So this process had been going on and would have finished in the next couple of months. But with this additional rate cut, this will push it back a little. So there will be some initial pressure. But as you rightly said, it will be temporary. And we hope to be back on track or back on even keel by the end of March, hopefully. However, this rate cut was, as you are aware, that even our house view was that maybe the rate may not be cut. But it has been cut. So overall, it's not going to make much difference. As far as credit growth is concerned, we have seen very strong credit growth on the retail side. The demand is already good. And this may push it even further. That it's like a trigger. So we don't expect too much credit growth because of this, because it's already strong for us.
Okay. Is there anything else from the policy that stands out for you?
Well, the announcements are not that significant. I mean, in terms of the RBI Ombudsman scheme, which was highlighted. We are already focused on resolving all the complaints thereon, and therefore that is a continuous endeavor. I would say that the liquidity measures which have been announced are very welcome, both the OMO and the buy-sell rupee swap, because they will provide durable liquidity. And there was some pressure in terms of the bond yields and the government security, especially the state development loans whose auctions will be coming up in the last quarter. And they were kind of pushing up the rates a little. So that will now correct, hopefully, because of all this. So in that sense, that is more significant to me, apart from the policy rate cut.
No, I was expecting you to say that, because if it continues with this kind of liquidity, then hopefully you all are going to have some mark-to-market gains on your bond book as well by the end of the quarter. Let me turn to the economists, sir. Kaushik, what is the first impression? Rate cut as you expected? Was the liquidity measure more than expected?
So Lata, we are very happy because we expected both to be announced, both liquidity and RBI rate cut. So we got the 25 rate cut, which I think was overdue. And on liquidity, we had done a calculation that by end of March 26, RBI would need to infuse 1.5 to 2 trillion INR worth of liquidity based on the currency circulation leakage, the FX intervention. So we had a calculation in our mind. As of today, RBI has announced 1.5 trillion. If you see the 1 lakh crore OMO and 5 billion swap, that's about 1.5 trillion liquidity infusion. My guess is you'll get more by the end of March 26, another 500 billion at least. It will go up to 2 trillion. And in FY27, I expect more OMO purchases to happen to take care of reserve money growth. So this is just the start of the cycle to ensure that your 1% of NDTL liquidity is maintained for a longish period, so that transmission of this rate cut and the cumulative total 125 basis points rate cut filters into the real economy with the slowest amount of lag that is possible.
Got it. Well, the more important question, Upasana Bharadwaj of Kotak Bank is also with us. Are you smelling another cut? Because the governors seem to sound very dovish about inflation in the first half of next year as well. They have brought down the forecasts considerably. Where did they start? 4.9. Now they believe both core and headline are going to be 4 or below 4. Are you smelling that he's giving himself room for another cut?
Lata, just to mention that we have been of the opinion that there was room for 25 to 50 basis of rate cut, including today's rate cut. So I still believe that inflation is benign, and the governor has reinforced that view. And I think there he himself has left room open for some kind of action going ahead. Of course, there are a lot of factors which have to be kept in mind. But at the moment, I would agree that all factors, growth, for example, has not been tweaked significantly. If at all, H1 is slightly lower going ahead. Inflation is comfortable, and re-emphasis of the fact that H1 is likely to remain very benign on inflation. All of that is suggestive of room for further action. But we'll have to weigh it as things go, because we need to also keep into account how the external sector is playing out. At the same time, on the liquidity front, also we were expecting about 1.5 lakh crore of infusion. And I think OMO plus the swaps has again come absolutely in line with what we were expecting. So this policy is a complete, I would say, in line with what we were expecting, and their guidance, I think, most importantly, has been in sync with what we were saying. So markets should be actually now happy with this.
Okay. If you all don't mind, may I take a quick poll on whether this ultra dovish inflation forecast should be interpreted as space for more? We will of course ask him in the press conference whether he sees more space to support growth. But right now, going by this dovish inflation forecast, Mr. Tiwari, would you say there's another cut? I can't hear Mr. Tiwari.
Sorry, I was muted. So I'm saying
cut.
pause.
Yeah, sorry, Mr. Tiwari.
I'm saying pause.
Mr. Tiwari, go ahead. Pause.
Yeah, I'm saying pause.
Yeah, Lata, I agree with Mr.
Shobhit Mehrota is...
I agree with Mr. Tiwari that there would be a pause on this, that they've done enough. 125 basis points. And the inflation that you're mentioning, they've just mentioned, if I'm not mistaken, up to July, September, right? They have not talked about October, December, or January, March.
Yeah, up to September. Up to September, they said 4%. Yeah.
Yeah, but then, Lata, October, December CPI forecast for RBI, not given in this one, but the previous one is at 5%. So keep that in mind. RBI is forward-looking, and therefore, if you have an average of 4.5% inflation for next year, which RBI has not talked about,
I get that.
then there's no question for more rate cuts.
I get that, Kaushik. You know, RBI always says that the MPR numbers are not sacrosanct. They become sacrosanct only when they come into the statement, at least from the way they behave. So what has come into the statement is 4%, so that still perhaps gives them space. But I just want a yes or a no, so there are 2 pause and 1 possible cut. Shobhit Mehrotra, you think the governor has given himself space for a cut?
Yes, Lata, I think so. I think it would depend on global factors, dollar rupee, and but scope for another cut is there.
All right. Mr. Tiwari, while you say on margins there will be limited impact, it's a temporary phenomena. On the lending front, with this kind of a cut, and now that we've seen the end, according to you, we're going to be in a pause cycle now. How much of a fillip do you think to sensitive sectors like home loans, etc., do you expect because of this? I mean, is there demand in the market for these 25 basis point rate cuts to really move the needle?
So the credit growth, as I mentioned, it was already strong for mortgages, for SME. Corporate was a little lower, as we have seen, and that was also picking up. Now, corporate demand doesn't really move on interest rate cuts like this, but I guess the retail lending, retail loans, and also home loans, there will be an added incentive for people to borrow now and kind of lock in rates, especially for the shorter term personal loans, where the rates are largely kind of fixed. So therefore, there could be some pickup in the retail loans, but the loan growth is already strong. So it may be a little bit more will be seen now. Some enthusiasm will come in.
All right, a bit more movement on the retail front. Upasna, you know, a quick word on, we didn't really hear the governor explicitly mention rupee, although he did allude to the fact that our forex reserves are strong, FDI inflows come in, FPI outflows, of course, he attributed to the outflows from the equity markets. You know, what are you going to want to hear from the governor specifically on the rupee that could comfort the markets, perhaps in the press conference?
I'm not too sure whether the governor is going to really emphasize too much on the situation that has recently happened. If we see the kind of move that has happened in rupee, with RBI's intervention being very limited in this round of depreciation, it clearly does suggest somewhere that this is something which the policymakers are okay with, and they are able to counter or cushion to an extent the impending troubles that we are having with the tariff-related issues. So I guess, you know, somewhere they will probably comfort to the extent only by saying that we are going to be there watching for any financial instability. But beyond that, difficult to say whether any levels or any such kind of a pace they can comment on.
Shobhit, quickly on the rupee, one, of course, there is the rate differential, although our guests have been arguing that's not the reason for, you know, the foreign inflows into India. It's more the growth story. But one, the rate cut has happened and these forex swaps have been announced. Do you expect in the short term some more pressure on the rupee on the back of this?
I think on a real effective exchange rate basis, we are significantly undervalued now. So it's a matter of time before things, you know, pivot in favor of rupee. I think market is waiting for some announcement on a trade deal to happen. So given that, you know, the way rupee has weakened in a short span of time, to my mind, you know, most of the weakness is behind. I think it's a matter of time, you know, we see rupee changes course.
Okay, I just wanted to ask Mr. Tiwari. Mr. Tiwari, you know, the governor made specific mention that while for new deposits, the yield has, the rates have fallen considerably. For outstanding term deposits, it's fallen by only 32 basis points. So it looks like you all will have space to improve margins, isn't it? It looks like the rate cuts have not been passed on for outstanding deposits. Many more are left to mature. Mr. Tiwari, I think you're on mute.
I'm so sorry. So what I said was that for us, the average deposit tenor is 2 to 3 years. So therefore, this deposit, as they mature, these deposits will be repriced. And that is still playing out. And that's why you see the system level 32 basis points. For us, it's a little bit more. And this latest cut again will take pushback to that extent a little bit more. But I guess in the next 1 year, we will have this repricing back again. And therefore, this will settle down once again.
Okay. But do you have the space to push down rates on new deposits also? We hear many bankers complaining that, there are small savings, there are other avenues. So even if the Reserve Bank goes on cutting, you can't pass on the lower deposit rates to new depositors.
No, newer depositors don't want to have lower rates, and it's a stated position that I think depositors also need to be taken care of. So we don't think we are going to reduce significantly, although our asset liability committee will meet and decide. But our stated view so far has been that we don't want to reduce rates, deposit rates. We want to give some benefits to the depositors. So we'll review it now and see how that goes forward. But so far, we haven't done reduction in comparison to the lending rate reduction which has happened.
Okay. So there is a margin pressure there. You're not able to cut deposits, but you will have to pass on lending because they are EBLR loans.
EBLR loans, correct. Correct.
Yeah. Okay. Oh, yeah. Let me get some more reactions from Shobit Mehrotra also. Shobit, what is the trajectory for the 10-year now? You said that you still expect some. There is scope for another rate cut. How do you see bond yields from now to, say, February, before the budget?
If you look at the valuation of 10-year bond, given that repo rate is now down to 5.25, long-term average spread for 10-year is typically around 100 basis points. So just on that basis, 6 quarters seems to be the fair valuation of the 10-year. Today we are at close to 6.5 or just under 6.5. So there is room for yields to come down. I think with OMOs happening, with global rate cycle continuing to ease into 2026. Some of the asset allocation changes which took place during this year, distorting the supply-demand balance for GSEC. If once these events are behind us, then we will see bond yields slowly coming down. Of course, OMOs will help a lot going into even Jan to March quarter. If the OMOs continue, bond yields will soften, and to my mind, a 6 quarter on a 10-year is a distinct possibility.
Mr. Ashwini Tiwari, just quickly to step away from the policy and some of the a whole barrage of RBI notifications last evening, including on the capital market exposure, etc., coming out, the final guidelines. Quickly before we let you go, any thoughts on that, sir? More or less similar to what was presented in the draft itself.
So I haven't really gone through all of them. I was traveling, but nevertheless, we were not expecting too many changes. We had given some suggestions from our side. So I have to see whether those have been incorporated. And now what we'll do is that we have been preparing for this, but now we will quickly start implementing all the policies and all the opportunities which are now provided by these circulars. And very shortly, we'll revert on exactly how do we plan to do this.
All right, we'll watch out for that one. Upasana, by the way, also to point out, while the decision on the rate cut was very unanimous, it is, on the stance, there is one MPC member, Professor Ram Singh, that dissented and wanted the stance to be changed to accommodative. Last time, remember, it was 2 MPC members. Now it's down to 1. Upasana, very quickly, perhaps too early still to talk about the next rate hike cycle after this pause. Just give us your scenario as to when you expect, if at all, that cut, how long a pause, and what's the next action there?
I think at this point, if at all there's a rate cut, it will be in February. And after that, I expect a prolonged pause. And that should be continuing through FY27. And it's only in early FY28, probably, because typically to ensure that the entire impact of monetary policy transmission has played out completely, we do need, 15 to 18 months at least. So that will have to happen through the course. So I do expect a FY27 pause and then probably, but much will depend on how, the newer GDP numbers, the new CPI readings, and in general, how the monsoons play out. And also, there are a lot of ifs and buts, of course. But at this point, given the level of information that we have, I think FY27 is a pause period.
Okay, and Kaushik, what is your reading on that? How long a pause are we in for from here on?
So I think, Ritu, this is the last rate cut that has happened, and I don't expect any more rate cuts. And in 2026, the full year, RBI will be on a pause. And probably in 2027, starting from April, June, you'll see RBI hiking interest rates. So we have a rate hike cycle penciled in for 2027, with this policy rate from 5.25 going up to 6% by end of 2027. But that's a long story, ahead. 2026, I don't expect any action from RBI. But Ritu and Lata, I don't know both of you whether you noticed or not something interesting. The liquidity that RBI has announced, this OMO of 1 trillion and 5 billion of FX swap, they mentioned that this is for this month. So what they're saying is they're giving 1.5 trillion in December itself. So there's a whole January to March quarter which is left. And I believe and I think RBI will give more liquidity infusion in January, March as well. So February policy, when RBI comes after the budget, I think you'll get more policy announcement on liquidity, OMO purchases, and FX swap if required. But I'll be, leaning more towards OMO purchases, and therefore the yields could be supported because RBI is giving 1.5 trillion in this month. If I'm not, mistaken, reading the RBI statement, it says that the liquidity is planned for this month. So that is only for December, and January, March could be more. And just to add to Shobit's point on the bond deals, he laid down the favorable factors. One more thing which I'll add is that if you have an announcement by a global, bond index provider that they're including India in the bond index, which we think can happen potentially with some lag, you'll see people taking a favorable position on India's bond deals. And, therefore, probably, even though RBI is at a pause kind of a scenario, the bond deals could get supported. But remember, we are getting into the budget period, 1st February. So the bond demand supply dynamic will make a lot of, difference. So over there, if RBI continues to buy bonds, even if the supply goes up, that could be supportive for the bond market. And RBI's inflation forecast and growth forecast for next year, they've not changed the full year forecast. I think they have not mentioned that. So if you take the full year forecast of 6.6% of FY27 and inflation forecast of 4.5%, I think, at 5.25 terminal repo rate, we are at a good place, and we don't need to do more than what RBI has done on rates. On liquidity, we can expect more action from RBI.
Okay. Well, thank you very much, Kaushik, Upasana, Mr. Tiwari, who I think has left, and Shobit Mehrotra. I would say this is a near Santa Claus policy coming from the Reserve Bank. The way in which the inflation forecasts are, it doesn't look like this is the last rate cut. There is a very good reason to believe that the governor is giving himself space. Whether he gives the cut or not, we do not know. But look at the way in which it is phrased. Specifically at each point, he says that excluding gold, the core inflation will moderate by a further 50 basis points. So the forecast for the next first quarter of next year has now come down to 3.9. They had begun at 4.9. And we get a fresh forecast for the second quarter of next year, which is 4%. And immediately following that is a statement, in fact, the underlying inflation pressures are even lower as the impact of increase in prices of precious metals is over 50 basis points, which means he says the actual inflation is 3.5. He's almost saying that. So one will have to say that he's, at least as far as the statement is concerned, giving a feeling that there is space for more cuts. So you have got the cut, you probably got a hint for another cut, and you have got, as Kaushik pointed out, near 2 trillion rupees coming in only in this month, or I'm sorry, 1.5 trillion coming in only for this month. So it's possible that more liquidity infusion will come because the governor made it very clear that we will ensure that credit is available, liquidity is available for the economy. So both on liquidity and on rates, I think this is an extremely benign policy. Maybe the other idea of benign is that growth for next year is not very high. It is at 6.7, 6.8, and for the fourth quarter 6.5. That also gives you room to say that, yeah, we are still below potential, we are a 7% economy, and he can make an excuse for a rate cut. This is almost everything that the market would wish for, a bond trader would wish for. It's a lot of goodies for the stock market as well, in terms of the lower cost of capital for both corporates and for retail borrowers. Consumer durables, real estate should all be celebrating. Yes, there is a bit of a negativity for the banks, but even they will make some money on the MTM gains they make on their bonds. So I would say this is a please-all policy coming in from the governor, the last policy for this calendar. From Ritu and myself, thank you very much for joining us in this special broadcast brought to you all the way from Mint Street. We will continue with our discussions at 12 p.m. when the governor will address the press.
Welcome to Trading Hour, live from the CNBC-TV18 Motilal Oswal studio. I'm Sonal Bhutra, with me, Mangalam Malu and Hormuz Patakia. Good morning, guys. The reaction that we're seeing right now in the markets is on the back of the RBI decision, a rate cut, dovish policy, growth forecast, a lot more to talk about, and the stocks are seeing a big surge from the lows of the day. Nifty up around 90 points. It is actually at the day's high. We have some gains coming in on the financials as well. So the Bank Nifty is up around 0.4% as we speak. Mid-caps, they have been under pressure, but there's a smart recovery on that one as well. We'll have to see whether that continues or not. For now, the Bank Nifty high by 0.4%, mid-caps absolutely flat with some negative bias, and we do have a lot of indices which are in focus. Nifty Realty, for instance, at the day's high, 0.9% higher there. A rate cut is positive for the space. IT continues its up move as well. So all these sectors will be on our radar. We'll discuss this and a lot more on the show. And also, guys, it's Friday.
Yes, it is Friday. There's so much to do. But, just the way the market is poised right now, the IT index doing extremely well. The Nifty is at the high point of trade. The Nifty Bank also jumping post the RBI policy. Does this mean that we go into the weekend with an even bigger move? Because yesterday the FI has added a lot more shorts in index futures. So from the series peak of 19% long, which again is net short, the FIs went only 12.5% long. So nearly 88% of the FI positions were on the short side, with the market now moving higher. Earlier we were seeing supply around the 26,100 mark. Now we're formidably above that. If it sustains, then those shorts might feel jittery. And then next week, we have another trigger as well. This one coming in from the Globe, which is that of the US Fed made. So if the US Fed also goes ahead and cuts rates, then you would see another impact of that on our markets. At the same time, it won't be limited just to the IT or the banking space. You would have the metals and all the other commodities be impacted by that as well, and that's something that we've been witnessing in all these metal names. The only flash that caught my attention while we were talking about the markets was the one that came from Indigo, saying that all flights from Delhi airport are cancelled till 4 p.m. today. And as a person who's been a victim of that this morning from Mumbai to Delhi, I have to say I'm glad that I didn't make that flight, because my return flight was at 4 p.m. itself. So Interglobe Aviation, that's something we will most definitely monitor. A Nifty stock down by almost 3% on account of the chaos that we're seeing at the airports on account of the operational challenges that the company is facing.
Indeed, and that has of course been the big talking point this week, hasn't it? And the index, though, just a few minutes earlier we were wondering, when the index was fluctuating between the highs and between positive and negative, what more does the market want? Well, they wanted a rate cut, you got the rate cut. Now it has moved to the highest point of the day. What's leading that recovery is Reliance. At one point of time, the Reliance Industries was the biggest contributor to the index downside and adding to the volatility that we had seen earlier in the day. And now Reliance has recovered from the day's low, is at the highest point of the day, still down 0.2%, but still at the highest point of the day, and that is contributing to the recovery that you're seeing. The broader market breadth, though, that will see some lines converging there as well in favor of the advances. The mid-cap index has moved into the green. The small-cap index still has at least around 70 stocks that are still in the red, although that line too is converging, is almost looking like a forcep now. If you take a look at that line, the 1,600 stocks still declining compared to 1,000 stocks that are advancing on the index. So the broader markets are looking to recover, but the index at the Nifty is at the highest point of the day. Taking the conversation on the markets forward with Jigar Mistry, the co-founder of Buoyant Capital, now joining in. Jigar, good morning. Thank you for joining in. The market was anticipating a rate cut. It has got one. Now it moves on to the next bit. There has been a flurry of IPOs that have come in. There is this next big trigger that happens next week, when a lot of these IPOs will see their lock-in period end. There are more IPOs that are opening next week as well. Do you believe that the market upside remains fairly capped, because there are still a lot of lingering moving parts that are still there when it comes to the trade deals, the IPOs and so on?
Yes, good morning, Hormuz. Thank you for inviting me to your show. If you break it down in two parts, one is sort of what RBI did, and the other part is with regards to what happens with the flows, then I would say, there are deeper issues that we need to examine. Now, what remains unsaid is the fact that RBI is almost net short about $60 to $65 billion on the NDF markets. In order to supplant the liquidity when that book comes onshore, you would have to deploy all the three variables at your hand, which is, supply OMOs, do variable rate swaps, and maybe cut CRR as well. That will be the last resort. So whereas this is in line, we must not forget the fact that your current account was at 1.3% this time around. Your BOP was negative, which is the first in many quarters and years. And therefore, it is sort of, whereas we are celebrating the fact that the rates have been cut, from a wider standpoint, the heavy hand of the RBI is not maybe lost on everybody else. Secondly, with regards to flows, in fact, the flurry of, follow-on offerings or IPOs is a relief, so to speak, because if you take CY 24 and 25 combined, then, all the so-called smart money has exited, or rather sold. Exited is the wrong word, maybe. FIs have sold about $38 billion, those 2 years combined. Companies have raised about $38 billion, and promoters through block deals and IPO OFS have sold about $44 billion. And the singular buyer for that has been $120 billion of domestic flows. Now, as we speak this, only 5.6% of the household savings is coming into equities. Most developed markets are upwards of 20%. US is upwards of 40%. And even if you pencil in, say, something like 10% of household saving coming to equities, in a couple of years, we are talking about $120, $150 billion sort of flows coming to equity markets in a singular year. If some of these IPOs manage to raise the money and suck some liquidity out, then that becomes a welcome relief rather than, something that evens out the scale. So we are happy that, something is coming and taking that liquidity out. Otherwise, the valuation of the entire market tends to get extremely elevated, as we saw in September 2024.
Jigar, if we can quickly tell us, before we talk about the visuals that we are getting, where Prime Minister Modi has reached the Rashtrapati Bhavan and Russian President Vladimir Putin is expected to arrive shortly. We'll keep discussing and understanding what's happening there. We do have Commerce Minister Piyush Goyal in the frame as well. And there are, of course, conversations going on the bilateral trade, a lot of other aspects of business as well. So we'll keep discussing that and getting you all the updates. Jigar, you spoke about how there are a lot of promoters selling stake, raising funds, a lot of PE exits as well. The other point that we have seen is that a lot of IPO proceeds, they're not going into capex, they're not going into corporate purposes, but it is largely offer for sale. Do you think that is something which is concerning?
Yes, Sonam. So if you take it to an extreme, right, you assume that the promoter shareholding is possibly at the lowest end of the spectrum that we have seen. And if incrementally the capex is not rising, as in the companies are not raising money to spend more, taken to an extreme, you're talking about a complete lack of entrepreneurs and an increasing spectrum of investors, which is not sort of good for the country over a longer period of time. And that is in consonance with the experience that we also have. The number of family offices in India is on the way up. And a large part of the second generation is keen on setting up family offices rather than, doing a lot of manufacturing activity themselves. Now, in light of this, you track it back and say that, the private capex intensity to GDP will not keep pace, because prior to, I would say, 2015, when IBC was not there, when the asset quality review was not as staunch, you had a lot of evergreening come through. And since then, companies are being taken away from promoters. A few of them had to go to jail. And therefore, I think that free optionality that many of them enjoyed is no longer really available at the moment. So I would say that, we would not budget the capex intensity to remain as high. And therefore, overall capex, governments or private corporations, including, will not see the same intensity. In absolute number terms, they are rising, no doubt, across all spectrums. But the percentage to GDP, we should budget slightly lower.
To play devil's advocate here, Jigar, the fact that a lot of the promoter stakes are coming down, it's also the sign of a market which is maturing, right? Because in India, so far, these companies have been promoter controlled. In the US, you have some of the biggest companies, the promoters, you don't even know who they are. The founders will hold more often than not less than 1% stakes. So it is truly a shareholder-driven organization out there. And with the kind of democratization that we're seeing in the stock markets, increased demand for paper, it's only fair that someone supplies. In this case, it's the promoters. In the IPO case, it is, the PE firms. The question then is growth and value. At what rate the companies are growing and at what rate and at what valuation is the paper offered, irrespective of who's offering the paper or where that money is going, right? So when you look at just the growth and the valuation metric, what is it that stands out in terms of an investable idea for you?
Absolutely, Mangalam. So you correctly pointed out that we are still at 49.6% promoter holding. In the West, those numbers are way lower, and therefore the trajectory we are all building through is, toward the lower end, or at least that number falling, and obviously professional investors and retail taking up a large part of that. In terms of the second part of your question as to where we see value, by September 2024, and before I go there, if you take the 5 or a 10-year rolling return average on EPS and share price growth across different indices, those almost always align. Large cap index, small cap indices, or companies with a long enough trading history. By September 2024, you had a wide dislocation emerge in the small cap space. And since that corrected, by February, we saw a reasonably good balance emerge. There was still the indices were still ahead of the earnings growth, but there was some semblance of equilibrium getting established. Since then, however, the earnings have not really kept pace, right? First quarter on a very arguably a lower base, April, May, June 24 was a peak election season. And on that base, if we grew at 7%, 2Q on paper in headline numbers looks better at about 13% EBITDA growth, but this is all driven by cyclicals, so metals and mining, oil and gas, and that is prompting consensus to now reevaluate its earnings forecasts. For the first time since COVID, we are seeing the start of the forecast at a much higher number compared to as the year progresses. So, Nifty estimates have been cut for the first time since 2021. And 26 and 27, both earnings are cut. Within the spectrum, I think mid-cap is holding out fairly well, but mid-cap is a wide gamut, right? The largest mid-cap is about 104,000 crores in market cap. The smallest mid-cap is around 34,000 crores. So you're arguably talking $4 to $12 billion in market cap. And it is still, in our opinion, a lot more sector specific. Within the sectors on offer within that space, something like a consumption discretionary, not staples, is appealing to us. Travel leisure is appealing to us. Cement we see as a consumption play. And pharmaceuticals for different reason is also very interesting.
Right. So just before we let you go, Jigar, is one final question from my end. You mentioned consumer discretionary. Does travel and tourism also feature in that? Because you're seeing what's happening right now with the aviation. You're seeing Indigo with brokerages being optimistic, being the largest airline, so on and so forth. But one systemic error and the entire system has collapsed. What do you do in, if you can comment specifically on Indigo and of course on the entire travel and tourism sector, if there are any proxies to play that, be it hotels, be it railways and so on?
Right, Roma. So stock specific is a bit of an issue to get into, but I would say, these issues create opportunities rather than, these are not systemic issues. Every now and again, given how fragile systems are, they will break down. But unless it points to something where, your demand is not picking up with supplies, etc., then that is a cause for concern. Other than that, we are in this space where, almost 1.7% of GDP, and we calculated some 6 lakh crores has moved into the hands of people, either via the states giving out more, for the lack of a better word, freebies, and government reducing income tax and GST. So that will eventually find its way into consumption, even if part of that is saved. And it's a great time to sort of accumulate some of those names.
All right, we take that point. Thank you so much, Jigar, for joining in and giving us your views on a whole host of ideas and perhaps saying that, some of these disruptions in the travel and tourism space currently could be opportunities to buy. We'll obviously monitor all of these situations as they go along. With that, we'll take a short break. On the other side, focus on the crypto market with Manisha Gupta. And as we do that, CNBC-TV18 is all set to turn 26. Tune in on Monday, the 8th of December, for our special coverage with some of the biggest news makers that you can think of. The top corporate leaders, policy makers, we got it all. speaking with a wide array of newsmakers as we ring in the 26th birthday of the channel that you love the most.
Welcome back, and as promised, shifting focus to the crypto space. Manisha is here with all the latest. Manisha.
Thank you so much for that, Hormuz. Well, I want to talk about the CoinDCX's 2025 annual report, which showcases on where cryptos, in what shape and form is it in the Indian markets right now. So let me tell you that the average investor in India currently, the people who are invested, that is, hold around 5 tokens versus 2 to 3 tokens. That was the case in 2022. So there are people actually increasing their holdings when it comes to crypto, and most of them are long-term holders there. Now, when you look at the overall holding portfolio in sense of cryptos, 43.3% in India who hold cryptos are into layer 1 assets. 26.5% just about hold Bitcoin because that is the blue chip to hold on to. And then there are still 11.8% people who are holding on to meme coins therein. The other thing to watch is that the Indian crypto portfolios are majorly centered around layer 1 networks, the DeFi or the decentralized finance assets. AI-driven tokens seem to have picked up quite strongly in this year, by the way. And then you have the layer 2 scaling plays as well, which have come into being right now. The other crypto trends that markets show us is that the non-metro cities also now account for almost 40% of Indian crypto users. So while Delhi, Bombay, Calcutta continue to do quite well, it is the other cities like Lucknow, Pune, Jaipur, Patna, Bhopal, Chandigarh, Ludhiana, which seem to be becoming the top trading centers when it comes to crypto. The other thing important is about that the average age of people which are investing in crypto also has increased from 25 to 32. Women investors almost have doubled when you look at the last 1 year, and the Kolkata, Pune seem to be leading that change. The other places where women seem to be doing quite well, pardon me, is Bitcoin, Ether, Shiba, Dogecoin. This is what women investors in India are buying right now. Decentraland, Avalanche are some of the cryptos and tokens which have done quite well for themselves in the last 1 year, and this is where the holdings seem to be increasing.
That's so interesting. So much interest coming in and different kinds of cryptocurrency. Thank you so much, Manisha, for joining us with all those updates. With that, let's move on. SKF India, that is the stock on our radar. It has demerged its industrial business, and the company today has listed on the exchanges at 2,630 rupees per share. Mr. Mukund Vasudevan, the President, India and Southeast Asia and Managing Director, SKF India Industrials, joining us now to take a few questions. Mr. Vasudevan, good morning. Thank you so much for joining in. If you can explain to us what is the contribution overall coming in from the industrial business, and what are the growth prospects from here on now that you have demerged? You'll have individual targets as well.
Great to be here. Thank you. So this is a very exciting, momentous occasion for SKF India Industrial. We as a company have been here for over 100 years in India, listed over 6 decades ago as SKF India. And today is the next chapter where we are separating out SKF India Industrial from SKF India Automotive. And, the main logic of this is that this will provide a lot more focus for our industrial customers. India is going through a massive infrastructure, industrial growth, manufacturing driven, and this will enable us to focus better there. The contribution in terms of revenue is roughly 53% from industrial and 47% from automotive. So this is a 1-to-1 split as far as stock is concerned. But with the renewed focus on industrial, we see the growth prospects of both these entities being tremendous.
Right. So the contribution is 53% on the top line. Mr. Vasudevan, if you could give us a sense on what the contribution on the bottom line is, how the return ratios of both these businesses are, so that the street can make a better judgment of the valuations.
Yeah, it's roughly similar, right? Both these are in the mid-teens in terms of EBITDA, and we expect that to improve with the split. We expect both these entities to improve margin. I'll speak on behalf of SKF India Industrial. And SKF India Industrial, we see this starting from around the mid-teens. We're around 13% right now, growing to 17, 19 in the next 3 to 4 years. Might be an initial period where because of the renewed investments we are making in SKF India Industrial, we may see a flattening out of margins, but we see that improving after the investments we reap the benefits from these investments.
So by when do you start reaping the benefits of these investments, Mr. Vasudevan?
So probably in the next 2 to 3 years. So the investments we're making over the next 3 years are in the tune of around 800 to 950 crores. And we expect the benefits to start coming in 3 years. in 3 years, we should start seeing margins significantly improve.
Okay, from 13% to 17% is the target in next 3 years on the margins.
Yeah.
Okay. Mr. Vasudevan, when you speak about the capex schedule, 800 to 950 crore rupees planned till 530, in that, when will we see the Pune plant coming on stream? What is the initial capacity utilization you are expecting there? And how much of capex will go to just that plant?
Roughly, to answer your last question, roughly 70% of the capex, which we're talking about, is going to be for the plant, 70 to 75%. The remaining is just capacity expansion as the demand in India and neighboring countries grows. As the demand is growing, we need more capacity. So the part of it is to satisfy growing demand from industrialization in the country. Part of it is just the infrastructure for the new plant. But the new plant, just as if I may add to it, is going to be a state-of-the-art plant which has the latest in terms of automation, flexible manufacturing line, which is the need for industrial. Unlike automotive, which has long batches and very steady production for similar bearings, industrial has a variety of bearings because we serve so many different sectors. So flexible manufacturing lines, state-of-the-art AI, ML technology applied to it, digitization, which will make us much more efficient. So we expect a lot more efficient operations from this new plant.
Mr. Vasudevan,
the plant will come in 2020.
Yeah, Mr. Vasudevan, we'd request you to hold on for just a short bit. We're getting visuals live coming in from the Rashtrapati Bhavan, where the Russian Premier Vladimir Putin is meeting with Prime Minister Modi. We also have the President of India, Draupadi Murmu. They're walking towards the Rashtrapati Bhavan right now, and we'll obviously keep getting all the details coming in from what the bilateral meetings would entail. Obviously, trade would be a large part of that, and obviously alongside that, we will be speaking about the Indo-Russian friendship as well going forward. So those are some visuals coming in. The Russian President, we have Vladimir Putin, along with Narendra Modi and the Indian President.
And that has been the big talking point, other than what we have been already witnessing, right? The two-day visit of the Russian president, and there have been lots of conversations with regards to trade, with regards to technology, and more importantly, defense. That has been the big talking point with the Indo-Russian relations, and both the leaders have continued to maintain that those relations have stood the test of time, and there are likely to be some major announcements that could be made when both the leaders address the media later in the afternoon. And you can see visuals right now from the Rashtrapati Bhavan there.
Okay, all right. The national anthem of both the nations, and that is the ceremonial reception of Russian President Vladimir Putin. Both of them will, of course, address business leaders as well today. There will be a conversation around policy, around bilateral trade. And as Hormuz mentioned a while back, defense will continue to be the big talking point between the two nations. We'll keep getting you updates on this, the meeting, and the outcome of these meetings as well. For now, we'll do one thing. We will get back
we do
to
have Mr.
yes,
Vasudevan with us.
Mr. Vasudevan, thank you so much for patiently waiting by and being here. We were talking about your capex plans, 850 to 900 crore rupees, the Pune plant which would come on stream. If you can give us a sense of the asset turn that you'll see on this capex, and since 70% of it is going to the Pune plant, by when will that commence?
So the return on invested capital we're seeing for the Pune plant will be in the range of 15% initially. And then as the capex cycle starts winding down and we start reaping the benefit, that should go up to 20%. In terms of utilization of the plant, this will be a phased, in terms of manufacturing lines, this will be a phased investment. So we'll keep adding investment as the demand grows. With the infrastructure may come up in terms of the building, and the balance of plant may come up initially. And then the lines will be added initially to just manage existing capacity. And as we meet more demand, as the growth continues in industrial, we will keep adding. So we expect in the range of 70% utilization right from the get-go.
Right. But, if you could give us a little more clarity on how should one look at investment in a business like yours. If I'm investing, say, 800 to 950 odd crores, what would that mean in terms of revenue, the asset turns, as Sonal asked you about that? And secondly, you've given us a sense on how the margins will improve for the company. You'll go to late teens from early teens right now. Your ROCE will improve as well. What about your revenue? If you could give us a sense on what your current order book is, what kind of order inflows are you targeting, and what should a sustainable revenue run rate look like for a company like yours?
Yeah, so we have been delivering over the last 5-6 years a steady growth of around 8 to 9%, and we expect that to continue and if not accelerate. With the increased investments, I think once the investment starts coming up, we should see more than that. We should see low double-digit growth come up. Sorry, I'm getting a disturbance on the. Can you hear me?
Yeah, we can hear you. Please go ahead.
Yeah, sorry. So you should start seeing low double-digit growth come up once the investment starts paying off. Typically, our order book, we don't, because our large portion of our business is end-user focused, so it's consumables which are used in factories, in mining operations, in windmills, railways, etc., agricultural equipment. It's not an order book we talk about, but typically we have an order book which is anywhere from 3 to 6 months ahead, where we have a full order book and we fulfill that. Projects tend to be around 30 to 40% of what we do. And even in the projects, in some of our big sectors, like wind, like railways, there is a significant order book which we have, which will ensure this growth of around 8 to 9%, increasing in the next few years to around 10 to 12%.
Mr. Vasudevan, thank you so much for sparing time and joining us today. Wish you good luck for the rest of the year and for your capex plans as well. Take a short break, continuing our conversation on the markets on the other side with the F&O updates and a lot more. Stay tuned.
Significant recovery in the mid-cap index. It is up 135 points as we speak. What's happening in the F&O corner? Let's get in Mangalam with all the latest trends from the F&O space. Mangalam.
It's all happening. You know, the frontline indices are all doing extremely well. When we started the show, the Nifty was the high point of trade, and now as we speak, it's at the higher point of today's trading session so far. So 26,150 is what we had hit earlier, about a few minutes ago. We have the Nifty Bank as well, which is up almost 0.5%, led by the Nifty IT index, which has been doing well all through the last 2 or 3 trading sessions. Now, the trigger shifts post the RBI policy to the next thing, which is the US Fed meet. Remember, the US Fed is expected to cut rates. The street is expecting an 89 to 90% probability of a rate cut before the end of this calendar year itself. And if that were to happen and the market sustains at these levels, that provides perfect ammunition for the year-end blast, as we call it, when it comes to the Santa rally, because the FI, the positioning over the last few trading sessions has been coming down from 19% to 16%, 14%, all the way down to 12.5% in yesterday's session. You don't want a lot of those FIs being caught on the short side, on the wrong side, if the market continues to move higher, because if it does, then there is a melt up which is likely. How exactly does that melt up play out, or will that play out or not? The answer to that will lie in 2 data points. One, how the mid-cap index performs, because usually that has a higher delta in terms of a change to the large cap. And the second part, how the advanced decline performs as well. Over the last few trading sessions, even as the Nifty has been consolidating, we've seen more stocks declining than the number of stocks which are advancing, and that continues even today. About 1,600 stocks in the red for about 1,100 stocks in the green. So amidst all of this, what is it that the option writers are betting on? Well, they are expecting the support to play out around that 25,900 to 950. So we have the 26,000 put fairly well written, the 26,100 put as well equally well written. So the support has moved higher by about 50-60 points over the last 2 trading sessions. But on the way up, we're still not out of the woods, because the call writers are still active at 26,100 and 26,200. 26,200 call has a premium for almost 68 rupees. 26,100 call also comes up for you as a premium upwards of 100 rupees. So around 26,200 to 26,250 is where the resistance is likely, which has seen an increase in the range for the market. From yesterday to today, there has been an increase of about 80 to 90 points in the range, the 200-point range that the Nifty is in, but that's something we will monitor. The other couple of things that we'll keep an eye out on are a few stocks which are seeing a lot of shorts being added. So CAMS is one of them, Keynes Tech is the other one, and we have Interglobe Aviation, understandably. So all these stocks are fairly well sold or short sold as we speak from the F&O standpoint.
CAMS trading adjusted for its stock split today is of 3.5% lower on that stock. And of course, Keynes Technologies, the big talking point and our big story as well, coming right up on the other side of this break. Stay tuned. Welcome back. Still 100 points higher on the index, but the big story is an underperforming stock. The fall in Kaynes Technologies now for the third straight session. Report from Kotak Institutional Equities yesterday citing a lack of disclosures and a lot more. Upasana is joining in with more on this. Upasana, first tell us more about what the report had to say and the impact of that.
Well, the stock is facing a balance sheet and cash flow concerns with a question mark on the company's revenue growth, excluding its smart meter business. Now, they are doing such a large capex, but have a negative cash flows is what the street is worried about. Now, let us look at the key concerns flagged off by Kotak in its report, in which the company says that there has been a significant revenue and profit contribution from company's smart meter business, which is questionable. Next up is the ambiguous accounting treatment of the company's goodwill and reserve adjustment under various acquisitions done by the company in the past 1 year. And also, when we look at the intangible assets, there has been a sharp addition here for the technical know-how. If we look at the total percentage of intangible asset as of revenue, it has gone up from 0.8% in FY24 to as high as 6.5% in FY25. Now coming to the cash conversion cycle, there has been a 22-day increase here, and even high capex has led to a negative FCF. Now, next up, we are focusing on the capital allocation strategy, on which Kotak says that the company's focus on capital allocation strategy and even high capex requirement and even pending government grants is the thing on question mark. And lastly, the complex accounting measures followed in terms of cash capex compared to the asset additions is also under a big question mark. So all in all, these are the key questions highlighted and raised by Kotak in its report.
Okay, all right. Thank you so much for summarizing that for us, Upasana. But Mangnam, let's break it down further, number by number. What exactly is that report indicating?
You know, it's a very detailed account of the reconciliation of all these expenses that the company's been making, acquisitions that the company's been making. So on all the things that Upasana pointed out, you know, I was just looking at it, significant revenue profit contribution from the smart metering business, which is Iskraemeco. Out here, they've said that the full year's revenue of Iskraemeco, 620 crores and nearly 49 crore profit has accrued in the second half of FY25. Iskraemeco actually reported a full year net profit of about 60 lakh rupees. So what does this imply? That in the second half, they did 28% net margin, which is unusually high for a smart metering business. And the second part is that if the second half did a profit of almost 49 crores and the full year profit was just about 60 lakh, so that means the first half was a loss of 48 crores. Which is, inconsistent because FY24 was profitable and there was no evident cross driver in the first half for such a swing. The second part, ambiguous accounting treatment of goodwill and reserve adjustments under acquisitions. They acquired a couple of companies, Iskraemeco and Sensonic, for about 883 million rupees. And there was a goodwill of almost 114 crore on this. But that wasn't reflected in their balance sheet. In fact, what it did was the actual goodwill adjustment was a negative 10 million rupees because they saw an increase in general reserves and at the same time adjusted that by increasing addition into intangibles by about 180 crore rupees for technical know-how. So that is what the goodwill accounting was. And speaking about the technical know-how, you know, there has been inconsistency in related party transactions as well. The company that they bought, Iskraemeco, so Kotak went ahead and looked at their reports as well. Purchases of 180 crore from Kaynes, which was reflected in Iskraemeco's numbers, were not actually reflected or disclosed in Kaynes related party disclosures. Year-end payables to Kaynes Technologies of about 320 crores or 180 crores to Kaynes Electronics and some receivables of 190 crores from Kaynes Technologies too, not reflected in all the other related party disclosures for Kaynes Tech, which is something that Kotak found from Iskraemeco's receivables and Iskraemeco's numbers. And the 22-day increase in cash conversion cycle also on account of something like this as well. And the final one that was very interesting was the FY25 cash flow statement indicates a purchase of 950 crore worth fixed assets. But when they look at the balance sheet, look at the property, plant equipment, all the increase in the assets, that does not reconcile with that. In fact, you know, the additions to the balance sheets account for just about 7.7 billion as against the outflow of about 9.5 billion. So detailed reconciliation and accounting, mismatches that Kotak has found, and that's something that they've highlighted as well.
That is what has transpired with Kaynes Technologies. visuals on your screen. Vladimir Putin, the Russian president, headed towards Rajghat, and that was part of his program earlier in the day. He also met Prime Minister Modi and President Draupadi Murmu at the Rashtrapati Bhavan, where he was accorded a ceremonial reception, and now he's headed towards the Rajghat. So that is a part of his program. And then, of course, we'll head more to hear more from both the leaders, from Prime Minister Modi and from President Putin later in the afternoon with regards to the decisions they have made at the Indo-Russian summit, for which President Putin has landed in India. He landed last evening, and therefore he will be here for the course of the day, where he'll be also addressing the business leaders as well. So that is the visuals coming in from Rajghat. But since we were on the subject of Kaynes Technologies, we were talking about it in the morning as well on Bazaar. The stock in the last 25 sessions has had, before today's session, it had gained only in 5 of them. So that is what the kind of underperformance that you have seen for Kaynes. We spoke to the management earlier in the day. Listen to what they had to say.
It is only in the standalone we have missed, which we clearly clarified.
Okay.
Notes to accounts, it is missing. That's all. That is also in one company. But if you see the P&L as well as in the balance sheet, it is all appearing. There is no inconsistency, whatever he is saying. However, we agree that there is a miss there, and which we will take corrective action. See, this is an age receivable in Iskrameco books. Whatever, when we acquired itself, it was there, which we will be reconciling and closing it.
Okay. By when, sir?
By this financial year end, we should be able to close it. See, this is a capital-intensive business. However, we are working, and by the financial year end, we will bring it to sub-90 days cash cycle. So with that, it will become positive. And we are having plans put in place to achieve this.
By when, sir, will it come down to less than 90 days?
By this year end.
And you turn free cash flow positive, operating cash flow positive?
Yes.
By when?
By this March, it will be OCF positive.
All right, so that's what the management had to say, but there has been no respite on the stock despite the clarifications coming in from the management on the exchanges as well as to us here on CNBC-TV18 as well. In fact, the stock is currently at the low point of trade, and a large part of that could be attributed because of the things that I'm just noticing. If you look at the futures plate right now, there's been a sharp increase in the open interest, telling you that there is a fair amount of short build-up that we're seeing. Nearly 11-12% increase over the total open interest that there was yesterday. 4.5 lakh new shares added on the short side here, understandably, and the open interest is now at 76% of the market-wide position limit. So a few more lakh shares get added and the stock goes into F&O ban. So that's something we will monitor. And if you look at the promoter's stake over the last few years as well, the company has been raising funds, tapping the equity markets for capex that they've been speaking about. The promoter's stake has come down from 63% to 53%. And finally, if you look at the ownership on the stock as well, the FIs own about 11% stake, the DIIs own about 24% stake. So maybe institutional flows as well impacting the stock right now. Maybe, some of the institutions will be very interesting to see how the bulk deal data plays out over the next few days.
Okay, all right. A big downtick on the stock, and that continues, right? Despite, as Mangalam said, despite the clarifications that have come by from the management to the exchanges, and also on CNBC-TV18, the line said inadvertently they could not disclose certain things. But I think that's not how accounting works, because there are rules which are set in place. So maybe that is something that the street is not liking. There cannot be inadvertent errors when it comes to reporting or accounting for some of the transactions that the company said they were not able to report. But we'll do one thing. We'll slip into a short break. When we come back, we'll get you more on markets on the other side and a lot more. Welcome back. You're still tuned into Trading Hour. Interglobe Aviation, that continues to be on our radar from a stock perspective, and also what's happening with the consumers and the travelers. Sudarshan is joining us now with what brokerages are making of this big operational issues that we've been seeing at the airline. Sudarshan.
So first, talking about the news, stock prices under pressure consecutively for fourth or fifth straight day, and today also the stock is down 2%, more than 2% basically, and the reason is that there is no respite on the cancellation front. Today also at majority of the airports, you talk about Delhi, Bengaluru, Mumbai, at majority of the airports, Indigo has decided to cancel all the flights. And if you have booked Indigo flights over next few days, or you are planning to book, there is the only bad news, because from December 8, even company is planning to reduce the number of flights. What about the restoration of operations? That we are expecting only by Feb 10, because company has sought certain exemptions from FDTL norms till Feb 10th, and company has confirmed that the entire restoration will be done by Feb 10. Now, why these issues have come up? So basically, company has talked about two issues. One, FDTL, and second is because of winter operational constraints. These two have led to a sharp spike in the cancellation. And one thing they have mentioned, that because of the change in FDTL norms effective November 1, increase in the requirement of the crew has risen sharply, and it was more than what company anticipated. Now, over the last few days, some of the brokerages have written notes on this. Most of them maintain positive stance. Citi has maintained their positive stance, even maintained target price, but MS has cut target price to less than 6,600. They have gone ahead and cut EPS for FY27-28 by almost 20% each. And on the yield front, they are expecting in Q3 yield may rise, but in Q4 yield may fall on the high base. So we'll have to see how the next few days pan out. But as far as cancellations are concerned, it's continue to be there at majority of the airports.
All right, confusion continues at majority of the airports. And Sudarshan, you said what the brokerages are saying and what the news is saying. I actually was at the airport this morning to tell you that, there is a fair amount of chaos. It's not just about people wanting to travel, that's just one mode. The point is that there is so much uncertainty around it. Getting to the airport, if you're supposed to go for a family emergency, medical emergency, or, something related to, work, etc. as well, and then you have to make alternate arrangements for stay, all of that towards the end becomes extremely expensive. And for Indigo, which controls market share or market leadership, the alternates become extremely expensive. This morning, the Air India flight was 55,000 rupees from Bombay to Delhi.
Yep, my friend was just telling me about the fact that her spouse was returning home to Bangalore. As well, the Air India flight was 50,000 rupees. So it's showing the kind of impact that the entire aviation sector currently facing a bit of a breakdown right now, considering all the flights being cancelled. We just heard from the Chennai airport as well, all the flights cancelled until 6 p.m. this evening. Take a leave on this edition of Trading Hour from Sonal Mangalam and me. Thank you for watching. But before we go, CNBC-TV18 is all set to turn 26. You can tune in on Monday, the 8th of December, for our special coverage with some of the biggest news makers, from top corporate leaders to policy makers. We'll be speaking with a wide array of them as we ring in the 26th birthday of India's premier business channel.
Stocks react positively to RBI's dovish policy and growth forecast, with financials seeing a smart uptick following RBI governor's speech. Realty and IT also see an uptick, while industrials, energy and healthcare drag. RBI Governor Sanjay Malhotra points to benign inflation and a likely softening of growth momentum as a rationale for a 25 basis point rate cut. This even as the central bank continues with its neutral stance. The Indian Central Bank has raised its FY26 growth forecast by a hefty 50 basis points to 7.3%. It also sees stronger growth of 6.7% in the first 2 quarters of FY27, but expects inflation to inch up towards 4% by the second quarter next year. Standard & Poor's has upgraded the credit rating of Reliance Industries to A- from BBB+, 2 notches above India's sovereign rating. The rating agency points to increasing cash flows from non-cyclical businesses for this action. Indigo seeks exemptions from flight duty time limitation rules to normalize operations by February 10th. The airline will reduce flights from December 8th, even as it continues with massive flight cancellations in the interim. Hello and welcome to Halftime Report, live from the CNBC-TV18 Motilal Oswal studio. I'm Ritu Singh. The big story we're covering at the moment, the Reserve Bank of India's monetary policy, which has been announced, and the top brass at the RBI, the governor and the deputy governors, will be addressing a press conference very shortly. Remember, there was a 25 basis point rate cut from the MPC, while the stance was retained at neutral. As expected, the growth forecast was revised upwards by 50 basis points to about 7.3% for this year. And for next year, it is seen at 6.7% for the first quarter and 6.8% for the next. As far as inflation is concerned, there again, the forecast, as expected, was revised downwards to 2% for the fiscal. Let's take a look at that press conference.
Thank you, sir. I would request Ms. Lata Venkatesh from CNBC-TV18 to please ask the first question. Over to you.
Thank you, Mr. Bridra.
You are the opening batswoman.
Opening batter, they have made it these days. Governor, let me begin with the inflation forecast, since you all have brought it down from the earlier two policies ago. You had forecast Q1 next year at 4.9. Now with this, the forecast is 3.9, and then 4 for the next quarter. Also, you're saying that if you remove gold, it would be 50 basis lower. Would you say that gives the MPC further space to support growth? And while at it, if you can also give us your comment on the currency, do you think it was undervalued? What is the RBI's approach to the currency?
So 2 questions. Whether there is more space going forward. We are at neutral today. We believe that, as you have also alluded and as I mentioned in my speech and in my assessment, the important thing is that inflation is very benign. It has been benign, 3.5%, if you exclude food, which has been volatile. Last 2 years, it has been 3.5%. And going forward too, if you exclude gold and precious metals, silver, our expectation is that it is going to be very benign. Now, whether that opens up a policy for further rate cuts, that will be, getting into speculation. I don't want to get, into that question. For me, the more important thing now is that having reduced the policy repo rate by further 25 basis points, we have to now, concentrate on the monetary policy transmission. And considering the fact, that inflation is going to be very benign, I think let it first transmit into the real economy, and then we'll see, as to how inflation behaves, how the growth inflation dynamics behave, and we take it policy by policy. Second question on the rupee. See, our stated policy always has been that we allow the markets to determine. We don't target, any price levels or any bands. We allow the markets to determine the prices. We believe that the markets, in the long run, especially, are very efficient. It's a very deep market.
We saw this earlier in February. The rupee to dollar had climbed up to almost 88, and within a period of 3 months, it came back to below 84. So these fluctuations, this volatility does happen, can happen. Our effort has been always to reduce any abnormal or excessive volatility, and that is what we will continue to endeavor. Our external sector, as I also mentioned in my statement, is very strong going forward. We do believe that we are having sufficient reserves. Current account is very manageable at about 1% or so. And given the strong fundamentals of our country, we should get good capital flows as well going forward. So I think we are in a very comfortable situation insofar as the external sector position is concerned. Thank you, sir. We'll take some more questions from our left side before we move here. So for the next question, I will ask Mr. Mayur Shetty from Times of India. Mayur, please.
Thank you, sir. Thank you, Governor. Governor, historically, the current account deficit was of around 2% was seen to be manageable because we have this capital flows. But now, with this flows coming down, is there a change in what you see as manageable? Is it around the present level? And second part of the question was, you cut the rate despite the recent volatility in the rupee, and many forecasters had revised their expectation. So, does this is it reflecting your comfort with the situation in the forex market?
Yeah, see, as mentioned even earlier in one of my post MPC conferences, we are mostly the MPC is mostly driven by growth inflation dynamics, especially, given the fact that ours is a domestic demand-driven economy. I mean, our dependence on the external sector, it's a small percentage of our total GDP. So we continue to do so, and that's why while these factors are, of course, considered by the MPC, but given the growth inflation dynamics, this decision was taken. Your first question, I think, I don't have more to add to what I told in response to the first question by Lata, which is that we are at a very comfortable. I do not expect the CAD, to be as high as 2%. Some of the numbers, that you are giving out. And so on the external sector side, we are very comfortably positioned. Thank you, sir. I will now request Ankur Mishra of ET Now to ask the next question. Ankur, please.
Thank you so much for the opportunity. Good afternoon, Governor. I want to draw your attention towards the growth revision this time. You have revised it upwards. While surprises are always welcome, but last 2 quarters, the growth has been much more than what RBI has forecasted. So therefore, I want to understand what has been reasons for that. And more importantly, last time when I asked you a question about the aspiration, you mentioned 7% plus should be the aspiration. Now that you have forecasted more than 7%, 7.3% now, do you think the aspiration should move towards 8%?
So, you could have also have said 9%. 7 plus can mean, anything, right? So, that is the baseline. When I said 7, that is really the baseline, because these are difficult things to actually estimate as to what, our potential GDP is. Of course, aspirations can be, very high. And so, having delivered, of course, 8% now on an average last 3-4 years, certainly this is certainly, well within our reach, and we should certainly, aspire for anything which is in that region.
Yeah.
Right?
Thank you, sir. I now request Anup Roy of Bloomberg to ask his question. Anup, please.
Thank you for the opportunity, sir. Sir, the markets were expecting some kind of rupee measures in this policy. And in October, we have seen RBI was probably intervening heavily, but it stopped intervening and then rupee rapidly moved to 90. So are you comfortable with this kind of level for rupee?
I don't have anything more to add than, what I think you people don't have more questions.
Yeah. Sir, I will then ask the
same question,
Sir, I will then ask that how does this dollar rupee swaps help in this context, because it is not infusing.
It's more of a liquidity measure.
Yep.
It's a liquidity measure. It's not to support the rupee. And your first question I also already answered, that we don't target any level, whether it is whatever levels are there. So we don't target any level, and we only allow for we just let the rupee find its correct position, correct level and band, just for an orderly movement.
Thank you, sir.
Thank you, sir. I now request Hamsini Karthik from Money Control to ask a question. Hamsini, please.
Thank you, sir. Good afternoon. What would your message to banks be in terms of credit growth? Usually the barometer is that credit growth is 2x GDP. That's the ballpark with which we normally work, right? But it's now, GDP is ballpark of 8%, credit growth is just around 11%. And what is that number? You've done a lot of front loading now, 125 basis points reduction in repo. Transmission has also been quite healthy, healthier than what we've seen in the last cycle. What would your message to banks be, and what is that magic number in terms of credit growth that you would like to see will bring a smile to your face?
I think I don't know where you get the 2x figure of credit to GDP growth rate. Last 10 years it's been more or less 1x. More or less it's been 1x, and we have done well. The growth rates are also, real growth rates are about 7%. When one talks about 2x, those are the times before 2011, 12, before earlier, we used to have very high credit growth rates. And you did see what impact, it had on bank asset quality. So I don't think 2x is the kind of number that we are looking at. We don't target any particular growth rate for the economy. Let's keep in mind that these things are mostly dependent on the structure of the economy. The monetary policy has a role only, in the short term, not in the long run. We can't accelerate or decelerate the rate of growth of the economy and at the same time of credit.
Thank you, sir.
Thank you, sir. We'll now take a few questions from this side. I'll request Sangeeta Mehta from Economic Times to ask a question.
Thank you, sir. Sir, in the policy statement, you have said that growth is expected to soften somewhat. Could you elaborate why do you expect growth to soften? And you've already answered the aspiration question, so that was my other question.
See, we are going by whatever are the high-frequency indicators that we track. So it's basis that we feel that the growth that has been about 8% in H1 will not be of the same order. We have already given out our numbers for this quarter and going forward. If you look at the various sectors, we can separately. I don't have those details right now, but we can give you separately those details. Okay.
Details on
which sectors will probably not do as well as historically or in the past they did. And would you like to, do you have some numbers? Would you like to add over here?
I think the main thing that I can add is that base effects will play out as well. You know, currently the growth rate is very, very high. So when one is talking about softening, it's from these very high levels. Sectorally, I think the outlook is highly resilient on each one of the sectors. So this small softening that we are talking about will be distributed across sectors primarily based on the base effects.
And some of it is also, export-led. So we had earlier reduced the growth rates because of the high tariffs. So all those sectors which are tariff impacted, for example, textiles, leather, to some extent gems, jewelry, shrimps, these sectors certainly, although they have a very small component in our total economy, they will certainly be impacted.
Thank you, sir, and thank you, madam. I will now request Manojit Saha from Business Standard to ask his question.
Good afternoon. You have not mentioned there is space for supporting growth in this policy. So that was mentioned last policy, I think last policy also, but this time. So from a real rate point of view, which according to RBI's last report 1.4 to 1.9, is there any space for a real rate point of view? And also wanted to know whether implicit in the assumption behind to the decision was there is no trade deal with US. Was it also a consideration? That very unlikely a trade
No, that's not a consideration. See, as I mentioned to you, ours is mostly a domestic demand-led economy, and whatever is the impact of the tariffs, higher tariffs, that has been already included in our projections. So it is not on account of the higher tariffs. It's a totality of things that we look at. Space, as I again mentioned, it will depend going forward, will be data driven as to whether there is further need, scope, first of all scope, and then whether there is a need. All I can say is that going forward we expect benign inflation, and so if the inflation continues to be the way it is, we expect the rates, the policy rates, to be low and not high. Whether now what rate it will be, that will be getting into speculation. But going forward, we expect benign inflation, and so we do expect low policy repo rates rather than higher policy repo rates.
Thank you. Thank you, sir. I will now invite Vishwanath Nair of NDTV Profit to ask his question.
Good afternoon, Governor. The comments on rupee that you made, we don't want to target levels, step in when volatility. Has that threshold of stepping in changed at all? As in, is there a point in the volatility where you're saying, okay, this much volatility is fine because it's the market forces at play, but beyond this is where we'll step in? And the second part to that is then this historically low inflation and blistering growth doesn't seem to be felt on the ground level. So I'm just trying to understand where the dissonance is. With people on the ground not feeling the inflation come down that much, nor that the pace of growth is as fast as it is.
I don't know. I mean, where do you get this? Because we do rely on the numbers that are given out. I think there is a good growth. Inflation is certainly very low. And especially if you take out precious metals, I think it is being felt on ground as well. Of course, there can be, because there is a geographical distribution to it. Some states it's lower inflation, some states it's higher. The consumption basket again of various sectors, segments of society is different. So there can be differential realization, but on the whole, inflation has certainly come down. You look at historically, it used to be about 7% and 5%, and now it's even much lower. So inflation has come down. Growth, of course, if you look at the improvement in the living standards of people, that has certainly over the years it has it has improved. So undeniably, I think it's being felt on the ground. It's a very hard, your first question is very hard, to put a formula or as to how, it's more an art than a science over there, and so that's what we try to do in managing.
Has your tolerance increased of the volatility? That's the core of the question.
The definition of volatility.
For me, it has remained the same, and I think even for the RBI, I don't find that there is much of a change. We'll have to see, as to one can go back and look at the numbers and calculate for oneself as to whether volatility has the number is there. One can calculate what the volatility has been there, and you can find out, if the volatility index, VIX or whatever, you calculate, you can calculate it and find out as to whether volatility has actually increased or decreased over the years. But we don't think that there has been any conscious attempt to change our tolerance to volatility.
Thank you, sir. I will now request Swati Bhatt-Shetty of Thomson Reuters to ask a question.
Thank you, sir. Governor, today you've reiterated multiple times that inflation, the underlying pressures on inflation are really low. I just wanted to understand what are these factors. I mean, yes, food prices down, precious metals like you mentioned, but is the consumer demand also not picking up, particularly in urban areas? Is that also leading to low inflation? And secondly, related to that, are we also feeling, the spillover effect of the Chinese overcapacity kind of leading in? It's happening in other Asian economies. Are you also feeling that in India? And also, is such low inflation really a good thing for an emerging economy? 0.25% is really low. We are way below 2% as well. So is this the right level of inflation for an economy like India? Thank you.
Certainly not. I mean, 0.2 is not the right level of inflation. We target 4%, and so, it's that kind of an inflation that we try to achieve. At the same time, I don't think we should be, looking at really, 0.2%, because there are going to be fluctuations. There is going to be volatility in markets, whether it is forex markets, Vishwanath asked that question, or whether, it is the Sensex, stock markets, or whether it is prices in general, that volatility will be there. And, some of the impacts are also, because of the base effects. Earlier, you had very high food inflation, and so now, because of the base effects, it seems to be low. But underlying inflation, as we have said, is certainly, on the lower side, and that's why we gave this rate cut.
So consumer demand and the Chinese deflationary pressures, can you please?
Yeah, I mean, all these things, it's both the supply and the demand side factors, and both of them are at play. One can't, and it will be, sector to sector, it will depend. So if it is food, it's more, the supply side factors. It's not, so much the demand side factors. And so it will depend, on sector to sector. There cannot be, one answer as to whether it is only demand or only supply, or which one is more. I think it's a combination of both demand and supply factors. And because there are demand side factors as well, that's why we have reduced the repo rate. We have been, in an easing cycle to further support demand.
Thank you, sir. I will now invite Piyush Shukla of Hindu Business Line to ask his question.
Yeah, good afternoon, Governor, DGs. So two questions. First is on your rate cut. You mentioned about transmission happening. Banks are caught in a fix because there's increasing competition on deposit growth that is there. CASA, there is a challenge to build. Do you feel today's rate cut will translate into lowering of deposit rate as well? That is one. Second is on the annual report that had come out. It had mentioned about gold, RBI bringing back more gold, 64 odd tons of gold in H1, bringing back to India. Is there a conscious effort to bring back, physical gold held in foreign countries, considering that some of the foreign nations have, plowed back because of the war, they have held back on certain countries' gold. Is there a conscious effort by the RBI to bring back the physical gold held in other countries? Thanks.
We are diversifying, it's not good to have all your gold, at one place. So there is certainly a diversification effort that is behind, this move. What was your first question, sorry?
Will today's rate cut in
depositors?
Yes.
See, we have to actually be looking at the real interest rates. When inflation is so low and going forward also, it's going to be low, then even though the nominal interest rates may seem to be low, the real interest rates today are quite high. So that's true not only for borrowers but also for savers. And so we do expect that going forward, especially after this repo rate cut, deposit rates will to some extent moderate.
Thank you, sir. We'll have some questions from the left side again. I'll now request Ekta Suri of Zee Business to ask a question.
गुड आफ्टरनून सर। सर मेरा सवाल होने वाला है कि अगर बहुत सारे मंच पर हमने सुना कि सेबी चीफ ने ये कहा कि बैंक्स जो है उन्हें नॉन एग्री कमोडिटी डेरिवेटिव्स का हिस्सा बनना चाहिए, तो क्या इसके लिए बैंकिंग रेगुलेशन में आने वाले दिनों में क्या कोई बदलाव हो सकता है? ऐसा मुमकिन है? क्योंकि उन्होंने एक से ज्यादा प्लेटफॉर्म्स पर इस बात को कई बार कहा। और दूसरा ये सर कि विदेशी बैंक्स में फॉरेन निवेश आ रहा है, तो पीएसयू बैंक्स में आपको लगता है कि जो एफडीआई की लिमिट है वो 20% से ज्यादा होनी चाहिए ताकि वहां पर भी विदेशी निवेश आए और कहीं ना कहीं पीएसयू बैंक्स भी जो है और उनकी रोबस्टनेस में वृद्धि हो?
पहला प्रश्न आपका है ऑन
कि क्या बैंक्स जो है वो निवेश कर सकते हैं नॉन एग्री कमोडिटी?
सेबी ने जो प्रस्ताव भेजा है वो अभी प्रस्ताव हमारे पास में अभी हाल ही में आया है और उसका हम अध्ययन करेंगे, लेकिन आपको ये मैं बताना चाहूँगा कि बैंकिंग रेगुलेशन अधिनियम के तहत इस प्रकार की गतिविधियों में बैंक को सम्मिलित होना वो वर्जित है, वो अलाउड नहीं है आज के दिन में। तो इसमें कानून में संशोधन होना पड़ेगा। ये केवल एक रेगुलेटरी मुद्दा तक ही सीमित नहीं है। दूसरी बात, पूर्व में भी इस प्रकार का प्रस्ताव आया था, तब इसका परीक्षण किया गया था और तब इसे उचित नहीं समझा गया था। क्या अब इन 8-9 वर्षों में कोई स्थिति में बदलाव हुआ है, इसका हम अध्ययन करेंगे। उचित नहीं होगा कि मैं आपको कोई उत्तर बिना उसका प्रोज एंड कॉन्स का अध्ययन किए हुए मैं आपको दूं।
बट सर अभी अध्ययन वाली स्टेट तक
नहीं, अभी हाल ही में यह प्रस्ताव आया है, तो इसलिए ये उचित नहीं होगा कि हम आपका इसके ऊपर में कोई आपको मैं रिस्पांस आपको दूं।
और सर एफडीआई लिमिट जो पीएसयू बैंक्स में
20% के आसपास है, उसमें क्या, क्योंकि प्राइवेट बैंक्स में पैसा आ रहा है।
ये जो मुद्दा है ये भारत सरकार के क्षेत्राधिकार में है कि क्या उन्हें ये उचित लगता है कि 20% से इसे बढ़ाना चाहिए या नहीं बढ़ाना चाहिए। तो इसके ऊपर भी मैं कोई टिप्पणी करना अभी उचित नहीं समझता।
धन्यवाद सर। आई विल नाउ रिक्वेस्ट अनुराग शाह ऑफ ईटी नाउ स्वदेश टू आस्क हिज क्वेश्चन।
थैंक यू सर। सर सबसे पहले तो बधाई सर, आप 1 साल पूरा कर रहे हैं। 125 बेसिस पॉइंट की हमने कटौती देखी और आम लोगों को उम्मीद होगी कि आगे भी ये जारी रहेगी। सर मेरा सवाल है सर 81 बॉन्ड से जुड़ा हुआ सवाल।
डिपॉजिटर्स के लिए इंटरेस्ट रेट्स बढ़ते रहेंगे और लेंडर्स के लिए इंटरेस्ट रेट्स कम होते रहेंगे।
यस सर।
होना चाहिए एफिशिएंसीज बढ़नी चाहिए बैंक्स की भी निश्चित रूप से।
यस सर। सर मेरा सवाल सर 81 बॉन्ड से जुड़ा हुआ है। इन दिनों काफी चर्चा में 81 बॉन्ड, कई सारी सरकारी बैंक के 81 बॉन्ड से पैसा जुड़ा रही है और कई सारे निवेशक सामने आए हैं हमने जिन्होंने शिकायत की है कि एक मामले में उनका पैसा शून्य हो गया। और सर वहां पर हमने देखा है कि इंश्योरेंस रेगुलेटर IRDA के द्वारा भी RBI को एक पत्र लिखा गया था। IRDA के चीफ ने कहा कि ये इस फैसले से जो इंश्योरेंस कंपनियां, लाइफ इंश्योरेंस कंपनियों का जो काफी नुकसान हुआ है और उसमें आम लोगों का पैसा था, तो उस पे सर RBI का क्या कहना है? और जो आम निवेशक है उन्होंने कई बार कहा है कि मिस सेलिंग की वजह से हमारा जो पूरी जिंदगी भर की पूंजी थी वो शून्य हो गई और ऐसी कोई कठोर कार्रवाई नहीं की गई है। और RBI ने भी कहा था कि हम कुछ गाइडलाइंस लेके आएंगे 81 बॉन्ड से जुड़ी हुई रिटेल निवेशकों के लिए। और सर जब मिस सेलिंग होती है बैंकों के जरिए और 81 बॉन्ड के अलावा हम दूसरी चीजें भी देखें तो बैंकों के जरिए जो क्रेडिट लिंक प्रोडक्ट बेचे जाते हैं, बंडल्ड प्रोडक्ट जिसमें लाइफ इंश्योरेंस, हेल्थ इंश्योरेंस वगैरह, वो बाकी विश्व भर के करीब 38-40 देश है वहां पर रेगुलेटेड है या फिर बैन है। तो क्या आपको लगता है RBI को कि इस बात को भी संज्ञान में लेना चाहिए, जिससे जो मिस सेलिंग एक बड़ी चिंता है जिसपे सर आप भी काफी आपने भी अपनी राय दी है, वित्त मंत्री ने भी उस पर चिंता जताई है, तो उसको आम लोगों को भरोसा दिया जा सकता है?
नहीं, बिल्कुल। देखिए 81 बॉन्ड का जहां तक प्रश्न है वो मामला अभी उच्चतम न्यायालय में लंबित है, तो उसके ऊपर में अब जब मामला विचाराधीन है तो कोई टिप्पणी करना उचित नहीं होगा, तो उसके बारे में मैं कुछ नहीं बोलना चाहूंगा। लेकिन मिस सेलिंग निश्चित रूप से हमने पहले भी कहा है, पुनः मैं ये कह रहा हूं कि हमारा सभी रेगुलेटेड एंटिटीज को, बैंक्स को ये निर्देश हैं और सुपरविजन में भी जब वो जाते हैं तब भी इस बात का ध्यान रखा जाता है, देखा जाता है, ऑडिट किया जाता है कि क्या जो भी हमने नियम बनाए हैं, कानून बनाए हैं मिस सेलिंग के बारे में, जो वर्जित हमने किया है कि मिस सेलिंग में यदि बंडलिंग जैसे आपने कहा तो उस प्रकार की कोई कार्यवाही, उस प्रकार की कोई गतिविधि नहीं होनी चाहिए। ये हमारा सतत प्रयास रहा है और उसी प्रकार से जैसे इंश्योरेंस है तो इंश्योरेंस के लिए IRDAI ने भी नियम उन्होंने भी लाए हैं कि कम से कम 3 प्रोडक्ट्स जो है 3 इंश्योरेंस कंपनीज इत्यादि का साथ में टाई अप होना चाहिए। तो सभी रेगुलेटर्स, रेगुलेटेड एंटिटीज के साथ में मिलकर के हमारा ये प्रयास रहेगा कि आगे आने वाले समय में और अधिक हम अपने नियमों को और अपने सुपरविजन को हम और सुदृढ़ करें, ताकि मिस सेलिंग की जो शिकायतें हैं, मिस सेलिंग जो फिर भी कुछ जगह पे होती है, वो और कम हो और इस प्रकार के जो भी कोई मिस सेलिंग के हमारे पास में वाकये सामने आते हैं उनके विरुद्ध में हम लोग कठोर से कठोर कार्रवाई भी करते हैं और करते रहेंगे।
धन्यवाद सर। I will now invite Hitesh Vyas of Indian Express to ask his question.
Hi sir, good afternoon. I just want to check, is there any calculation being done on the impact on inflation in case currency fall by 1 rupee and what that number would be?
No, we have our figures. I think 5% of depreciation leads to about 35 basis points of inflation, and on the other hand it also helps exports and GDP growth by about 25 basis points.
Thank you, sir. I will now invite Ben Jose of the New Indian Express to ask his question.
Yes, sir. The question is again on the inflation impact. You have revised down by 60 basis points.
Sorry?
Inflation is forecast for 2% for the year.
Right.
Do you expect the rupee to improve, or you have factored in at 2%, you have factored in the impact of the rupee at say 90 or what? What is the assessment of that?
Yeah, we have factored in, the current levels of rupee in our estimates.
Okay, thank you.
Thank you, sir. I'll now request Mr. Mahesh Nayak of Financial Express to ask his question.
Thank you very much, sir. Just earlier in April, you mentioned that you're comfortable with the system liquidity of 1% of NDTL. In the last quarter, we haven't seen on an average, which is below that level. Are you still comfortable, or have you changed your view? And if yes, please explain. And if you are still maintaining any projections until March for infusing internal guidance for infusing liquidity into the system.
See, as long as monetary policy, monetary transmission is happening, especially at a time when it is happening, I want to again reiterate that we will provide sufficient liquidity so that the monetary policy transmission happens. Otherwise, and so that's why, it is a little surplus. It's on the higher side. Otherwise, you do not need, so much of a liquidity, perhaps. You need to only, perhaps, you can do with lower than the kind of liquidity that we have been providing as of now, which is not of the order of 1%, but which has been, of the order of between 0.6 and 1% or so, right? And sometimes going above also 1%. I think with this 1.5 lakh, almost 1.5 lakh, it will go beyond 1%. It will go beyond 1%. So that's the range, that we are looking at. I don't think the exact number should make too much of a difference, 0.5 or 1 or 6.6. The important thing is that we will provide sufficient liquidity to the extent it is needed for the banks to provide reserves. Why is liquidity needed? It is needed primarily to provide banking reserves to the Reserve Bank of India. It depletes because of currency in circulation, because when you give currency, you take the deposits. To that extent, the deposits reduce, currency increases. Or, when you do a forex, if you sell dollars, you take out from the banks those deposits. So their liquidity, the amount that they can keep towards the banking reserves. Or otherwise, it changes because of the banking reserve requirements, changes in banking reserve requirements because of higher deposits, etc. So the banking liquidity is, as of now, sufficient, and we continue to maintain
with your due permission,
ample liquidity.
With your due permission,
I would not say, that I am targeting, a particular level of 1%, etc. I am only giving you the confidence to the system, to the banking community, that there will be ample liquidity, especially as long as we are in this phase where the interest rates have to go down, right?
Sure. Thank you.
Thank you, sir. We'll take some more questions from this side. I'll now invite Aryan Khanna of Inforus Media to ask his question.
Thank you, sir. Good afternoon. Governor, you've spoken a lot about liquidity already. Just something on the nitty-gritties of it. In November, the RBI bought bonds in the secondary market. The market speculates was tied to the maturity of a GSEC at that time. Is this going to be the RBI's policy going forward as well? And then would you also consider it in the OMOs to come to add longer term bonds than 15 years, which has typically been the cap that you've held so far in the current year, and or state bonds if you want to add that to your own on this thing? On a related note on the liquidity management framework, there's been only one auction under the new liquidity management framework of 7 days. The 7-day operation is now the primary operation under the new liquidity management framework. So any comments on that going forward?
So your second question, let me take your second question. So in the new liquidity management, our effort primarily is to keep the operating target, which is the Walker, at the policy repo rate. And so therefore, so we have now, the flexibility in the new liquidity framework to do a 1-day overnight, to do a 3-day, 7-day, depending on, the liquidity conditions that we foresee. And accordingly, those VRR and VRRR operations are done. Your first question related to the tenors of the GSEC OMOs that we will do, you will come to know. Shortly, you will come to know. It's a matter of few hours. We will put it out. We'll put it out. Thirdly, I would also like to mention that it has been our endeavor that we give out a diversified, balanced OMO, a balanced, supply of government bonds in various maturity periods, both short-term, medium-term, and long-term, depending on the needs of the economy and the demand thereof. Previously, in the first half, over the years, of course, the average maturity has increased. The average maturity has increased. In the first half, there was perhaps an excess of the higher maturity, higher period GSEC auctions. And but going forward, I think that has been reduced. That calendar is also out with you. So we'll provide a balanced mix depending on what the demand of the economy is.
Sir, SCL also will you buy?
SCL we will not be buying. Yeah.
So one part of my question was that the maturity of the bond that perhaps the RBI was holding is what the market estimates. Would you continue doing that? Would you buy bonds to replace maturing securities on your portfolio?
We'll be buying right now 1 lakh.
Correct.
Yeah. So
you have there's another maturity in January.
No. You are getting too ahead of times. I have already mentioned that we will provide sufficient liquidity. It is dependent, and I made it very clear in my speech that it is for liquidity reasons that we do OMOs and not for any other reasons. Primarily, right? Primary reason is to provide liquidity, and depending on the demand supply position, which are the securities we target. Going forward, it will again depend on what the liquidity needs are, and then we'll decide as to whether we need to do more OMOs or not.
Thank you, sir. I will now request Shama Mishra of Doordarshan to ask a question.
Namaskar, sir. My question is on online fraud. Usually हम देखते हैं कि प्रिवेंट करने के लिए तो बहुत सारे इसमें जो भी तरीके होते हैं, बट एक बार इंसान का कोई व्यक्ति का पैसा जब चला जाता है तो बहुत कम उम्मीद होती है कि उसका पैसा वापस मिल सके. इवन व्हेन दे गो एंड कंप्लेन, बहुत जल्दी भी कंप्लेन करें तो भी. इस दिशा में क्या आरबीआई कोई कड़े कदम उठा रहा है?
सबसे पहले तो जो ये गंभीर विषय है आपने जो उठाया है, बहुत ही सामयिक विषय है और गंभीर विषय है. आरबीआई हर तरह से भरसक प्रयत्न कर रहा है कि सबसे पहले फ्रॉड न हो. उसके लिए कई कदम हमने, आरबीआई ने, बैंक्स ने, जो लॉ एनफोर्सिंग अथॉरिटीज़ हैं, एमएचए ने, कई सारे कदम हमने उठाए हैं. जैसा कि आपको मालूम है, जागरूकता के लिए भी हमने, लोगों की जागरूकता के लिए अवेयरनेस कैंपेन्स अभियान हमने कई सारे किए हैं. जहां तक रिकवरी की बात है, आपका ये कहना बिल्कुल सही है कि रिकवरी, एक बार पैसा फ्रॉड होने पे और खोने के बाद में वो उसमें कम अंश ही मिल पाता है. ये मामला अभी हाल में जो है ये न्यायालयों में विचाराधीन है. कुछ जजमेंट्स आए हैं. केरला हाई कोर्ट का एक जजमेंट आया है जिसमें उन्होंने आरबीआई को कुछ निर्देश दिए हैं. फिर नागपुर बेंच, हाई कोर्ट महाराष्ट्र, उनका एक निर्णय आया है जिसमें उन्होंने भी कुछ निर्देश दिए हैं. और ये मामला अब सुप्रीम कोर्ट में, उच्चतम न्यायालय में विचाराधीन है, विशेषकर इस बात पर कि एक बार जब फ्रॉड हो जाता है तो उसका पैसा किस प्रकार से रिकवर किया जा सके. तो इसके ऊपर में, सभी स्तरों के ऊपर में आरबीआई, न्यायालय, एमएचए सब मिलजुल करके किस प्रकार हम न केवल इसको रोकें, कम करें फ्रॉड्स को, बल्कि एक बार यदि पैसा चला जाता है तो उसकी हम रिकवरी किस प्रकार से जल्द सुनिश्चित करें, उस पर बहुत गंभीरता से RBI में, सरकार में और उच्चतम न्यायालय में मामला विचाराधीन है। हमारा प्रयास रहेगा कि मिलजुल कर शीघ्र इस समस्या का हम समाधान निकालें।
धन्यवाद सर। I will now invite Subhana Sheikh of Mint to ask a question.
Thank you. Good afternoon, Governor. So I wanted to ask, our estimates on nominal GDP are far more accurate than our estimates on real GDP. And now with IMF also, they have graded India as C on their data quality on GDP. How does that make the RBI's assessment? What is your assessment say? How difficult does that make your job? And also, they have also reclassified India's de facto exchange regime from stabilized system to a crawl-like arrangement. What's your view on that? And sir, one last on transmission, I wanted to ask. There has been an increase in interest rates on new loans in October that shows that the transmission of rate cuts via banking system has reduced. So with the new rate cuts, do you expect an impact on transmission? And also bond yields have relatively slowed down. The transmission on bond yields we haven't seen as much. So any view as to how this would evolve going forward?
So let me take your last two questions, and your first two questions on GDP and exchange rate. I'll ask my DG to come in. She deals with IMF more regularly, and our estimates. Although I believe that our estimates, GDP, inflation, GDP especially, which comes out, and CPI, which the MOSPI gives, they are fairly accurate. Of course, there is scope for improvement. But I'd leave that question, including the crawl-like exchange, on DG Poonam Gupta. I'll answer your other two questions. You asked 3-4 questions in one. Very smart of you. So interest rates, you said, have gone up. Lending side, vis-a-vis, I think you are comparing last 2 months data. So as I also explained in my statement today, interest rate effect is now 79 basis points. But if the proportion of higher interest rate loans, like for example retail loans which are unsecured, or gold loans, for example, because gold loans also, they are very high interest, they are higher interest rate loans. If their proportion goes up, the average interest rate goes up. It does not mean that transmission has slowed. Okay. The interest, so that's why we are now giving. So the number for you, the number that you should be looking at is actually the interest rate effect, whether the interest rates have come down or not for different segments of loans. But all segments do not have the same interest rate. Housing loan may be as low as 7.5% or 8%, whereas some of the unsecured loans may be much higher, 10, 11%. If the share of those loans goes up going forward, then the average interest rate goes up, even though the interest rate on each and every segment of the loan has come down. I hope I was able to explain that point.
Yes.
All right, that is the top brass at the Reserve Bank of India addressing a press conference after announcing the 25 basis point rate cut. For our viewers just tuning in, the Reserve Bank of India has pretty much given the markets everything they wanted on a platter. A 25 basis point rate cut, which is the fourth rate cut in this cycle, bringing the cumulative rate cuts to 125 basis points, along with a liquidity injection, which is 1 lakh crores of open market purchases, which will inject 1 lakh crores in the system, along with forex swaps of about $5 billion, which means another 45,000 crores coming in the market for a 3-year tenor. So that is about 1.5 lakh crores of liquidity injected that will be done in the month of December itself. Apart from that, of course, you had the Reserve Bank of India commentary just coming in, very clearly indicating that inflation is expected to be benign. And if that is the case, he very clearly said policy rates will remain low. They will not go high. So, leaving the room open for further easing, beyond what has already been done by the Reserve Bank of India. If you look at the projections as well, for CPI, as far as the second quarter of the next financial year, the figure is 4%. For this year, the CPI forecast has been revised downwards as widely expected from 2.6% to 2%. And as far as growth is concerned, a steep 50 basis point revision from 6.8% earlier for FY26 to 7.3%. And all the way into the next year, the RBI sees growth in the first quarter at 6.7% and in the second quarter at 6.8%. That's where we stand as far as the RBI policy is concerned. But to parse, into what we should expect as to the future trajectory of the rate cuts, we'll have a special set of guests joining us to help us decode the policy. Pranjal Bhandari, Chief Economist at HSBC, along with Soumyakanti Ghosh, Group Chief Economic Advisor at State Bank of India, and Kastub Gupta, the Co-Head of Fixed Income at Aditya Birla Sun Life AMC. But before we get to them, we have to take a mandatory short break. We'll be back in just a moment. Welcome back. We continue our special coverage of the RBI's monetary policy, and with us are Pranjal Bhandari, Chief Economist at HSBC, Soumyakanti Ghosh, Group Chief Economic Advisor at SBI, and Kaustubh Gupta, Co-Head of Fixed Income at Aditya Birla Sun Life AMC. Pranjal, let me quickly start with you. I mean, the big hint the governor actually very clearly stated is, with inflation expected to remain benign, rates are going to remain low. I mean, going into this policy, the expectation was that perhaps we've reached, at least near the end of the rate cut cycle, one more rate cut at best. But even after getting this 25 basis point rate cut, it seems the markets have come to expect, that this is not the end. How did you read that?
Yes, I think so. I think you're right. It's really the season of giving in the RBI. It seems, they've not just given you rate cuts, they've given you liquidity, and all of this comes, in December. We were not expecting it. We were expecting the rate cut, but we thought the liquidity will come probably, a few weeks down the line. But it's all come together very nicely. And I must say that after the press conference, my sense is that the RBI is even more dovish than it was when I just heard the government statement a couple of hours ago. And I say that because he kept emphasizing on how the underlying inflation is very low. This time there are structural drivers keeping it low. On growth, he did mention that some of the numbers could soften. He primarily spoke about exports, which I think hints that if we don't get a trade deal with the US in the next couple of months and our exports remain weak, then growth could be weak and there could be space for rate easing. He also mentioned on rates, as you said, that it's a season of them being more lower than higher. And on liquidity, I don't know if you've got it, that, he at some point said that liquidity will probably be more than 1% of NDTL, and he wants to, keep it as flush as he possibly can at this point of time. So yes, you're right. I think all of this does suggest to me that there is space for more easing, when we get into 2026. But if you ask me for the month, I think that's harder to pin down. I would say that the probability in February will be a little lesser, because he did mention that he wants to see the transmission cycle pan out before he cuts again. But I would say that it would be live in April or in the June meeting, especially if by then we don't have a good trade deal with the US.
Well, that's right. And yes, on liquidity, he did say 1% of NDTL, but he said, again, RBI is not fixated on a number. The idea is to keep liquidity sufficient. At one point, he even said, keep liquidity ample. Mrs. Soumyakanti Ghosh, what is your reading as to how much more headroom there is to cut rates, given the inflation forecast, which is at 4% all the way into the second quarter of next year? So it remains within the comfort zone, and growth, it seems, he does see some headwinds because of global uncertainties.
No, I think, thank you, Ritu. I think we have been hearing about these headwinds now for a long time. That doesn't keep on coming. That seems to keep on coming, but that doesn't keep on coming. And obviously, if there is a rate cut, there is always possibility of an headwinds to GDP growth, and that has been nicely dovetailed into the policy statement. In my sense, I think the second quarter growth number, the third quarter and the fourth quarter growth numbers are also likely to be strong enough. So the RBI forecast of 7.3% is an underestimate. And also the second thing is that if you look at the inflation forecast, they're now down from 4.2% at the beginning of the year to 2% for the current fiscal. And the first quarter of next fiscal, it is down from 4.9 to 3.9. So all the forecasts have undergone significant downward revisions, but the GDP forecast, which have seen significant upward revisions. So that's why the governor correctly said it's a Goldilocks period in terms of a lower inflation and a higher growth. Now, coming to the space for more rate cuts, even though the central bank has kept the options open in terms of more easing, but my sense is that if you look into the COVID time, when the rates were brought down to 5.15%, and this time the rates have been brought down to 5.25%, I think there is a similarity between that COVID time and this time. So I think rates should stay pretty close to 5.15%. So in my sense, even though the central bank has kept the doors open for possibility easing in the next year, I'm not sure whether there is any possibility of any further rate cut going forward. But if the inflation numbers surprises continue to surprise downwards, which it should, there could be space. But in my sense, I think 5.25% looks, for now, it will stay at that level for longer. So that is my sense. And the second, and the liquidity, I think the RBI has been very smart enough. I think the buy-sell swap will not only inject liquidity, But it will also support the rupee, because when you are buying dollars, this dollars will be actually used up to support the rupee in the event of any fall in the value of the rupee. So overall, it's a policy which is a cut, which was, I think, which was a very close call. But the future looks a little uncertain at this point of time in terms of.
So you're of the view that we're in for a pause now. There may not be any real room for a cut unless inflation surprises, significantly on the downside. But Kaustubh, on liquidity itself, I mean, the markets, of course, wanted perhaps 2 lakh crores. What we've got is close to 1.5 lakh crores. But importantly, the governor said this is for this month. They've announced dates for this month. Is your reading, given the governor's commentary on keeping liquidity sufficient, 1% NDTL or not, is your expectation we'll see more OMOs, perhaps in January and March as well?
Yes, the policy has come in line with our expectation. And as far as your liquidity is concerned, please remember that this 1.5 lakh crore OMO plus FX swap is only for December. Our base case is that between Jan to March, we'll see another 1 lakh crore of OMO. In fact, for next year, our OMO expectation is of about 4 lakh crore, which means that within next 12 months, we think that about 5 lakh crore of M0 money, which is reserve money, will be added largely through OMOs by RBI to ensure that liquidity stays about 1% of NDTL throughout the year.
Mr. Soumyakanti Ghosh, just coming back to what you said about the forex swaps supporting the rupee. In the spot market, as RBI buys dollar, you don't see any near-term impact, negative impact?
No, what I'm trying to say is that this buying dollars, basically this is a liquidity enhancement measure. So this is the primary objective, but the secondary objective, if you go through this carefully, when you are buying dollars, you're actually accumulating the dollars also. So in future, if there is any pressure on the rupee, all this could be actually used in the spot market to intervene and stimulate the volatility in the value of the rupee. So that's the secondary purpose, but the primary purpose that the governor correctly said is liquidity management at this point of time.
Okay, Kaustubh, very quickly, on the 10-year trajectory, what is your sense in the near term, given what we've heard from the governor?
Look, governor clearly spells out that he is looking for monetary policy transmission, and in our understanding, the transmission is just not sticking to overnight rates, but now the transmission will have to spread across the yield curve. Most of these OMOs will be concentrated between 7 to 10-year bucket, and which is why on a 10-year point, we do expect that they will trade closer to 6 quarter by March. We are also of the view that there is at least one more rate cut that should come in. Most of that rate easing will be front loaded. And if that cut comes in, then we will be seeing that 10-year government yields touching closer to 6%.
Okay, closer to 6%. Okay, that's a bit of an up move from here. But Pranjal, very quickly, what is your sense of where the landing rates could be, what the terminal policy rate could be? Mrs. Soumyakanti Ghosh believes perhaps we've already seen the end of the cycle, whereas Kaustubh expects, maybe one more cut.
Yeah, we also, believe that there is space for more easing, especially disappoints next year. And I would say, one more 25 basis points rate cut. There are, many reasons, obviously low inflation is the big one, but there is one other reason which nobody is talking about, and that is the sanctity of the inflation targeting framework. It's a symmetric framework. Today, if inflation was higher than 6% for 6 months, we would all be calling for hikes. So if it's lower than 2% for 6 months, then, because of symmetry, the RBI should be cutting. And our sense is that inflation is going to remain quite low for a very long time. And to preserve this symmetry, the RBI has to be dovish at this point. And this will actually strengthen inflation targeting in the economy and also have more acceptance for inflation targeting. Because for a long time, everybody thought inflation targeting basically means RBI will keep raising rates. But no, it can be on the other side as well. And that is what we are seeing right now. All of this is very important because in March, we are going to relook at the inflation targeting framework. So if you build on its credibility right now, I think it's a good thing. So I think that's also playing on the minds of RBI. And that was also a primary reason for the rate cut and dovish language in today's policy meeting. But yes, we have a 25 basis points rate cut, which we think there will be space for in the next year. Our sense is that growth will slow in the March quarter because fiscal tightening will have to happen. Inflation is likely to remain low for a longish period. Fiscal policy will remain tight because there is fiscal intolerance around the world. Countries who are being indisciplined are being punished with very high borrowing costs, and therefore, because the fiscal is tight, monetary policy will have to do the heavy lifting in case growth slows. So on the back of that, we see more space for easing in 2026.
Sonal, Pranjal, what is your number for, the current and the next year's GDP growth? RBI has revised it several times now, still at about 7.3. Some in the markets were penciling in something as high as 7.4, 7.5. What's your number for both this year and the next?
For this year, FY26, our GDP forecast is 7.7%. It's higher than what markets are talking about. But we also note that there are some deflator issues. And if we clean up for that, the real growth on the ground, the actual growth on the ground is about 1 percentage points lower. It's about 6.7%. So that's FY26. FY27, we have growth at about 6.5%.
Okay, Mr. Soumyakanti Ghosh, what is your own estimate as far as growth is concerned?
This year we are at 7.6% with a potential upside, and next year we're at 7%. But more importantly, the Q3 and the Q4 growth rate seems to be holding up, with Q4 slightly lower than Q3, but they are still holding up over the 7% mark.
Okay, even as far as inflation is concerned, of course, next year we won't have the statistical base effect advantage, but we've seen 5 revisions, I think, if I'm not wrong, so far to the CPI number for this year alone at 2% now. Mr. Soumyakanti Ghosh, what is your number? Do you think we could go lower than 2%?
I think, Ritu, there is one more revision coming to the inflation number in February, and this we have been talking for a long, the new CPI base, which will be introduced, that will actually shave off possibly 30 basis points from the headline number, because the food inflation is going to go down, and also this e-commerce will have a sobering impact. So from that perspective, if you add this, please note that these forecasts are based on the old CPI series. So if we take that into consideration, I think next year CPI forecast would be, we are at 3.4% for next year. So inflation is going to stay lower for longer, for a long time. So that's why the central bank has given a guidance of a softer interest rate regime. So it's going to be a close call, but as of now, we believe that maybe this rate will stay for a longer period of time before any decision comes next year.
Okay. Kastub, any additional takeaways from what you heard from the governor in this speech and thereafter in the press conference? Any more cues you could point out for us?
Governor clearly come out and tick all right boxes as far as the communication and as far as action is concerned in terms of dovishness. And in our view, practically there are 3 things that need to be pointed for. First, in India, central banker is an inflation target central banker. So they need to look or give more weightage to inflation compared to the other matrices, which is growth and external stability. Growth in our estimates will have some downside, at least for next year, than what RBI is anticipating for. Third thing is, of course, most of the policymakers and analysts on the street, they think that 2013 is our seed for policy making. But unlike 2013, this time the real pain on external front is coming from capital flows. And capital flows, they chase growth, which means that if we have to stabilize our external front, we need to prop up our nominal growth with a limited space on fiscal. Monetary policy has to do most of the heavy lifting, which is why we are of the view that there is a space for more rate cuts. In fact, in today's policies, for the first time, I think RBI also put emphasis on that real rates are too high and they need to be brought down. So most of the action now will shift to monetary policy as far as policy stimulus for pushing the growth is concerned, and which is why we will see very aggressive RBI than what we have experienced in last 6 months on monetary policy front.
Pranjal, very quickly, did you get any sense of whether RBI seems to indicate it is comfortable at the current rupee levels? I mean, I think many journalists did try to ask him about, what kind of volatility the RBI would be tolerable of. But all we got is that the forex position is comfortable. We have 11 months of export cover, and the repeated dialogue of coming in only to curb volatility, not targeting any level. What is the sense you got, Pranjal?
Yes, I agree with you that, there was not too many takeaways on the rupee front. They said what they've always been saying, that the RBI tries to curb volatility but does not impact the direction of the currency. But overall, what's been happening over the last week or so, my general sense is that the RBI is now ensuring that, rupee plays its role of being the primary shock absorber at a time when India has been, slapped with this 50% tariff by the US. I think it works perfectly. The tariff reduces the competitiveness of our exports. A weaker rupee enhances that back. And I think that is a great shock absorber that we have at this point of time. In fact, if you were to just plot this real effective exchange rate of India, say for the last 10 years or so, you will always find that it mean reverts, which basically means that left to its own, the rupee can actually be a good shock absorber. If it has to depreciate, it depreciates, then it increases your competitiveness, your exports rise, and over time your rear actually rises back up. So it's letting the market forces work at this point of time when we've been given this exogenous shock of the tariffs. So I think it is very clear by the actions in the last couple of days that they want the rupee to find its own value at this point.
All right, Pranjal, gentlemen, do hold on. We have some news coming in where the civil aviation regulator, DGCA, has withdrawn the rule which barred airlines from substituting weekly rest with leave. This comes after, the kind of disruptions we've been seeing there at Indigo, which has cancelled a bulk of its flights from major cities today already. On the back of these FDTL norms and other concerns, the move comes, because of these disruptions and the request for flexibility from the airline. And DGCA now says that the airlines can use the leave in place of weekly rest to stabilize crew rosters, and the withdrawal is going to be effective immediately. So effectively, you have the civil aviation regulator allowing the airlines' request to consider weekly rest as leave. Perhaps, on the back of that, we'll have to see what we hear from Indigo as far as, the flight schedules are concerned, if this will help them get back on track. For now, they've, of course, set Feb 10th as the date by which they hope to normalize operations. We'll continue to track that news and more, but for now, we have to take a short break. Don't go anywhere. We're back in just a minute.
Welcome back to our special coverage of the monetary policy. The governor's press conference has just ended, and it has, in my view, added some color to what the statement said. The statement gave the indication of extreme dovishness because the governor reiterated several times that inflation is benign. But in the policy answers to our questions whether there is space to support growth, he was less forthcoming, seemed to say that he would be data dependent. On the issue of liquidity, however, he was extremely emphatic. And while he didn't stick to that 1% of NDTL will be kept as liquidity, he said they will go the whole hog to ensure that there is rate transmission. So chances are this is the OMO announcement is only for this month, and more will be done. Seemed very open to liquidity, and on rates, he didn't give us much more than what the statement gave. That's all I have by way of key takeaways, which anyway is available to everyone who heard the press conference. We still have Kaustubh and Pranjul with us. Pranjul, really, last two set of questions. I know Ritu has asked you everything. Okay, Kaustubh, let me come to you. What is the bond market finally made of... okay, I'm sorry. I believe Kaustubh is not able to hear us. Pranjul, what have you made of the governor's statement? Is there one more rate cut, and where would you place it? What was the key takeaway from the press?
Yeah, thanks, Lata. I think there is space for more easing if growth needs that easing. And I think that came out very clearly, especially in the press conference, where he kept reiterating why inflation is likely to remain low for long. There are more structural reasons why inflation has fallen this time around. He also spoke about growth, and he got a little bit into sectors. He basically said that many of the exporting sectors have started to hurt. And I think in a way, this suggests to me that if we don't have a US-India trade deal soon, and these exporting sectors continue to struggle, then we may see some rate cut, as a growth booster. And then, of course, he mentioned very clearly that in this particular season, the odds are more for lower rates than for higher rates. And then what you said on liquidity, that he said that, look, even now, liquidity is likely to be more like 1.25% of NDTL, and he will hope to give ample liquidity. So all of this, makes me believe that this is a season of giving in RBI. RBI wants to remain dovish and accommodative as much as is needed by the real economy. And then when I turn to real economy, my sense is that GDP growth is going to slow in the March quarter because of fiscal tightness, because the GST boost would have run out to some extent, and also because some of the exports will start hurting GDP growth. So all of this means that they could cut next time. I don't think it will happen in February, because he himself said that they'll wait for the transmission cycle to play out. But I would keep the option open for April or for June.
Okay. All right. Well, that's about all I had. Ritu, any more questions from your end?
I think what we're all waiting for is the next cues. And our panel, Mrs. Soumyakanti Ghosh, was of the view that there'll be no further rate cuts, whereas Pranjul and Kaustubh, of course, are expecting some further softening. So that wraps up our coverage of this special monetary policy discussion. Lata, if any final takeaways from the press conference that you'd like to add?
Well, I think on the currency front, they were very clear they have not changed their stance. I thought that was, it was emphatic that the Reserve Bank doesn't look at any level or range, and they are only there to remove any abnormal or excessive volatility. They also, of course, agreed that our external sector is at the moment very healthy. He's not worried about that 1.3% current account deficit, which he thinks is very nominal. And I think they are on the expectation that capital flows will come when they come. The point is they think the external fundamentals are good, and that their policy towards the currency has not changed at all. That I think was a very big takeaway, because we were all, every one of us, asking questions on the currency, but nothing has changed. Status quo was the word from the Reserve Bank as far as the currency policy was concerned. I thought that's the only thing you haven't covered. The rest you all have covered, Ritu. The takeaway on liquidity, that they stand ready to give liquidity. And therefore they don't want to commit themselves to 1% or something. And therefore more OMOs will come as and when warranted in the next quarter as well. But I think that's what your guests also spoke about.
Absolutely, and we'll leave it at that. Lata, thanks very much for joining in from the Reserve Bank of India. We have to take a short break. Before we go, just a quick update again. If you could pull up the, the Indigo news that has come in Interglobe Aviation, that airlines can leave use in place of weekly rest to stabilize crew rosters. The stock reacting on the back of that, we've seen a bit of a spike coming in the last few minutes as that news came in. On that note, we're going to slip into a short break. Don't go anywhere. We'll continue our markets coverage when we return.
Good afternoon. Welcome to Midcap Radar live from the CNBC-TV18 Motilal Oswal studio. I'm Sonal Bhutra. With me as always is Vivek Iyer. What a recovery from the lows and what massive moves in the mid-cap index in particular. 0.4% higher there. The Bank Nifty outperforming by a big margin, 450 points higher on that one. Across the board, big gains coming in, be it Nifty Realty on the back of this rate cut. So we'll track that and a lot more on the show today.
Good afternoon, Sonal. Absolutely right. Good recovery seen on a Friday afternoon, and especially when you're looking at the mid-cap side of the market, a much sharper recovery is what we are seeing there. We have a lot lined up on the show, so let's start off with the top headlines. Stocks react positively to RBI's dovish policy and growth forecast, with financials seeing a smart uptick following the RBI governor's speech. Realty and IT also see an uptick, while industrials, energy and healthcare drag.
Keynes Tech shares slip almost 15% in 2 days, despite the company's clarification on Kotak Institutional Equities flagging inconsistencies in the disclosures made by standalone business and various subsidiaries on intercompany related transactions in 2024 and 2025.
ITC Hotels slips from morning highs as British American tobacco entities sell close to 9% stake in the company via a large block deal of 18.4 crore shares worth over 8,300 crore.
SKF Industrials lists at a discount of nearly 3% from its discovered price. This comes after the demerger of the company from its parent organization, SKF India. SKF India shares adjusted to the demerger of its automotive business from its industrial segment on October 15th.
Deepak Nitrite gains in trade after wholly owned subsidiary commences manufacturing operations at its nitric acid plant in Gujarat. The total capex for the same stands at over 515 crore.
Okay, those are the top headlines that we are tracking. A lot of individual movers in the market. The market breadth absolutely in favor of the... Actually, right now, it's in the favor of declines. That's surprising considering the moves that we are seeing on the mid-cap. So the advanced decline ratio and the line should come up for you on the screen, because while the mid-cap index is at the day's high right now, we have more declining stocks versus advancing stocks. So that's an interesting trend, because market breadth has been in favor of declines for a couple of trading sessions. So what's happening beneath the surface is important to track as well. But the big story, of course, that we are tracking is the chaos and disruption across airports in the country. As the fallout from the crisis at India's largest carrier, Indigo, intensifies. So that stock should be on your radar, because there are some updates as well. We'll discuss that in greater detail in just a bit. But before we do that, let's talk about some of the mid-caps which are moving around in trade today. Sudarshan is here with all those details. Sudarshan.
So it looks like that RBI has given a much needed medicine to the market, and we have seen a sharp recovery after 25 bips rate cut announced by RBI governor. And some of the mid caps that are moving higher, all the rate sensitive names, SBI Card, Chola Investment, M&M Finance, PNB Housing Finance, from real estate, majority of the names are higher in trade. DLF is one of the top gainers, you can see, and all the gains have come post RBI's policy, in which they have announced 25 bips rate cut. Some of the other mid-cap movers, Indus Towers has been moving higher for the last few days. Today also it's one of the top gainers, currently up 4% on an expectation of certain relief package for Vodafone Idea. Remember, Telecom Minister last week had announced that by this month end there would be certain updates. So on the back of that, the stock is gaining. Delta Corp promoter has bought 0.5% additional stake via open market, and because of that stock is higher more than 2%. Zuari Agro is higher with healthy volumes. Genesis International has bagged an order. Interesting move the stock has seen. Today it had hit 52-week low, and from that level it has seen a sharp move, currently up 10%. Patanjali Foods also it low, and from that level the stock has seen up move, currently up more than 2%. Some of the mid-cap losers, Keynes Technologies. For the last few sessions, the stock has been moving lower. Today also it's down more than 7%. The reason, there was certain discrepancies in the reporting quarterly results that the company had not mentioned certain details, and because of that the stock has been under pressure. Amber Enterprises also peer name, that stock is under pressure as well. Hitachi Energy also, there are certain reports that one of the major orders that company is likely to have lost to its peer, and that's the reason stock is down for the last 3 or 4 days. IREDA and HCC are also under pressure with healthy volumes.
Thank you so much, Sudarshan, for joining in and giving us all of the movers as far as the broader end of the markets are concerned. Well, in the last 20 minutes, you've actually seen some important relief coming in as far as Interglobe Aviation is concerned. The DGTA has provided interim relief, withdrawing the rule that barred airlines from substituting weekly rest with leave. Shivani Bazal is here to tell us more.
Well, yes, Vivek, that is correct. The DGCA has, in fact, issued an important relaxation today for all the airlines, not just Indigo. And this comes, of course, on the back of the disruption that we have been seeing in the past few days. Specifically, and at the heart of it is Interglobe Aviation, the Indigo Airlines. Now, DGCA has withdrawn the rule that barred airlines from substituting weekly rest with leaves, which essentially means that now airlines can use weekly rest and the leaves in tandem. They can be substituted. This means airlines now get more flexibility to roster their crew, and especially this is beneficial for Indigo, and the move takes effect immediately. Now this comes, remember, just a day after Indigo in its meeting with the DGCA had flagged severe crew planning pressure under the new FDTL norms, especially around night duty limits. Indigo had asked the regulator for 2 temporary relaxations. First, rolling back the expanded night duty window from 6 a.m. to earlier 5 a.m. and the second, putting the new limit of only 2 night landings per roster period on hold. Now, after this, the airline had told DGCA that these changes were adding to crew shortage and compounding operational stress. So today's DGCA withdrawal is not directly about night duty, but it is another step that gives airlines some more breathing space to manage the rosters during this period of widespread disruptions. Let's see how Indigo takes it and whether or not they are able to turn the situation around quickly. Back to you.
Okay, all right, Shivani, thank you so much for joining us with all those details. A sharp recovery in Interglobe Aviation's stock from the lows of the day after that relief that has been announced by the DGCA. So we'll keep tracking. It is a very important story from the consumer or the flyer perspective and from a stock market perspective as well. With that, let's move on and welcome Hemeen Kaparia, Technical Associate from DR Choksi FinServ, for a technical check on the markets. Hemeen, good afternoon. Thank you so much for joining in. What next now? This massive recovery after the rate cut, will we build onto that, or we will consolidate at these levels?
A very good afternoon, Thoran. Thank you for having me on the show. It's always a pleasure. It's been a pleasant surprise because we've turned back from this 26,100, 26,300. Okay, we posted a fresh high. We broke and closed below 26,104, which is a swing high. Okay, we went up, we retraced 400 points. Now we are back on an even keel. So, but the market is still not, it's not a sweeping bull market. The move still remains relatively narrow. But having said that, yes, if we need to do what the market has been threatening to do, I mean, post a new high and carry on, not just, do a flip-flop and slip down again. So 26,277 was the high posted on 27th September 24 Sonal. Now we gone up beyond 26,300. So one, we need to take that out. I mean, it would over a period of time. I'm just not sure whether it happens now or it takes some more time. The setup seems to indicate we are ripe for a breakout. The oscillators on the monthly chart have turned positive and we are hovering around the all-time highs. We haven't fallen back deep. That seems to suggest underlying strength. So we close about 26,300. Sky's the limit. I believe we have a lot more upside left after that. And I think unthinkable levels would be on the horizon somewhere down the line. So the setup is positive, but this needs to happen. Bank Nifty has flattered to deceive, has outperformed, once again slipped a bit. But the setup there also looks positive. So frankly speaking, everything is hunky-dory. It's just that a broad bull market with a good AD line is missing. And we saw a 400-point decline, Sonal, on a VIX, which was 11.5. I mean, I'm not sure if the market justifies 400-point fall in such a low VIX. Succinctly put, long story short, setups are good. I would still be slightly more specific till we take out 26,300 and we see a breakout on the Nifty Midcap 100 also. Sonal.
Okay, Hemeen, good afternoon, and everything seems hunky-dory according to you, so that's extremely good to hear. Hemeen, your individual picks for the day and any view as far as the outcome of, or what do you expect could happen in the share price of Indigo going forward?
Okay. Firstly, I'll go with the picks, Vivek. Nice to see you. The first one is a buy call on Cyient Limited. IT has done well. Infosys has led the move. TCS playing catch up. Everything is fine. We are on a good rebound, which is expected to continue more. So, and Cyient is expected to play catch up. One can buy Cyient at 1170, stop loss of 1145, target of 1220. We've seen a close up of the 55-day exponential moving average. We've seen a turnaround not only on the daily but on the weekly charts. Mechanical indicators are given a crossover buy. Technically cheap, stop loss is low. Everything looks fine. So buy on Cyient. The second one is a more easier one, Vivek, because international copper is looking good. Has broken out from a 8-week consolidation. So international copper moves. Hindustan Copper is obviously going to tag along. And it is on the verge of breaking out of a, I wouldn't say a double top, but two previous highs, Vivek. So buy call on Hindustan Copper at 365, stop loss 345, target 405. Modest entry stop loss, I believe it's going to go up at least another $100 more from here over a period of time. Having said that, Indigo that you were speaking about, Vivek, 5,300, just below 5,300 is the 55-week exponential moving average. That's where it has taken support. Volume is highest in the last 40 trading sessions or so. So I believe the selling climax today is over. The lows of today need to be protected for 3 trading sessions or so, and I believe that's happening. If that happens, time being, we should be seeing stability coming in, and just around 5,200 is a strong congestion area. So I wouldn't be too bearish on Indigo right now, but I don't see any reason to be unnecessarily bullish either. We are seeing a taking out formation on the longer term chart.
All right, thank you so much for joining in, taking us through the market levels and individual names as well. With that, we'll get into a break. When we come back, we'll talk about more stock-specific moves on the other side. Stay tuned.
Welcome back to Mid-Cap Radar. Well, the recovery in the market continues, but one stock that's feeling the pinch is Kaynes Technology. It's down for the second straight session amid a report from Kotak Institutional Equities citing lack of disclosures and a lot more. Mangalam joins in with more details.
Yep, it is an interesting report that has come in with some startling claims that have come as well. So if you look at the detailed, breakdown of the note, a couple of things stand out. The first one is significant revenue/profit contribution coming in from their smart metering business. Now remember, most of the company's smart metering business which was acquired, Iskraemeco, their full year revenues of 620 crores and profits of 49 crores accrued after the acquisition in the second half of this year. What Kotak implies from this is that, the full year profit that the company has reported of 60 lakh for this subsidiary means that in the second half of this year, they did a 28% margin, which is unusually high for a smart metering business. And also it implies that the first half of the year had a 48 crore loss, which is also inconsistent with their FY24 profits. And there is no evident cost driver in the first half to explain such a big loss. The second part, ambiguous accounting treatment of goodwill/reserve adjustments under the acquisitions. Now, the company had made two acquisitions, that of Iskraemeco and Sensonic, and they paid about 883 million rupees or 88 crores for that. And they should have actually recognized a goodwill of 114 crores, but turns out that in actuality, there was a negative adjustment of about 1 crore in the goodwill alongside capital reserve, and there was a 561 million rupee or 56 crore rise in general reserves. There was also a sharp addition in tangibles to the tune of 180 crore rupees. So those were a couple of things that Kotak found fairly ambiguous. The third part was lack of consistency in related party transaction. Iskraemeco, which is the subsidiary, if they look at their own numbers, that suggests that there were a purchase of close to around 180 crore coming in from Kaynes Tech, which is not reflected in Kaynes' own related party transactions, to which the company itself has said that that was an inadvertent mistake. So, that's exactly what the street is taking note of. And year-end payables of 200 crore rupees to Kaynes Tech and receivables of almost 200 crores from Kaynes Tech was also not reflected in Kaynes' own related party transactions. So this was a finding that Kotak did from Iskraemeco's numbers. And this led to a 22-day increase in cash conversion cycle and high capex. The final point among the many that they made was there was a variance in cash flow statement versus asset additions. In fact, the FY25 cash flow statement suggests that there was around 990 crore rupees or 950 crore rupees worth purchase which was directed towards fixed assets, which does not reflect in the balance sheet because the additions to the balance sheet assets were only around 770 crores. So all these factors have taken the stock lower. Alongside over the last 3 years or so, if you look, the promoter's been raising equity and we have a lot of fund holding in the company as well. So let's see how it goes from here on.
Inadvertent error in reporting, that's the key word that they have specified in their release to the exchanges as well, and something that the street is not liking. Thank you, Mangalam, for bringing us all those details. Let's hear out what the management, the executive vice chairman of the company, had to say to us in a chat earlier we had this morning.
It is only in the standalone we have missed, which we clearly clarified.
Okay.
Notes to accounts, it is missing, that's all. That is also in one company. But if you see the P&L as well as in the balance sheet, it is all appearing. There is no inconsistency, whatever he is saying. However, we agree that there is a miss there and which we will take corrective action. See, this is an age receivable in Iskraemeco books. Whatever, when we acquired itself, it was there. Which we will be reconciling and closing it.
Okay. By when, sir?
By this financial year end, we should be able to close it.
Well, that was the management of Kaynes Technology, but clearly the street is still worried about the stretched, elongated working capital and all of the other points that Mangalam highlighted. Well, we now slip into a short break. We'll get you on the markets and stock-specific action on the other side. Stay tuned.
Welcome back. Where shareholder lock-ins for Lenskart, Pine Labs, Grow, Urban Company come to an end next week. Hormiz is joining us with details of how much float will be available in the market. Hormiz.
The much hyped IPOs of last month, they faced their first big test next week. Earnings aside, of course, you'll get to see a lot of float coming into the market. But Pine Labs will have 2 days where the lock-in period ends. First up is on Monday, the 8th of December, when 2% of its equity, close to 20 million shares worth almost 500 crore rupees, will free up for trade. The stock is up around 10% from its issue price. Lenskart's lock-in also ends on Monday. You'll see 2% outstanding, close to 41 million shares worth almost 1700 crore rupees will get freed up for trade. The stock currently still trading around about its issue price itself at around 402 rupees. The other one being Grow, their shareholder lock-in ends on Wednesday, that is the 10th of December. There you'll see around 2% outstanding, close to 150 million shares that will free up for trading. The value here is over 2200 crore rupees, and the stock is up nearly 50% from its IPO price. The second instance of Pine Labs shareholder lock-in ending comes next Friday on the 12th, where close to 40 million shares or 3% of its outstanding frees up for trade. That's worth almost 1,000 crore rupees, and that will also be the second instance of Pine Labs getting shareholder lock-in ending there. And Urban Company as well, that stock lock-in period will end the next Monday, which is the 15th of December, and there you will see around 41.5 million shares, close to 3% outstanding, 530 crore rupee worth of shares will get freed up for trade. Of course, mind you, the end of the shareholder lock-in doesn't mean that all the shares will be sold. They just become eligible to be traded. But singling out Grow and Urban Company, the sheer ferocity with which they went up from their issue price, they are down, with Grow down almost 23% from the post-listing high. Urban Company is down 36% from its post-listing high. So a lot of these much talked about IPOs will be in focus next week as well, as their resilience gets put to test.
Okay.
Well, thank you so much, Hormiz, for joining us and giving us all of those very important details. But with that, it's time to call an end to this edition of Midcap Radar. Your stocks when we return.
Hello, good afternoon. You've tuned in to Your Stocks, coming live from the CNBC-TV18 Motilal Oswal studios. I'm Vinny Motiwala. Thank you so much for tuning in as well. And like you can see at the bottom of your screens, you do see have some updates coming in from Interglobe Aviation as well. So that is what we're keeping an eye out on. And this is what sources are saying. Night duty definition is rolled back. DGCA has granted Indigo one-time temporary exemption from key phase 2 FDTL rules that were there. This rollback is going to be from midnight to 6 a.m. and to midnight to 5 a.m. for the company. So we'll watch out for more details on this one. Indigo must present a roadmap for full compliance also for the next 30 days as well. And this is something that is for Indigo's A320 fleets. This is the latest update that we have coming in, where DGC had said that they have granted Indigo a one-time temporary exemption for key phase 2 FDTL rules. Night duty definition rolled back from midnight to 6 a.m. and to midnight to 5 a.m. for Indigo A320 fleet. So important update that's coming in there, because in the last few days you've clearly seen a lot of chaos going at the airports, even with the stock, right? You've seen a sharp fall coming in as well. Now look at the stock. Let's see a recovery, and now it's a bit down, but yes, significantly recovered from the day's lowest point. That's Interglobe Aviation, and this is according to sources that we are highlighting for you all as well. So keep an eye out on Interglobe Aviation for sure. But also let's keep an eye out on the markets today, right? Second day that we're seeing some bit of a gain and more gaining a momentum today in terms of the gaining side that we're seeing coming in. Nifty is holding on to gains of 0.5%, almost near the day's highest point. So no complaining on that front. You have IT that's doing well. You have banks that's managing to hold on to gains. So Nifty IT, 1% almost gain that we're seeing coming in there for the Nifty IT. Apart from that, the broader end of the market, Nifty mid-cap managing to hold on to some bit of a gain today, 0.4%, but small cap. Let's pull that up. Nifty small cap is not doing well, right? 5-6% of decline that we're seeing coming in for the Nifty small cap. And that is why, look at the advanced decline ratio, right? Despite the Nifty doing well, the advanced decline ratio obviously is in the favor of declines versus advances today. Almost 1,400 approximately, 1,600 stocks approximately on the decline side versus a 1,198 stocks on the advances that we're seeing coming in. But yes, that's how the market setup is looking like. PSU banks and IT doing well in today's trading session. So that's what we'll be keeping an eye out on. But let's get started with the show, which is where we solve all your stock related queries, right? And to do just that, today we have our independent market expert Shaina Mukaddam as well as Ashish Kyal of Wave Strategy Advisors to answer all those stock related queries. Let's move on and talk about the first query for today that is coming on Ramakrishna Forgings. We have K. Srinivasan, who's writing to us from Chennai. He is holding 125 shares of Ramakrishna Forgings at a price of 834 rupees per share, making a loss on this one right now, considerable loss, because the stock is trading at 529. Wants to know the future prospects of the stock. Shaina, Ashish, good afternoon. Let me start with you for this one, Shaina. Ramakrishna Forgings, what should the viewer do?
I would say after this big correction, it is better to continue to hold at current levels. The second quarter was very bad in terms of numbers, overall numbers. So to that extent, the stock has corrected. But if you see, they have got very good, clients. Most of the OEMs are their clients, and I think on the second half, OEMs are likely to do better. Volume numbers are picking up. And also, there is one factor where the promoters have actually subscribed to warrants just recently, and the price that they subscribed to was at 588 rupees per share. So I would say that this is a good bottom to hold it at, and the money that is raised will go in for actually putting in for some bit of expansion and growth. So I would say hold at current levels.
Current levels, that's the word. On the fundamentals, on the technicals, Ashish, Ramakrishna Forgings, what should the viewer do? Can they even look to add some more or average some more at these levels? What's your view?
Afternoon, Vinny, and all the viewers. See, if you look at Ramakrishna Forgings, yes, the stock has corrected. But before I move on, just as a disclosure, we do have holdings on the stock, and we are positive. We have a positive coverage. We can expect the stock, after forming a good base, it looks like forming a falling wedge, which is a bullish pattern on a breakout. And it has been consolidating for quite some time. Since September onward, it's moving in a very broad range. And I'm expecting that the stock should give a positive breakout. above 550 levels, there can be a very strong move back towards that 650 or 700. My recommendation would be you can average at the current levels and keep nibbling the stock as overall the outlook is positive. And on the downside, the support for the stock is around 500 levels.
Okay, surely. We'll be keeping an eye out on those levels over there. Let's move on to the next query for today. We have Prem, who's writing to us from Mumbai, holding 500 shares of Sarda Energy. Price is 609 rupees, and he's holding it since September 2025. But since then, seems like there's a decline and he's making a loss. Now, wants to know, should he hold it for 6 more months or exit the stock? Shaina?
I would say that he should continue to hold it. These are they are into metals and mining, and they are actually doing pretty well if you see their numbers. And going forward, also, if you see, the prices are for aluminum, for their ferroalloys ore, and for the ferroalloys products, the prices are moving up. We've seen it, manganese, ferro alloys, the average realizations have been moving up in the last 6 months after that big fall that we had seen last year. So at current levels, I think it makes sense to hold. Valuation wise also, it is not expensive, and the balance sheet seems to be fully funded to meet any expansions that they may have. So at current levels, I would say it is a hold.
Okay, hold for Sarda Energy at current levels. Your view on this one, Ashish? What should the viewer do? Should they hold for 6 more months? Could it recover to their buy price?
Yes, possibly, because see, Sarda Energy had a very good consolidation zone between the levels of around 480, 470, and on the downside support at around 400. It has arrived now back toward that price action support area. So there is a possibility we can start seeing some kind of a base formation and a reversal back on the upside. So continue to hold on to the stock here with a support, very important support around 430. And on the upside, once the reversal happens, we can expect it to move towards 550 levels.
Okay, keeping an eye out on that over there for Sarda Energy. Next query for today. This is an investment query for today. This is Navendu, who's writing to us from Ahmedabad. He's asking if he can buy transformers and rectifiers at the current levels, and says he's a mid to long-term investor. Shaina, what's your view? Transformers and rectifiers, would that be something that you would be looking at in the capital goods space, or are there other stocks in terms of valuation? What are you keeping an eye out on?
The transformers, I would not be investing at current, as of now. There are a couple of issues over here. One is actually pure numbers. If you saw second quarter was disappointing. So we don't have that support with us. Secondly, there is some question that the World Bank has raised regarding the integrity of the promoters. Now, while it is a very small percentage, there's just about a 200 crore order in Africa, but that, it's a small percentage of the overall order book, which is close to 6,000 crores, and largely it is domestic order book. So it's not really going to have an impact, but the World Bank has raised issues, and they have got, I think, another month, mid-Jan, they have to submit their reply. Let us see what the reply is. Let us see, the next 1 or 2 quarter numbers, and then you could look to invest. I would not invest as of now.
Okay, and your view on this one, Ashish? Transformers and rectifiers at current levels, should the viewer look to invest or wait out for some bit of a time?
No, my suggestion would be to be out of this stock, because the stock has been falling since quite some time and there is no sign of recovery. We can see a steep decline. It's best to be out of this stock, and it has broken below the support levels also. So rather than this, it's better to invest into different stocks. Something like a KEC International is a much better choice than transformers and rectifiers.
Okay. Surely, we'll keep an eye on that. KEC is a better choice than transformer and rectifiers. That's a word from Ashish over there. We have one more update that's come in. Indigo has indicated that the crew recruitment will occur in the coming days. So that is what, and this will be to achieve the compliance with the required standard that is there. Let's keep an eye out on this one as well. This is more updates that's coming in there. And obviously, the DGCA, like I mentioned before as well, has said that, they've granted Indigo a one-time temporary exemption from key phase 2 FDTL rules. And obviously, this is for the night definition, which is there and changes over there. So that is some clarification come in there. We'll keep an eye out on Indigo through the day as well. But on that note, we're going to slip into a very short break, viewers. Don't go anywhere. We'll be solving more of your stock-related queries after the break. Welcome back to your stocks on CNBC-TV18. We still have with us Shaina Mukaddam as well as Ashish Kyal to answer all those stock-related queries. Let's keep it going then. We have Kalyan Babu who's writing to us from Hyderabad. He's holding 11,000 shares of Urban Company. This is at a price of 173 rupees per share. And 8,900 shares of Sula Vineyard also at a price of 264 rupees per share. He's asking we should average both these stocks. Your view on this one, Shaina?
I don't suggest he averages either of the two as of now. Urban, see, I would say Urban Company, the valuations are expensive, very expensive, very strong platform company. But even if you forget about the profits, but even if you look at it in terms of the turnover and compare it to the EV, it's still expensive. It's about 9 times. So it's going to be a couple of quarters before we start seeing the valuation actually start looking attractive. But it is one IPO which is still above its IPO price in the recent past. But at the same time, the investor has gotten at a high price. If he's holding it for the long term, he can continue to hold and average it at, next 2-3 quarters down the line, maybe a year down the line, and then hold it for the long term. As far as Sula Wine goes, the numbers have been very disappointing. Increased competition, higher raw material costs actually have put up pressure both on their revenues as well as on the EBITDA. Now, the positive that could come over there is they are talking actually to diversify, add other products to their wines, which actually seeing the competition. Now, they are talking of doing acquisitions to expand their product portfolio. So I would wait and see what is the implications, what products they acquire, what brands, what is the implication on the balance sheet, and then I could look to add, if at all. But if you want to be in the space, I think why not go in for something like a Radico Khaitan, which has everything in place, likely to do very well over the next 2 years. So I would say just switch.
Okay, that's a word coming there. On the fundamentals, on the technicals, Ashish, Sula Vineyards, Urban Company, I know not much in terms of charts, but they want to know whether averaging is an option that is suitable for them right now.
If you look at Sula Vineyards, we can clearly see the stock has been correcting from the levels of 700, now at around 222. My suggestion would be always have some kind of a stop loss or risk management system in place. Otherwise, you will keep seeing the capital eroding every single day. So if you look at this stock, my suggestion would be to completely avoid. There is absolutely, since past many weeks also, the stock was at 250, now at 222, and there is no sign of recovery. So exit from here. And then there is no pattern which is suggesting that it's going to recover back on the upside. As far as Urban Company is concerned, again, very similar kind of a story where we can see the stock has, post the listing, the stock has corrected very sharply. And there is no sign of recovery even on the stock on the upside. So my suggestion would be to exit from Urban Company also. If you want to enter into the new age companies, maybe something like a Nykaa or something like a PTM should be much better than staying with these kind of stocks.
Okay, let's move on then to the next query. For today, we have Madhukar, who's writing to us from Hyderabad, holding 100 shares of HPL Engineering, and price is 1,020 is what they bought it at. Stock is at 108 currently. He wants to know if he should average or book his losses. For HBL Engineering, what's your view, Shaina?
I wouldn't suggest averaging. But these railway stocks, which are getting orders from railways and their whole performance execution depends on railways. The performance has been very 1 quarter up and 1 quarter down. The first quarter was very disappointing. Second quarter was excellent. Like electronics, which actually contributes now almost about 60% of their revenues, grew in multiple times. I think 7 or 8 times multiples. And you saw the effect on their profitability also. Now, if you look at, if you put all that into perspective and, take an average for the first half, I would say that if you're holding for the long term, it is a decent stock. If you're looking at, valuation in terms of the order book is about 1 time their revenues. And other valuation parameters also, it is not too expensive. So if you're holding for the long term, yes. But it is not going to give you that quarter by quarter performance. So you have to take that in stride and keep a long-term view.
Okay, long-term view. Keep a long-term view, then it's fine for HBL engineering. But Ashish, your view on the technicals, averaging option, book losses, what is your suggestion?
My suggestion would be do not average it now because the stock declined very sharply from 1040 towards 809. Looks like a third wave down, which is very sharp and violent. There is not even a single close above prior day's high since about 10-15 days. So do not average it out. There is an important support which is around 760 levels. My suggestion would be keep that as a stop loss as of now. And over the near term, maybe if you get a pullback towards 880, be out of the stock because it's only going to give a temporary pullback and then it's again going to go down.
Okay, let's move on to the next query then, and that is Tony, who's writing to us from New Delhi. He is holding 60 shares of Titagarh Rail Systems. Price is 1,225 rupees per share. He's making a loss on this one. Long-term story for this one. Shaina?
Well, this is a similar story. Any company which is, getting orders from railways and depends on them is going to see, fluctuating sort of performance. It's a small cap with market cap just below 11,000 crores. Here also, I would say, if you're keeping a long-term investment horizon, then you can continue to hold. Because, if you see also in terms of capitalization, the promoters here also had issued warrants to themselves in the last year of about at a price of about 945. So it gives you some bit of a support over there. Order book is very strong, 30,000 crores. So you have things in place. Execution is a problem. And if they can get that in place in the longer term, yes, it will be a good stock. But otherwise, you have to have a long-term holding for these type of stocks.
Okay. Ashish, a quick view on the technicals for this one?
See, the stock has corrected below its 52, 20 and 200 days average trading there. My suggestion would be hold for now, but be cautious about it. Maintain 750 as stop loss. Possibly pull back towards 900. Use that as an opportunity to be out.
Okay, thank you so much for that view there, Ashish as well as Shaina. Thank you so much for joining us in the show and hope you all have a great weekend. But with that, we're absolutely out of time on this edition of Your Stocks. 26,160 is what the Nifty is managing to hold on to. Keep an eye on that, but don't go anywhere. Up next is Closing Bell to take you through all the market actions in the last 1 hour of trade.
market headlines. To understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio.
But Asian markets, that's indicating a bit of a muted start for the Indian markets as well.
The implied open is 1.5 odd point change, so quieter and quieter into the end of the year. That's what it looks like. 26,000 is where the Nifty is at, slightly higher. The Nifty Bank is up about 0.15.
If you see in the balance sheet and P&L, there is no mistake at all. It is only in the standalone we have missed, which we clearly clarified.
The headline indices might hold steady, but I think the breadth of the market might continue to get slightly weaker.
Most of the brokerages have maintained this positive stance on Indigo despite the problems that the company has been facing for the last few days.
While the stock is facing a balance sheet and cash flow concerns with a question mark on the company's revenue growth.
Some visuals coming in. The Russian president, we have Vladimir Putin, along with Narendra Modi and the Indian president.
The MPC voted unanimously to reduce the policy repo rate by 25 basis points to 5.25%. Important thing is that we will provide sufficient liquidity to the extent it is needed.
Well, it's the RBI day, and as we were saying in the morning, the market, of course, responding in a favorable way after the decision is done. On your screen now is the other big event, which is, of course, about to kick off, which is, I guess, a joint address by Prime Minister Modi and Russian President Putin. So I think they're just sort of getting ready on the dais on stage, and we should be able to sort of listen to both leaders. I mean, it's been a day full of meetings focused on defense, trade, energy, and more. And I think, we will hear both leaders reaffirming the friendship between India and Russia and the long-term relationship which both countries have enjoyed and, would like to sort of build on. So just waiting for that to come through. We had a statement coming in from, of course, India's side earlier. That was, of course, before the bilateral meeting where, with regards to the Ukraine conflict, there was that comment that India is not neutral. India is voting for peace. But of course, I mean, in that sense, refusing to take a side one way or the other. There were some stories before suggesting that European leaders have reached out to India to sort of, try and put the word in with Russian President Putin to de-escalate as far as the Russia-Ukraine war is concerned. So just waiting for some of the remarks coming in from both leaders in just a bit.
Cooperation in the field of healthcare, medical education and science, as well as the agreement between the Food Safety and Standards Authority of India, of the Ministry of Health and Family Welfare of Republic of India and the Federal Service for Surveillance on Consumer Rights Protection and Human Well-being of the Russian Federation in the field of food safety cooperation. These two agreements will be exchanged by Mr. Mikhail Albertovich Murashko, Minister of Health of the Russian Federation, and Dr. S. Jaishankar, External Affairs Minister of India. We next have two memorandums of understandings. These include the MOU between the Ministry of Ports, Shipping and Waterways of the Republic of India and the Ministry of Transport of the Russian Federation on the training of specialists for ships operating in polar waters, and the MOU between the Ministry of Ports, Shipping and Waterways of the Republic of India and the Maritime Board of the Russian Federation. These documents will be exchanged by...
while we are waiting for, and we'll cut right, as soon as the Prime Minister Modi and President Putin start to address the press which is gathered there. But maybe we can just get some trading ideas out of the way before we go any further. Markets are up 125 points. We're coming to you from the CNBC-TV18 News studios. Surabhi and Nigel with me. Guys, afternoon.
Hi, good afternoon. Yes, that's the high-powered, press meet that's going to get underway, the public statement that will get underway shortly. But in the meantime, it's not been such a bad day for the market at all. The RBI has obliged. The bulls are feeling a lot better. And I'm in the screen, 26,150 on the Nifty. And boy, look at those NBFC stocks, some of the bank stocks. What a move after the policy.
Well, that's right. The policy has worked in favor of the bulls. You'll have to give a tick mark on all fronts. The rupee has shown some kind of stabilization. You have the bond yields as well that have cooled off a little bit. And the markets are still holding with good gains. Besides the RBI policy, I think the stock of the day on the downside has to be Keynes. The stock is almost at lower circuit. Yeah, it's almost at lower circuit the last time I checked. Management coming in there, putting out a clarification. But the street cannot buy into this, right? Your operating cash flow is negative. You can't make grave mistakes like this. Going ahead, doing some inorganic growth, and then the numbers don't add up. Your balance sheet as well as your cash flow statements are not looking good. And the street is not pardoning that at all. No exit as of now. Stock down close to around 10%. Pending shares are out there for sale.
Yeah, no, absolutely. Let's get Mitesh in for a quick couple of trades if we have the time before the address starts. Our colleague Hormuz, by the way, points out that this is the worst ever week since listing for Keynes. It's down 17%, 40% from the start of the year. Mitesh is with us. Mitesh, any thoughts on Keynes and, of course, your own trades? Mitesh, if you can hear me? Mitesh, are you there?
I think we'll have to go back.
We'll just give it a minute. Devin is with us. Maybe a quick question to Devin before we go any further. Devin, good afternoon. Good to have you with us here. We're waiting for the leaders to start speaking, but I guess we have some time. Keynes, if you want a word in on what's going on and your reading of the situation. We, of course, spoke with the management. We'll play out some sound bites in a bit.
Hi, Prashant. Good afternoon. No, well, I have not gone through in detail, so would refrain from putting any comments at this juncture.
But surely, I mean, it's jumping out on a screen, right? I mean, the kind of volumes, the kind of sort of price damage. And by the way, it is not just Keynes. If you can have some of the other names up as well. Pull up Amber if you can. Intradays. Amber is down, the last I checked, some 5.5%. Sirma is down about 4% or so. Something like Avalon is down. Okay, there is a bit of a recovery in Amber. Sirma is still down 4.5%. And some of the other names as well. I'm not sure if, what's happened with Keynes, especially in terms of cash conversion, right? Cash flow cycles, which have been tight for everyone, is coming into sharp focus. More on this in a bit, but I think we have that address which is starting. And let's cut across. Listen in.
To welcome President Putin.
स्वागत करते हुए मुझे बहुत खुशी हो रही है। उनकी यात्रा ऐसे समय हो रही है जब हमारे द्विपक्षीय संबंध कई ऐतिहासिक माइलस्टोन के दौर से गुजर रहे हैं। ठीक 25 वर्ष पहले राष्ट्रपति पुतिन ने हमारी स्ट्रेटेजिक पार्टनरशिप की नींव रखी थी। 15 वर्ष पहले 2010 में हमारी साझेदारी को स्पेशल एंड प्रिविलेज स्ट्रेटेजिक पार्टनरशिप का दर्जा मिला। पिछले 2.5 दशक से उन्होंने अपने नेतृत्व और दूरदृष्टि से इन संबंधों को निरंतर सींचा है। हर परिस्थिति में उनके नेतृत्व ने आपसी संबंधों को नई ऊंचाई दी है। भारत के प्रति इस गहरी मित्रता और अटूट प्रतिबद्धता के लिए मैं राष्ट्रपति पुतिन का, मेरे मित्र का हृदय से आभार व्यक्त करता हूं। फ्रेंड्स, पिछले 8 दशकों में विश्व में अनेक उतार चढ़ाव आए हैं। मानवता को अनेक चुनौतियों और संकटों से गुजरना पड़ा है और इन सब के बीच भी भारत रूस मित्रता एक ध्रुव तारे की तरह बनी रही है। परस्पर सम्मान और गहरे विश्वास पर टिके ये संबंध समय की हर कसौटी पर हमेशा खरे उतरे हैं। आज हमने इस नींव को और मजबूत करने के लिए सहयोग के सभी पहलुओं पर चर्चा की। आर्थिक सहयोग को नई ऊंचाइयों पर ले जाना हमारी साझी प्राथमिकता है। इसे साकार करने के लिए आज हमने 2030 तक के लिए एक इकोनॉमिक कोऑपरेशन प्रोग्राम पर सहमति बनाई है। इससे हमारा व्यापार और निवेश डाइवर्सिफाइड, बैलेंस और सस्टेनेबल बनेगा और सहयोग के क्षेत्रों में नए आयाम भी जुड़ेंगे। आज राष्ट्रपति पुतिन और मुझे इंडिया रशिया बिजनेस फोरम में शामिल होने का अवसर मिलेगा। मुझे पूरा विश्वास है कि ये मंच हमारे बिजनेस संबंधों को नई ताकत देगा। इससे एक्सपोर्ट, को प्रोडक्शन और को इनोवेशन के नए दरवाजे भी खुलेंगे। दोनों पक्ष यूरेशियन इकोनॉमिक यूनियन के साथ एफटीए के शीघ्र समापन के लिए प्रयास कर रहे हैं। कृषि और फर्टिलाइजर के क्षेत्र में हमारा करीबी सहयोग फूड सिक्योरिटी और किसान कल्याण के लिए महत्वपूर्ण है। मुझे खुशी है कि इसे आगे बढ़ाते हुए अब दोनों पक्ष साथ मिलकर यूरिया उत्पादन के प्रयास कर रहे हैं। फ्रेंड्स, दोनों देशों के बीच कनेक्टिविटी बढ़ाना हमारी मुख्य प्राथमिकता है। हम INSTC, नॉर्दर्न सी रूट, चेन्नई व्लादिवोस्टोक कॉरिडोर पर नई ऊर्जा के साथ आगे बढ़ेंगे। मुझे खुशी है कि अब हम भारत के सी फेरर्स की पोलर वाटर्स में ट्रेनिंग के लिए सहयोग करेंगे। यह आर्कटिक में हमारे सहयोग को नई ताकत तो देगा ही, साथ ही इससे भारत के युवाओं के लिए रोजगार के नए अवसर बनेंगे। उसी प्रकार से शिप बिल्डिंग में हमारा गहरा सहयोग मेक इन इंडिया को सशक्त बनाने का सामर्थ्य रखता है। यह हमारे विन विन सहयोग का एक और उत्तम उदाहरण है, जिससे जॉब्स, स्किल्स और रीजनल कनेक्टिविटी सभी को बल मिलेगा। ऊर्जा सुरक्षा भारत रूस साझेदारी का मजबूत और महत्वपूर्ण स्तंभ रहा है। सिविल न्यूक्लियर एनर्जी के क्षेत्र में हमारा दशकों पुराना सहयोग क्लीन एनर्जी की हमारी साझा प्राथमिकताओं को सार्थक बनाने में महत्वपूर्ण रहा है। हम इस विन विन सहयोग को जारी रखेंगे। क्रिटिकल मिनरल्स में हमारा सहयोग पूरे विश्व में सिक्योर और डाइवर्सिफाइड सप्लाई चेन सुनिश्चित करने के लिए महत्वपूर्ण है। इससे क्लीन एनर्जी, हाईटेक मैन्युफैक्चरिंग और न्यू एज इंडस्ट्रीज में हमारी साझेदारी को ठोस समर्थन मिलेगा। फ्रेंड्स, भारत और रूस के संबंधों में हमारे सांस्कृतिक सहयोग और पीपल टू पीपल टाइज का विशेष महत्व रहा है। दशकों से दोनों देशों के लोगों में एक दूसरे के प्रति स्नेह, सम्मान और आत्मीयता का भाव रहा है। इन संबंधों को और मजबूत करने के लिए हमने कई नए कदम उठाए हैं। हाल ही में रूस में भारत के 2 नए कॉन्सुलेट्स खोले गए हैं। इससे दोनों देशों के नागरिकों के बीच संपर्क और सुगम होगा और आपसी नजदीकियां बढ़ेगी। इस वर्ष अक्टूबर में लाखों श्रद्धालुओं को काल्मिकिया में इंटरनेशनल बुद्धिस्ट फोरम में भगवान बुद्ध के पवित्र अवशेषों का आशीर्वाद मिला। मुझे खुशी है कि शीघ्र ही हम रूसी नागरिकों के लिए निःशुल्क 30 डे ई टूरिस्ट वीजा और 30 डे ग्रुप टूरिस्ट वीजा की शुरुआत करने जा रहे हैं। मैन पावर मोबिलिटी हमारे लोगों को जोड़ने के साथ साथ दोनों देशों के लिए नई ताकत और नए अवसर क्रिएट करेगी। मुझे खुशी है कि इससे बढ़ावा देने के लिए आज 2 समझौते किए गए हैं। हम मिलकर वोकेशनल एजुकेशन, स्किलिंग और ट्रेनिंग पर भी काम करेंगे। हम दोनों देशों के स्टूडेंट्स, स्कॉलर्स और खिलाड़ियों का आदान प्रदान भी बढ़ाएंगे। फ्रेंड्स, आज हमने क्षेत्रीय और वैश्विक मुद्दों पर भी चर्चा की। यूक्रेन के संबंध में भारत ने शुरुआत से शांति का पक्ष रखा है। हम इस विषय के शांतिपूर्ण और स्थायी समाधान के लिए किए जा रहे सभी प्रयासों का स्वागत करते हैं। भारत सदैव अपना योगदान देने के लिए तैयार रहा है और आगे भी रहेगा। आतंकवाद के विरुद्ध लड़ाई में भारत और रूस ने लंबे समय से कंधा मिलाकर सहयोग किया है। पहलगाम में हुआ आतंकी हमला हो या क्रोकस सिटी हॉल पर किया गया कायरतापूर्ण आघात, इन सभी घटनाओं की जड़ एक ही है। भारत का अटल विश्वास है कि आतंकवाद मानवता के मूल्यों पर सीधा प्रहार है और इसके विरुद्ध वैश्विक एकता ही हमारी सबसे बड़ी ताकत है। भारत और रूस के बीच यूएन, G20, ब्रिक्स, SCO तथा अन्य मंचों पर करीबी सहयोग रहा है। करीबी तालमेल के साथ आगे बढ़ते हुए हम इन सभी मंचों पर अपना संवाद और सहयोग जारी रखेंगे। एक्सेलेंसी, मुझे पूरा विश्वास है कि आने वाले समय में हमारी मित्रता हमें ग्लोबल चैलेंजेस का सामना करने की शक्ति देगी और यही भरोसा हमारे साझा भविष्य को और समृद्ध करेगा। मैं एक बार फिर आपको और आपके पूरे डेलीगेशन को भारत यात्रा के लिए बहुत बहुत धन्यवाद देता हूं। स्पासिबा।
Okay, well, that is Prime Minister Modi thanking his Russian counterpart, President Putin, and of course reaffirming the strong relationship India enjoys with Russia, has enjoyed with Russia for decades now. There is a flash at the bottom of the screen. Cloudflare, which is the global cloud platform, cloud provider, is down, and it's hit lots of trading platforms like Zerodha, Grow, and others. We will try and reach out to these individual players and tell you if the extent of the disruption that many of these platforms are seeing. I mean, the online guys now are, I guess what? I mean, I think 40-50% of the market, maybe more, in terms of the daily trading volumes. I mean, these online guys would be easily more than 50%. I reckon. So an eye on this one as we reach out to some of these companies. But just to go back to the other big story, right, which is Keynes, and it started like a slow, steady drip down, and now it's full on 10.5% cut. So it was frozen 9.9%. Now of course it's open, it's gone down a bit more. Mangalam is here with what he's made of that Kotak report, what they put out in terms of specific instances of discrepancies of reporting and what the street makes of it. Mangalam, over to you.
Typically when a report like this does come by and there is clarification and management commentary that immediately happens, the stock tends to recover. But this time around, it's not. In fact, it's only sold off currently at the low point of trade, which tells you that maybe the street wants a little more in terms of clarification and understanding from the management. And there are four most important things that Kotak has highlighted in its note. And this is from their annual report analysis along with the reconciliation that they've done with some of the accounts of their subsidiaries as well. The first one is there has been a significant revenue and profit contribution coming in from their smart metering business. Here the discrepancy is that most of Iskraemeco, which is their smart metering business, their full year revenues of 620 crores and 49 crore of profit accrued after the acquisition in the second half of this year. Then they looked at Iskraemeco's full year numbers, and that meant that there was a full year profit of 60 lakh rupees, which means two things. One, that in the second half of the year, the company made a profit margin of 28%, which is unusually high for a smart metering business. And secondly, the first half was a 48 crore rupee loss, now which is fairly uncharacteristic because FY24 was profitable and there was no evident cost driver in the first half of FY25 which explains such a big cost swing. The second part, there was ambiguous accounting treatment under the goodwill reserve adjustment for acquisition. So the company had acquired a couple of companies for about 883 million rupees or 88 crore rupees, for which ideally they should have recognized about 114 crores as goodwill, but that wasn't the case to be. In fact, in the annual report, the goodwill was actually netted off against capital reserves, and there was a sharp addition in intangibles of around 180 crores as well for technical know-how. So that was ambiguous. The third part, there was a lack of consistency in related party transactions. So they looked at Iskraemeco's numbers, and that said that there were purchases of 180 crore made from Keynes, and the same wasn't reflected in Keynes related party disclosures. And to this, the company clarified that this was an inadvertent error made by them and they will fix it. But remember, these are accounting errors and a big amount as well at that. Year-end payables to Keynes of around 320 crores and receivables from Keynes at around 190 crores. All of that were not reflected in Keynes related party transactions. There was a 22-day increase in cash conversion cycle, high capex leading to negative free cash flow as well. And the fourth important point among the many that they made, the one that stood out was there was a variance in cash flow statement versus asset addition. If you look at the FY24 cash flow statement, it reports a purchase of 950 crore worth fixed assets. And this wasn't reconciling with the assets that were made or the additions that were made to the balance sheet to the tune of 770 crores. So these are factors which has the street spooked. The stock now down by 11%.
Right. Mangalam, just on that point, which is not common, it's a broader point, which is that all these companies, right, and we should put up the intradays of Syrma, Amber, PG Electroplast, they're all aggressively expanding, which means that I don't think any of them make positive free cash flows. They're all in the negative right now.
Right.
They're all taking a bit of a hit, 4-5%. Sometimes when an issue is kind of highlighted and comes to the fore, I mean, it shows up in other places as well. You reckon that's what's happening with others? Have you heard anything?
I would suppose that was something that will happen with others as well. But Keynes is a very specific case, right? So now it may prompt people to perhaps take some profits off on the others as well. But no such specific instance that we've seen in all the others that was...
No, I don't mean any discrepancy. I just mean that one point.
Yeah,
that they're all... they don't make free cash flow, that's all.
Theoretically, Prashant, you know, the one thing that you learn is that when everything goes down, the only thing that goes up is correlation. And that's perhaps that is happening right now.
Yeah, no, absolutely. I think PGL down 5.5. Amber is lower, 4%. And Syrma is also taking a bit of a knock. I think Deven is... let's play out the soundbite of Keynes. We spoke with him in the morning. And then we'll ask Deven about the others. He doesn't have a view on Keynes, but maybe the others. Let's play that soundbite.
It is only in the standalone we have missed, which we clearly clarified.
Okay.
Notes to accounts, it is missing, that's all. That is also in one company. But if you see the P&L as well as in the balance sheet, it is all appearing. There is no inconsistency, whatever he is saying. However, we agree that there is a miss there, and which we'll take corrective action. See, this is an age receivable in Iskraemeco books. Whatever, when we acquired itself, it was there, which we'll be reconciling and closing it.
Okay. By when, sir?
By this financial year end, we should be able to close it. See, this is a capital-intensive business. However, we are working, and by the financial year end, we will bring it to sub-90 days cash cycle. So with that, it will become positive. And we are having plans put in place to achieve this.
By when, sir, will it come down to less than 90 days?
By this year end.
And you turn free cash flow positive, operating cash flow positive?
Yes.
By when?
By this March, it will be OCF positive.
Okay, so that was the promise that their working capital days will improve. They will turn free cash flow positive by the end of the current fiscal year. But none of that, including, of course, that clarification to the exchanges, none of that has really helped. In fact, the stock continues to struggle. It's taken the others down with it. So that's one big sector. By the way, just noticing a spike on the screen on fertilizer stocks. So just a reference over here. National Fertilizer, all of them, Madras Fertilizer, RCF, all the stocks are suddenly shooting through the roof. Not sure if there's any immediate policy move, but anyway, this is what's playing out for the time being. Devin, before we let you go, shorter conversation today. Of course, the sector of the day on the upside obviously has been banks and NBFCs, thanks to the RBI. Is not just today's policy, but I think a lot of people are reading between the lines, and they think that a rate cut even in February could very much happen. Within the NBFC pack in particular, what would you like? Say big stocks like Shriram Finance, M&M Finance, Bajaj Finance, they're all surging. Are they still a buy, or would you rather have some tier 2 picks?
Yeah, Sulvi, good afternoon. Well, I think the NBFC space will continue to perform well, largely because of higher amount of growth which they are experiencing with their retail consumer. And Bajaj Finance in particular, I think, shows a distinct character of growing faster compared to their peers. They have been successful in integrating the fintech on the product platform, as a result of which I think they have been successful in growing the loan book faster, at the same time managing significantly higher amount of NIM. So to a greater extent, even if in a shorter duration, if there is a squeeze on NIM, I think it does not affect them beyond a point, because on one side, the growth in the AUM book is faster, and on the other side, I think they're covering sufficiently with the margin under the subvention pricing product mechanism that they're employing. So I believe that I think this is one company which is a distinctly different character compared to others, and I think one should remain long on to this company.
By the way, I just want to point out, the team is pointing out in all the bilateral agreements that have been signed, there's one on fertilizers as well. We don't have exact contours, have to wait for the specifications once those press release and the notifications are out. But there is some sort of a fertilizer agreement between India and Russia, and that's leading to a big bump up on these stocks right now. All right, Devin, we'll let you go today. Thank you so much for joining in. Couldn't take too many questions because just too many things going on, but you have a good weekend, and we look forward to connecting again soon. With that, let's turn to the other big story that's been playing out for the last couple of days, including today. And the latest is that the DGCA seems to be willing to give Indigo a one-time exemption to get these scenes of chaos finally under control that have been playing out across the country. We have, I think, Shivani joining in. Shivani, I think, the last we heard, what you told us was complete cancellation, no flights out of Delhi. I think disruptions at Mumbai as well. Tell us what's going on, and is there some agreement now finally between the airline and DGCA?
Well, Surbhi, absolutely. There has been chaos and disruptions across major airports across India in the last 2 to 3 days, and now what we are understanding from sources, and DGCA has come out with major, DGCA is willing to change a lot of rules for Indigo. Now, the DGCA has taken major steps today to ease the pressure on India's aviation system, starting with the crucial relaxation specifically for Indigo. The regulator has granted Indigo a one-time temporary exemption from parts of the new FDTL norms for its A320 fleet. This includes rolling back the night duty window to the earlier midnight to 5 a.m. instead of the current midnight to 6 a.m. This exemption is being given till February, 10th of February, and the regulator emphasized that this exemption is only to stabilize operations. With that, in a separate move aimed at all the airlines, not just at Indigo, DGCA has withdrawn the rule that barred substitution of weekly rest with leaves for pilots and crew. Until now, weekly rest for crew could not be replaced under any circumstances. With this new rule now put on hold, airlines get much more flexibility to manage rosters during this period of heavy disruption. So both these decisions come just a day after Indigo flagged severe roster strain under the new FDTL norms with the DGCA meeting yesterday. The regulator is clearly opening up temporary flexibility to help Indigo bring operations back on track as quickly as possible.
Okay, all right, Shivani, thanks very much. And hopefully this restores at least some order, even as the airline finally, increases the pace of their hiring. Let's take a break on that note. Thank you for joining in. We'll take a break, come back on the other side, and we'll have Rupen Rajguru from Julius Baer joining in with some market perspective. Welcome back. So the market continues to hold on to a bulk of its gains, at least at the large cap screen. Mid caps are a little wobbly. The mid cap index was slipping, but now it's sort of trying to find its feet once again. And banks continue to be the big leaders. The Bank Nifty is now pushing almost a 1% gain, so it's been good. Before we move on and introduce our next guest on the show, here's something interesting that Hormuz has put together for us. Now, shareholder lock-ins of a lot of recent listings will be coming to an end sometime next week. And Hormuz tracks this very, very carefully. And I know for some of these very high-profile IPOs, Hormuz, even I want to see what happens when the big guys are allowed to exit. Do they exit or do they stay? Tell us.
Well, not mandatorily so, but yes, of course. The big, much talked about IPOs of last month and from October, they will face their first big test next week when their shareholder lock-in comes to an end, be it Lenskart, Pine Labs, Grow, Urban Company. Urban Company, of course, will be the second instance. But for Pine Labs will be facing its shareholder lock-in end twice next week. It'll start with the first one that ends on Monday. We had close to 20 million shares freeing up 2% outstanding, close to around 480 crore rupee worth of shares that will free up for trade on Monday. The stock as of now is up around 9-10% from its issue price. Now, Lenskart's lock-in also ends on Monday. The fact that shares worth almost close to 1700 crores will free up for trade, almost 41 million shares, and the stock has continued to remain around its IPO price of around 402 rupees as well. Now, Grow, the stock has done fairly okay so far. It's up 50% from its IPO price. It will have close to 150 million shares freeing up. The value of those shares is well over 2200 crore rupees. So keep Grow on your radar as well. The second instance of Pine Lab shareholder lock-in ending comes on Friday, which is the 12th. And there we'll see close to 40 million shares free up for trade, 3% outstanding. And that value is almost close to 1,000 crore rupees. And Urban Company, of course, this will be their 3-month shareholder lock-in that will be ending. Here you will see around 41.5 million shares free up, 3% outstanding, 530 crore worth of shares, and the stock is up around 24% from its IPO price. You know, singling Grow and Urban Company out because the way with which they went up from their issue price within almost 5-6 days, they had almost doubled. Now take a look at the fall that they have had from those post-listing highs. Grow is down 23%, Urban Company down even worse, down 36% from its post-listing high, which was around 200 rupees. So it will be the first big test for a lot of these companies, particularly so for Grow, Pine Labs, Lenskart, and a lot of these new listings.
And Hormuz is, got all the stats, historical, current, everything on fingertips. It keeps us updated with a lot of that data point. Very interesting. Thanks very much, Hormuz, and we'll track this one as this comes up next week. All of these, actually. Rupen Rajguru is with us, Head of Equity Investment Strategy at Julius Baer. Rupen, good to have you here. You know, we were earlier discussing the fall in all EMS companies. Keynes, of course, is much discussed. The others less so. But the others are also down 4-5% in some cases. Do you think, Rupen, this is, growth rates are 50%, 100%, even 100% in some cases. 26 over 25 in some cases. FY 26 over 25. Maybe it'll slow down in 27 and 28. But focus so far has been on growth rates exclusively. How fast can you grow? Cash flows not so much. Do you think that's coming into the spotlight? I'm just trying to connect a thread through what's happened with Keynes and some of the others today.
Hey, hi, afternoon, Prashant. So whenever any sector or any company grows at a very high pace, it's always important to look through the lens from a cash flow perspective. So while I'll not get into the details of, the kind of aggressive accounting which, one of the sell-side broker has highlighted, but typically, and as you rightly said, when there is one instance, there is a general feeling that, the similar things would have been done by others, and hence there is this market reaction. And if I were to just recall your memory, while it's not talked about, but some time back, I know the talk of the town was, the RBI AQR review from a bank's perspective, right? Whenever RBI came out with certain things on, the way some banks have done underprovided as compared to what they should have. And we have seen not only that bank, but similar banks with high growth also had a similar market reaction. So moving that aside, purely from a EMS perspective, yes, whenever there is high growth, and to top it up, the margins of these companies are also pretty low. So we have to be cognizant of, what kind of margins these companies are making. And now clearly the focus of all the investors also would be on the actual receivables, cash flows, and all other parameters. So yes, whenever any stock is priced to perfection and builds in a lot of growth, a small news, negative news it's not that the growth has got punctured, but definitely the market is now looking it from a different lens and might derate it to some extent, and that's what is exactly happening.
All right. Hi, Rupen. Good to see you. And Rupen, actually, Q4 has been quite a contra quarter, right? India has outperformed emerging markets after underperforming for the first 3 quarters. And tech has come back. What do you have to say about that? Do you think things will start looking up from here? And your view on tech?
Yeah, hi, Nigel. Afternoon. I think that's the usual case, and if I were to just step back and look through, from any investor, and particularly a global investor standpoint, what are the 2-3 things that they look into? A, whether a particular asset is a macro trade. So probably globally this year, the macro trade has been gold. 2, whether it's a momentum trade. And AI is definitely, and anything and everything related to AI has been a momentum trade. And 3 is mispricing. So probably China was a mispricing trade. So India was not featuring anywhere, and hence we have been seeing a constant outflows. But yes, beyond the point, when the earnings growth trajectory was starting to move up, definitely there is a scope of a little bit of mean reversion, and which is, as you very rightly pointed out, India in the fourth quarter, while to shorter time period, India has outperformed EMs and even US, and IT index has come back into reckoning. And particularly on IT, Nigel, if you recollect a couple of months back, what I had shared in your channel, that typically IT as a sector usually witnesses the highest what you call differential between 52-week high and 52-week low. So any year you take into consideration the large IT stocks, also the difference between 52-week high and low is around anywhere between 30 and 40%. And from a valuation standpoint, that 18 to 22 band is the band at which typically it trades when there is no growth focus. So when probably a few months back it had gone to around 19 odd P multiple purely from a dividend deal and all other perspective, there was a good sounding base. And probably in the near term also the rupee tailwind has helped, and that has led to it going back to 2021 odd P for some of these stocks. From here on, probably in the extremely near term, the news flow of INR will keep the IT stock excited, which is probably exactly happening right now. But now they have reached that fair valuation, and now I think the more positive commentary coming from the companies will only take it higher. So probably if they are in their upper band in the extremely near term, and it might consolidate here and even correct if there are no positive news flows from it.
All right, Rupen, sorry, apologies for this, but a short but effective chat. Thanks a lot for joining in, Rupen, and filling us in with all of those details. I don't know whether we speak later this year, but have a good festive season and then catch up in 2026 again. All right, it's that time of the show when Nimesh joins in to tell us what is he picking up in D-Street Chatter. Nimesh, I believe a lot of dealers have started packing their bags, getting ready for the holidays, but today, what are you picking up?
A decent recovery, Nigel, post the RBI policy, largely led by the financial names, the rate sensitive, so to speak. So NBFCs, real estate names, all have seen a bit of a pullback or a short covering rally. But NBFC stands out because there is a bit of buying as well in select NBFC names from the larger institutions today. So that clearly is from a flow perspective. Broadly, the flows have been mixed. But again, it may look large because of the ITC block. Remember, the seller is an FDI, but in terms of buyers, institutional names will come largely dominated by domestic funds. So the DI number could look large because of the ITC block, ITC hotels block there. Broader market pain continues. So a lot of, even after a big underperformance, there is a lot of drawdown in many of the mid-cap and small-cap names. So that's the pain which is still there from a broader market perspective. I guess technically, though, it looks like there is a bit of a breakout in the Nifty. And if the Nifty closes below, above 26,250, the sense is that could be further short covering as well. So it's a two-side market. The Nifty is virtually at an all-time high, but the pain in the broader market continues.
Nimesh, in terms of individual names, what's on your list today?
So the first stock on my list is Bharti Airtel. Within the telecom names, this is one stock which is well bid by institutions. There are strong buy flows as well of late. And I understand a leading domestic mutual fund is an aggressive buyer in Bharti Airtel in the last couple of days. For the entire telecom sector, the next big trigger would be a potential tariff hike, which Citi is anticipating that can come in this month itself. So that's a buzz there or a trigger for the telecom stocks to do well. The second name is Godrej Industries. This is interesting. You know, in line with the broader market underperformance, even Godrej Industries has fallen sharply from the recent highs. But looks like the selling pressure from a leading FI is largely over. So a bit of a green tick today, but largely the fact that the FI selling is over in Godrej Industries. The third name is Aavas Financials. There was a block in today's trade, and after that you've seen a bit of recovery as well. I understand the seller was an FII who's looking to merge into the new entity. So that selling seems to be largely over in Aavas Financials, and hence you've seen a bit of an intraday pullback in that name today.
Okay, all right. Thanks a lot for that, Nimesh. Well, just one more stock keep on your radar is Keynes Technology. As we know, the stock is down. Open interest built up on that sort of a base is more than 30%. And as of current reading, the stock could potentially go into the F&O ban. It's in that vicinity of around 94-95% of MWPL. So keep an eye out on that one. There's a probability it goes into the F&O ban. It's very, very close. Tell you what, slip into a short break, come back. We'll continue to focus on markets. We'll also get you some technical calls. Welcome back. Well, a few stocks actually are spiking up. Capillary Technologies, that's a stock that's actually recovered on very large volumes. At the start of this hour, it was in the red. That's moved into the green. And Grow as well has suddenly seen a sharp uptick. Stock did see some bit of a pullback. And now that one as well has spiked up. I think we should get both those two names up for you on the screen. One more name, I think Ganesha Ecosphere. Another stock that's seen a very, very sharp correction. That's pullback as well. Currently moved to the high point of the day. Well, let's get in Mitesh Thakkar back on the show. Mitesh, what's the trade you have for us?
Yeah. Well, Indus Tower is something, which is closing with good setup and strength at the day's high. So BTST here with the stop at 412, so 424. I think PGL was discussed. It's a negative stock chart in the short term. So take a estimate there. Stop at 562 for targets of 540. There, of course, yeah.
Okay, all right, got that. Thanks very much, Mitesh, for all the trading cues and the ideas. You have a good weekend. We'll catch you again on Monday. Dharmesh Kant, Head of Research at Chola Securities, is joining in. Dharmesh, good to have you on the show. First things first, Keynes, what a casualty. And now it's taking down its other peers with it. What have you made of everything that's gone on? The clarification they gave to the exchange. To us, they said that they'll become free cash flow positive. It's only one line item where there was a discrepancy. Does it, cut ice with you?
Yeah, good afternoon, Surabhi. Thanks for having me for the show. I mean, see, I would start it in a different way. I will look at the, the profit trajectory of Keynes, 23, 100% growth, 24, again, 100% growth. 25, it was 60%, and this morning when the management came on different channels, they were guiding for 45 to 50% kind of a growth. So going forward, this growth is definitely tapering. It will come down to 25-20% kind of a growth trajectory. And let's not forget, L&T is also venturing into EMS space. So that's a big overhang for all the EMS players who are there, who are enjoying high valuation multiples. So this disconnect which was there on the valuation multiples, they were enjoying, and the kind of growth trajectory they would be making on was to be sorted out, and this is what is happening. And there were many fence sitters as a fund managers and investors, HNIs, who were thinking whether to exit the space or book profits. And when such kind of a reports roll out, it definitely pushes the decision faster and the selling happens. I think today the reaction is more to do with that, and some of the opportunist traders who are trying to take advantage of it. Having said that, I mean, finally, this has to settle down because it's an audited report. And I mean, the clarification from the management on each point and the discrepancy, some of which they have accepted, has to be seen forward to. The only, gray point is, one is the growth trajectory, the second is the goodwill, which is always a gray kind of a consideration. If it happens between related party transactions, the gray color gets more thicker. And the third is the working capital stress. I think working capital stress they will get through. As far as buying at this juncture or thinking of buying, I would advise not to. Wait for some more time and more clarity and clarification to come through, and leave it aside. Forget Keynes as of now.
Okay, all right. We'll want to know then what to buy, Dharmesh. I'll tell you what, we'll slip into a short break. Come back. Dharmesh should have a couple of picks for us. Stay tuned.
Welcome back. Well, it's turning out to be a good end to the week at least, and the bulls have managed to defend not just 26,000 but almost closing in on 26,200 as we are closing out. Dharmesh, so let's ask you for some ideas. Anything interesting? Any new stock? Actually, didn't ask you. Indigo, Interglobe Aviation. Is it a time to buy in all this uncertainty or stay away?
No, sorry. I think the uncertainty is there. I mean, they have given a window of time, but the thing is, post that window, this rule will definitely get implemented. Then what? I mean, after 2 months, 3 months, are they in a position to get the pilots, a sufficient number of pilots to run and the crew members to run the flights or not? So if that capacity gets diluted, so to that extent, the adjustment has to be there in the P&L projections. So I think it will languish here till the clarity emerges. But for punters, I mean, if you want to take a punt, then definitely one can try and go ahead and get a dig into Indigo. I think they must be setting on some plans. But let's see. My own sense is there would be a dilution of 5 to 10% in the earnings for next 1 year.
Okay, then give us any fresh idea, Dharmesh, that you'll have.
Yeah, thanks, Sahil. Today we have initiated, initiating coverage on Power Mech. This is a company which is primarily into civil construction and EPC of thermal power projects, and they are sitting on a large order book of 53,000 odd crores. 40,000 crores is from the MDO division, which is newly started. The entire impact will start flowing in from FY 28 and 29 onwards. But the existing projects are good enough to take care of a 25% kind of a profitability CAGR. They are also into operations and maintenance of the thermal power plants. So 80 megawatts of new capacities are coming, and 63 megawatt will go for overall of the thermal power plant. So the trajectory remains fairly strong. They have compounded earnings for around 30% for last 3 years. Going forward, we think 25% is doable. And we are projecting a PAT of around 670 crores for FY28. Presently, they reported 348 kind of a PAT crores. So even if you give it a valuation multiple of 12 PE, with a operating margin of 11-12 and ROE of 18%, the target price comes to be 2650. So this is the initial target price. As the number sold by, we'll keep on revising the target. Management is hopeful of getting 10,000 crores of order book by end of FY26. 5,000 crores they have already got.
Power Mech, one of those stocks that did very well and then fell off the cliff. Dharmesh is quite positive. I think, Dharmesh, was the target price you said?
Yeah, to begin with, initially we have started with a target price of 2650. This is for a medium-term target, yeah.
All right, Dharmesh, thanks a lot for joining in. Wishing you a rocking evening and a good weekend as well. Catch up next week.
Thank you so much.
All right, well, that's the day when the markets go home in the green. The Nifty trades with a gain of close to around 150 points, and we end above that 26,180 odd mark. The one that powered its way back today was the Nifty Bank. The good point this week was both the Nifty and the Nifty Bank, they showed some fight when that 20 DMA was in doubt. And that's the reason why we go home with gains in otherwise a bit of a wobbly week. Shriram Finance stock was up close to around 3%. So good move is what we saw in today's trading session. SBI stood out 2.5% higher out there. And Bajaj Finserv as well, up close to 2%. From the auto names, Maruti Suzuki, well, that one was up and about. HUL stock appears it was down close to 5%, but its business, ice cream business, moved out, and that's why there was an adjustment on that front. So, adjusted for that, I think the stock was down only around 2% or thereabouts. Eternal was down about 1.5%, and Interglobe Aviation, shareholders not happy, customers not happy. Hopefully, things do get resolved. The biggest casualty on the downside for today's trading session was, Keynes, those doubts coming into play with regard to their cash flows, the receivable days, and the inorganic growth, things not summing up. That was the big casualty today. Finiotex Chemicals, inorganic growth is what they've done. The street liked what they saw. The stock went home with gains of around 6%. And Grow, wobbling away in today's trading session, but that stock as well ended with a gain of close to around 4%. Add to the list, another stock that did pretty well, CMAC. There was positive news flow, volumes quite high on that particular name as well. So we go home on Friday with some green.
Well, it's a wrap, Nigel, on this edition of Closing Bell. From all of us here, goodbye. Thanks for staying with us, but we'll see you shortly after a quick break on the Editors Roundtable in just a bit.
Nifty and the Sensex have ended a volatile week absolutely flat, though Friday was a lot better. Mid-caps are down about 1%. IT has been the top gaining sector this week. Over the next 30 minutes, we will decode the week gone by on Dalal Street and, of course, put the spotlight on RBI's monetary policy decision, its impact on the market, and whether these newfound rate cut hopes for February, whether they're well placed or not. And of course, we'll also decode what top brokerages are expecting from the market in 2026. Hello and welcome to this edition of Editors Roundtable. I'm Surabhi Upadhyay, and as always, with me, Nimesh, Prashant, Nigel. And joining us in the newsrooms today is Sanjay Parak of Soham Asset Managers. Thank you, Sanjay, so much for joining in. We're hoping now you're the good luck charm. Because, see, you decided to come to the office today and the bulls managed to take things above 26,100 once again.
Right.
So, ab aage kya?
So, RBI has done the heavy lifting and government also has done their bit. But I think still, state government is still not spending as much and it's all gone towards the populist schemes. And still the economy, and I mean, we have to read also that RBI has cut because the growth is still missing, and despite the rupee pressure. So I think, you know, when you see steel, you see power, you see cement, the growth is still missing. So I think they need to stimulate the economy further, and that's what they're doing.
That state government point is an important one, right? It doesn't get talked about because we look at the central. Yeah. But I was looking at the numbers. The central collection of GST is up only 1%. Yes. 1%. Right. Whereas the total GST number is up 12%. This is year to date. Where is that money gone? It has gone devolution to states, refunds, etc. So money is going to the states. Yeah. But it's going, I guess, into
but unfortunately, the states are not spending on capex now. That's
they're spending on
Ladki Bahan and everything else. So I think that's been a bit of a mismatch, right? And that's showing up in the mid-cap underperformance as well. A lot of the stocks, especially in infra names, they all are worried about, you know, receivables which are coming from the state government. So I think that's a valid point that, you know.
The other point, guys, is the RBI, right? I mean, you got to think about it. Rupee at 90 and you get a cut.
Yeah, you get a cut.
Right? I mean,
with dovish language.
With dovish language.
With dovish tones.
So it's quite, I mean, not the usual. And I think that's the right thing to do, as many have pointed out. Sajid Chunai was with us and he was saying, well, you should look at the Forex and the rate thing separately. Yeah. And I think that's what they've done. But still, 90 and a 25 basis point cut. Yes. Sanjay, you think this is the one? This is done now, or you think
I think
this is more?
See, the governor is very, very progressive and it's pro-growth. And I mean, he's aware that we need to stimulate growth. So I'll not be surprised that there could be one more at 25 bips in the next 3 months. You know, if growth doesn't revive, then and inflation is on his side. You know, and we are in a broadly a Goldilocks scenario. Now we are seeing pressure on balance of payment and fisc, because second half we will not have room to spend big way. So that's the one more ammunition he has of one more rate cut if needed.
On the rupee, Sanjay, you think it is done? Books closed for 2025 with what is done? I mean, it's logical also because a lot of foreign banks, etc., will close books, go away for the last 15 days, yes. Right? So that perhaps that pressure also will be not there. So
it's a tough one, but you know, see the pressure on balance of payment is there. If you see the first half, it's $16 billion negative, which is on the reserves. So it's not that we are out of control, and I think RBI has more ammunition. Today you saw a swap line being opened. So if required, they may, you know, still do a few more things to stabilize rupee. And I think we are in control that way. But largely, I think we are done. It's tough to call on Forex.
Well, yeah.
Sanjay, but, you know, how would you position yourself then? You know, as you're saying that, you know, Prashant just made the point that collections haven't been as much. Capex spend has been beautiful in the first half of the year. Now, in all probability, that slows down in the second half of the year as well. How do you position yourself? Consumption could get a bit of a boost. Discretionary consumption is something that people have been like, while Capex slows down. I think a couple of those names you all liked as well from the intra space.
Yes.
So incremental money, how will you allocate?
So we position with domestic discretionary financials because they're reasonable on valuation, logistics, telecom, capital goods. So all the domestic plays we are positive and it's broadly working for us.
So telecom, what do you like?
So telecom, we are big overweight on Bharti, and we have Indus Tower both.
Okay.
Which we like because we believe there will be a solution to Vodafone. It will be a slow process, but ultimately there will be a solution.
And on financials, what are you all playing? Are you all playing the NBFCs? Are you all playing the larger private sector banks, PSUs, or the smaller banks? There's suddenly, a lot of interest, a lot of money as well as coming their way.
Right. So we have all larger banks: SBI, ICICI, Axis, and SBI, and HDFC Bank, and then we recently increased Canara Bank. So we have all larger banks, and in NBFCs we have Bajaj Finance, India Shelter, which is a housing finance play, and then broking entity Angel. That's the way.
But Sanjay, if you're expecting another 25 basis point rate cut, that would mean that there will be further pressure on NIM, right? Especially for private banks.
Yes.
How do you navigate in that? I mean,
so this year, most of the street is not expecting anything major in terms of NI and NMs. And surprising, the second quarter there was a pressure, and yet the stocks actually went up.
Yeah.
So I think it's all taken in the stride that whatever damage has to happen on NI and NIMs will happen this year, but that will be a base for next year.
Sure.
So when you see next year, they look quite better.
In that financial space, the fact that we've seen so much of FDI coming in, RBL Bank, Samman Capital, anything that strikes you in that space, the mid-sized banks which potentially may see more FDI investments?
Right. So, see, it's certainly, if you see the RBL Bank or Yes Bank, or even recently what happened to JSW Steel, I'm digressing, but it's big.
Yeah.
It says about a person cutting a check on EV of 53,000 crores for 4.5 million ton.
Right.
So it is really positive from FDI or from that perspective. But, all these where they've invested, the ROEs are going to be back-ended. So we would rather want to be at a place where now, and the divergence in return is not large. That's the point. So we are in the larger cap space.
Since you digressed a little bit, let me take you a little bit further, right? Since you spoke about ferrous.
Yeah.
Let's talk about non-ferrous. Aluminium, I put out a piece actually. I'm not sure whether you had a look on that. Global aluminium demand could go up by around 3 to 4%. Supply will not go up by more than 1%, because China is already at 97% ballpark. And, whether you talk about EV, you talk about data center, you talk about the grid, everywhere you require aluminium consumption. Now, after a while, we could have 2 to 3 years of deficit of aluminium. What is your call on that? I recall that, Vedanta is something that you have liked, I think, from 400 rupees, or maybe even lower than that. And then it went through a painful period, but now things are showing up. So are you all positive on aluminium?
You're totally bang on. I mean, see, ferrous, at least you have a worry on China. But in non-ferrous, you're not going to see China dumping aluminum. And you're absolutely right, the capacity creation is going to be less. The new applications are coming in, lightweight vehicles.
Solar.
Battery storage. Even in battery storage, you need aluminum. So there is going to be need, and then supply is not coming in. So both Vedanta and Hindalco will do well. It's just that, we are positioned with Vedanta, and Hindalco also at a price would look well because we are very positive on the aluminum cycle.
Okay, all right. Just one fear I have is, when aluminum prices move up to a particular extent, some of those smelters that were shut will say, okay, now the dynamics are working in our favor with the cost of production at $2,400. And if LME moves to, say, $3,000 odd, that could be one risk. But that supply risk of China, at least, that is out of the way because they're at 44 million tons out of the 45 million tons of capacity that they have.
Absolutely.
Sanjay, we can talk about the other big story, right? Canes.
I was just going to get
massive. The big correction, Sanjay. What did you make of that situation? And then all the others also sold off today. All the other EMS players, PGEL, Amber, Sirma. So what's happening there?
Yeah, I think, one is the character of the business. I mean, getting first on Canes, we all read the report, and I'll initially tell it's aggressive accounting. Not go to the governance aspect of it. But I think the aggressive accounting is clearly visible, for sure. And then the character of business in terms of the working capital cycle, the ROCs, because of the longer working capital cycle. And that has been prevalent in this space. So the street was buying growth and not looking at balance sheet. Yeah. But now for 40-50% growth and 15-16% ROC, will consistently need capital actually. So that is a little bit of what we need to watch, the balance sheets, not just the revenue statement.
But the question is that is this an isolated event with one company, and you can argue that maybe accounting should have been more prudent, Or does it become a trigger for a bit of a derating? Because what we saw on stocks today was that, and we know the kind of valuations that they have traded at.
Right.
So then what would your advice be to people who already have investments here?
Right. So, you know, we used to own Sirma, and we invested at one point and said we made our money, we sold off. Again last year we bought in, and we said at 45 times we're not comfortable, and we made our money, we sold off. So Keynes was a leader at maybe 60, 70 times. And then you see growth getting derailed or the character of the business getting weaker does have an impact on valuation. And we've seen that in even Dixon. Well, there's no problem on that side, but you've seen from 18 to 13.5 because there is some growth challenge ahead. I mean, and growth will still be high, but not as expected.
It was 100% last year.
Yeah.
Now
So
it'll be
30%, 35%, and then margins are not going to look up, you know.
Correct.
It's largely contributed by mobile. So a little bit of concern and that exuberance on pricing valuation comes down, and that's a...
You know, which brings me to another issue altogether of the market and what we're feeling right now. And Nimesh did a piece on this last week as well. Last week we hit the all-time high. Never before have I seen in 20 years an all-time high, which doesn't feel like an all-time high, right? Because the broader market has been really pained, and stocks are very quick to sell off as well. EMS is one sector we've discussed. We can discuss so many others. When QSR, nothing is really moving. FMCG, nothing is really moving. And the broader market pain. Do you see that changing? The only missing piece of the puzzle is now this India-US trade deal. And there are indications, at least some conversations, that it may happen by the end of this year, in which case everybody come back from your leaves. But the point is, do you see the mid-cap market texture changing?
No, so, you know, ours is large-cap dominated fund, right? We have 75% average large-cap. But I was telling my team that actually now, in the next 3 months, we need to look at now mid and small caps.
Yeah.
Because now will be the opportunity when somebody else is selling out, there's some redemption, and you get that price-value gap that you seek. And businesses, a lot of businesses are good. We met a lot of them, and all new type of businesses. Our worry was valuation. So now I believe actually one should look hard, deep hard, work hard and get that price-value gap that you... The problem in mid and small cap was valuation in a lot of cases. That is getting corrected.
Anything you've added in from that space recently?
No, not yet in the mid and small.
Still in the looking phase.
Yeah,
I remember we spoke about this. I said, what are you observing? He said, I'll tell you when I have something more concrete.
You know, I'll tell you what, Sanjay started sounding a little bit more optimistic. You know, I feel bad for Surbhi not feeling too good in 20 years about, you know, the portfolios are not feeling like they're all time.
So let's liven up. Would be, you know.
Let's liven up the mood now. Nimesh, a lot of brokerages, they are writing that the earnings growth is going to come. 2026 is going to be beautiful. And hopefully our portfolios as well feel like rock and roll. Tell us what you put in
Well,
there.
Nigel, I'm not too sure about the portfolios, but at the index level, at least there is a hope, ray of hope is what I'm going to say. And everybody's expecting 12 to 14% kind of returns. And I think that's largely because of earnings.
You're going to start by matching his step.
Down step.
Let me go this. So here's the outlook for 2026 as to what a lot of brokerages are saying. It's basically a ray of hope. After a disappointment in 25, there is a hope that maybe 26 will be a good year in terms of return. So I've just mapped across what the targets of a lot of brokerages have written. BofA is at 29,000, JP Morgan is at 30,000, Nomura is at 29,300. This essentially means a 12 to 13% return next year as far as Nifty is concerned. So that's the Nifty target across most of the brokerages. Now, again, you know, the whole thesis of they turning bullish is basically the revival of earnings. So what is going to drive the optimism? BofA says that the upside in the earnings is going to let the markets rally, and basically they believe that the earnings cut, the Nifty earnings cut, is largely behind, and growth should accelerate from here on. In fact, while all this, they are not expecting too much of valuation expansion. So whatever rally has to come has to be backed by earnings. Now. Similar is a view from JP Morgan as well. Even they're expecting the MSCI India earnings to be 13% in calendar year 26 and nearly 14% in calendar year 27. So again, the whole thesis of this rally is going to be backed by earnings. Macquarie believes that most of the market is coming out of hibernation. The outperformance is again going to be backed by earnings growth and revival in growth as well. So that's been the key trigger as to what even Macquarie believes. The recovery in consumption spends and resumption of FI flows could further add to the upside in next year. So that's the view there. Nomura also has a target of 29,300 on the Nifty for next year, and they believe that there is, while the macros are sanguine, they remain very selective. It's a good advice from Macquarie that they are suggesting investors not to get carried away and buy into richly valued narrative stocks. So that's a good advice as far as Nomura is concerned. Now, what are they betting on in terms of sector bets? BofA is basically betting on more of large caps over mid caps and small caps. And within these sectors, they are overweight on rate sensitives as well as in consumption, but they are very, very careful and underweight on capex play. So that's a contra view on capex from BofA Securities. So that's a view there. Now, JP Morgan also has a sector bet. They are overweight on materials, financials, consumer discretionary, as well as consumer staples. Hospitals also they like, and so is real estate. But they have a bit of underweight as well in some sectors, which I think includes some, again, the capex plays is what even JP Morgan seems to be not very bullish on. So, okay, they're negative on IT as well as on pharma as far as JP Morgan's underweights are concerned as sector bets for next year. Similar is a call from Macquarie as well. Okay, they've put out the big sectors or the big stocks to bet on. These are the big picks from Macquarie for 2026. They've classified into 3 buckets. The first bucket is the 6 core stars, which includes HDFC Bank, TCS, Reliance, M&M, Divi's and Jindal Stainless. They have a tactical plays, which includes Adani Port, Shriram Finance, ITC Hotels, Titan, Havells, those kind of names. And they have 5 or 6 rising stars, which includes Tata Communications, Make My Trip, Lemon Tree, Delivery, as well as AB Capital. AB Capital has done well as well. So these are the few stocks that Macquarie is betting on for 2026. So that's a call there. What is Nomura betting on? Again, they are largely bullish on financials, pharma, IT, manufacturing, telecom, cement. These are the few sectors which Nomura is betting on. In fact, Nomura has put out the top 20 ideas for 2026, and that includes a lot of large cap names. They're neutral on, within sectors, they're neutral on auto, oil and gas and metals. But I'll more focus on the 20 stocks that Nomura is betting on for next year. They're cautious on some sectors like infra and healthcare, which has been and capital goods as well, which has been a trend for a lot of them. Now, this is a list of 20 stocks that Nomura is betting on for 2026. All the large cap names are part of the list. ICICI Bank, Infosys, Axis Bank, CG Power, LG Electronics. Swiggy is an interesting name in this list. So is Ashok Leyland, Dixon Technologies. Aditya Birla Real Estate is one name in the real estate pack that they're bullish on. And MedPlus is a mid-cap company that they're bullish on. So this is a list of 20 stocks as far as Nomura is concerned. The bottom line is, next year, there is a ray of hope that markets can give 12 to 14% return, but that's going to be backed by earnings. So the large part of the focus seems to be on the large caps and where the earnings are going to be. Is that a view for you as well, that back on companies which are going to throw up the earnings?
Yeah. So in a quarterly, we have said that last year we did not have growth. This is 25. This year will be at 1100 rupees. Next year, broadly, it should be 1300, and then 27, 28 would be 1450. Jan, Feb, March, people look at 27, 28 as well. Yeah. And that's exactly at 20 times 29,000 is our view, which is where it would be earnings led and not, PE rating, because already rich on valuation.
Just to take that point forward about, you started looking at the broader market names, especially after the recent correction. Any sector specific or any theme that you feel have actually, there is a lot of pessimism now in the price?
Yeah, so we met, one of the recycling companies. Sure. We used to own one of them. So now one is a recycler in transformer space, where there is quality. Sure. We need to be there. There the opportunity is pretty large. Sure. So bottom up, there are a lot of opportunities. Yeah. And as I said, now valuations are getting comfortable. So.
Yeah. Which recycler? The one that did very well and then came up? Gravita?
No, so Gravita is one. We met them as well. But
even Ganesha is down.
GK and Electronics, it does recycling of this PCs and at scale. Okay. And the opportunity, it's a very, very unique company.
All right.
It's just that we are exploring and working on it. But there's no player in that segment. They do 6 lakh recycling. Their office is in Dubai.
The name of the company, sir, is?
It's called GK and Electronics.
GK and Electronics. All right. So, got it. Talking, since you mentioned Dubai, are you taking a flight?
No.
Anyway. All right, just want to ask you about what are you making of this entire, Interglobe saga that's breaking out right now. It's a company that has 65% market share. There's an unfortunate incident that's taking place for the customers, and then it's reflecting on shareholders as well. But it's a quality company. Right. Would you use this dip to get in, or would you stay away?
Yeah, so one is crude is in their favor.
Yeah.
But rupee is not.
Yeah.
And they're very sensitive to rupee, and volume growth is not there.
Yeah.
So it's just that we explored it well. It's a large cap company and it's a great franchise, a clear market leader. So it's just that we need to, from valuation perspective, we wanted it still lower than the current price. Okay. And at that price, there will be a price which you need to be contra and look through this near-term events and look through the big picture, and they've done a very, very good job.
So from valuation perspective, related space, travel, leisure, hospitality, what about hotels? I mean, no one's disputing the appetite, the long-term story.
Right.
But just how do you?
No, there. I mean, I'll be very honest. We've not done too much work around it, but there clearly can be an opportunity at a price in some of these larger names. You know.
Sanjay, any IPOs recently? Misho, for example. There's another one which is in the aerospace defense side. Again, great company. Any thoughts?
No, so Misho, we are exploring very positively, and it's really attractively valued. I mean, valuation is a debate, but the clear opportunity is there. And again, you know, at listing, at what prices list is for us is very important. But the business model is very, very good. You know, they're catering to a segment which is pretty large. 22 crore is pretty large opportunity. So we are positively going to look at it at a price.
The other one, Acus, did you look at it? I mean, I don't know if you guys got a look.
No, I don't.
Okay. It's,
Yeah,
sorry.
No, on IPOs itself, our colleague Hormaz was just telling us next week, a lot of the anchor book lock-ins open.
Yes.
And then the reality check hits.
Yeah,
right?
it does.
So on the high-profile names like Lenskart, even Pine Labs for that matter, positive, negative.
Yeah, so we just had a call yesterday with Lenskart.
Okay.
And the model is amazing. I mean, it's absolutely, they are really ahead of times. It's difficult to even for any large player to even get in and just go to the level they have gone into. The back end, front end, everything they're integrated.
Beautiful. I was at a store yesterday. It's phenomenal, the level of service.
It's just that, you know, again, when you put your DCF, you put your growth of 20% for the next 3 years and then 18% for the next 7 years and terminal growth of 8%, yet the value is significantly lower. So that's our irony, that we want to buy at much lower price than the current price.
Any other segments come up? You know, you own a couple of construction. I think you own Dilip Bilkon in your portfolio. Yes. Interact Builders you own.
Yes.
L&T, of course, the big one you have in your portfolio. And, you know, right where you're sitting, we had another fund manager last week, Friday, and in your Nimesh's list of stocks which had fallen from the peak, KNR.
KNR.
If you remember. And I think, who was it last week?
Nimesh
Chandan was there.
Yeah.
Sure. And he was saying, well, I think he hinted that maybe KNR is worth looking at and doing some more work. And then we looked at basic numbers. You know, last year they did about 1,000 crores in profits.
Yeah.
4,000 crore market cap.
Yeah.
They were barred by NHA, and I think that's the issue which happened. But I think they've started working again.
Right.
And they started to get contracts again.
Yeah.
I don't know if you have any thoughts you've looked at it.
We own one of them. It's not worked for a year now. And that keeps us grounded all the time.
Yeah.
Which is
Dilip Bilkon, yeah. So there's a great asset play. And the coal MDO is, they'll be the largest in MDO, doing 25 million, will go to 50 million. They'll make 900 crores cash flow in 3 to 4 years. And I'm personally visited the mine. And it's amazing work they've done in the Coal India's block. The REIT is there, 3,500 crores. You give whatever you want to give a discount, you give a discount. The market cap is 7,500, 8,000 crores. The standalone business is free. The problem for them was the orders not coming in. And then profitable orders not coming in, because these guys have repaired the balance sheet. They don't want to get there again. So it's positive that they're not taking unprofitable orders. So there is deep value, but it's just that I think, again, the states also has to do the heavy lifting on spend.
We come back to where we started, right?
Yeah.
I mean, which is the problem with state spending, not on capex, but on other stuff.
But 2026? Better than 2025?
Yes, certainly. But it's just, I think the expectations have to be realistic.
Ah, okay. I've heard, that's Nimesh, Kotak Mutual Fund. Expectations need to be realistic.
No, expectations need to be low.
Lowered, yeah. He's actually saying they need to be low.
Then it becomes a handy.
You'll hear him soon, because Pro IPO is coming next week.
Yeah, absolutely. So, no, this was Nilesh Shah, Kotak Mutual Fund. And Nimesh Shah will hear with the
Pro ICICI.
ICICI Pro IPO coming soon. Thank you so much, Sanjay. Great conversation. Thanks so much for joining in. And in case we don't meet in person again till 2026, wish you a fantastic new year.
I wish all of you, and Monday is your 26th year, so congratulations.
Thank you so much.
Thank you so much. Well, with that, we're out of time on this edition of Editors Roundtable. Many thanks for watching. News and updates continue on CNBC-TV18. Hello and welcome to Business 360. I'm Arundhati Ramnan and here are the top headlines that we're tracking for you this evening. RBI cuts repo rate by 25 basis points to its lowest level in 3 years. Governor Malhotra says benign inflation and growth at 8% presents a rare Goldilocks period, hints at room for further rate cuts if inflation continues to remain soft. RBI raises its GDP growth forecast by 50 basis points to 7.3% for this financial year. Central Bank will inject 1 lakh crore rupees this month through open market operations. Governor promises to ensure liquidity remains sufficient in the banking system. The Indigo crisis deepens. Around 500 flights cancelled across 4 major airports for the 4th day. All flights from Delhi cancelled till midnight. Chaos at Mumbai, Bengaluru, Chennai, Hyderabad and several airports as thousands of passengers are left stranded. Aviation regulator dilutes the new crew rostering rules, grants Indigo a one-time exemption from night duty rules amid the airport chaos, also allows all airlines to count pilot leaves as weekly rest to tackle the crisis. Pilots Association flags safety concerns and opposes the selective dispensation granted to Indigo. Russian President Putin gets a ceremonial welcome in New Delhi, holds bilateral talks with Prime Minister Narendra Modi. The Prime Minister says that India supports speedy establishment of peace in Ukraine. Putin says he was grateful for the attention India was paying to peace efforts on Ukraine. A U.S. delegation is scheduled to visit India next week to hold trade negotiations. Sources say dates are being finalized and both nations remain hopeful of signing a framework deal this month to address the 50% U.S. tariffs imposed on India. An outage at internet infrastructure firm Cloudflare forces dozens of websites to go offline across the world. Online trading platforms like Zerodha, Grow, Upstocks and others affected in India. The global CEO of Amazon Web Services plays down fears of an AI bubble, even as he expects some froth among startups. Matt Garman is upbeat on India and the company's plans to invest nearly $13 billion by 2030. That's an exclusive. Netflix leads the race to buy Warner Brothers Discovery Studios and the HBO Max streaming business, enters exclusive negotiations to seal a deal that could reshape the global entertainment media landscape and trigger potential regulatory challenges. Simone Tata, the mother of Noel Tata and the stepmother of the late Ratan Tata, is no more. The woman who built the Lakme and Westside brands passes away at the age of 95. Those were the headlines that we're tracking for you this evening, but the top story today. The Reserve Bank of India's Monetary Policy Committee has cut repo rate by 25 basis points to its lowest level in 3 years. Governor Sanjay Malhotra said benign inflation and growth at 8% presents a rare Goldilocks period that allowed space for a cut. Governor also hinted at room for more rate cuts if inflation remains soft. The central bank also raised its GDP growth forecast by 50 basis points to 7.3% for this financial year. It also sees stronger growth of 6.7% in the first 2 quarters of FY27. The inflation forecast for this year has been lowered, but the central bank has warned that inflation could inch higher in the first half of the next financial year. The RBI will also inject 1 lakh crore rupees this month through open market operations. The governor has promised to ensure liquidity remains sufficient in the banking system.
Inflation at a benign 2.2% and growth at 8% for the first half of this year presents a rare Goldilocks period. Globally, contrary to earlier expectations, growth has been relatively strong. Evolving geopolitical and trade environments, however, continue to weigh on the outlook. Going forward, we expect benign inflation, and so if the inflation continues to be the way it is, we expect the rates, the policy rates, to be low and not high. Whether now what rate it will be, that will be, getting into speculation.
Latha Venkatesh is here with more on the monetary policy. Latha, what did you make of the policy?
Well, I think it was a giving policy, a Santa Claus policy, because not only the kind of partially expected rate cut was given, he did not quite shut the door on another cut. But he didn't promise one either, to be fair. What he said was that he's bringing inflation down so much in the first 2 quarters of next year. You know, the original forecast for April, May, June of FY27 was actually 4.9. It was brought down to 4.5 last time and now 3.9. And then for the next quarter, Q2, it's as low as 4%, with the governor repeatedly saying that if you subtract gold from this inflation index, then you get an inflation number which is half a percentage point lower than 4%. So you're talking of 3.5. That kind of repeatedly saying benign inflation can trigger a hope that if the need arises, he is not averse to cutting, though he didn't say. He said it would be speculative to expect a cut. The other positive Santa Claus policy, part of the policy, was the liquidity. Ample liquidity given only for the month of December. He's going to buy bonds, what you call OMO bond purchases of 1 lakh crore, December 11th and 18th. And on 16th December, they're going to do a 3-year FX buy-sell swap. Basically, that's jargon for putting another $50 billion is what? Half a trillion. So that's 1.5 lakh crore of rupees coming into the system, which also gives the rupee bears a bit of a scare. See, if they put that much liquidity, they are ready to supply bonds in the market, supply dollars in the market. So in a way, all markets today reacted positively, and that's the positive. If you want to get the key takeaway, all 3 markets, stock markets, bond markets, and rupee, reacted positively to what the governor said. So we should expect, NBFC companies, real estate companies, anybody who benefits from lower interest rates, consumer durables, all of them reacted positively. What may be the downsides? One is that banks are not happy. They are not going to be able to pass on this rate cut because depositors will not deposit if you keep on cutting. The repo can go anywhere, but depositors have their minimum threshold. So they can't cut down their cost of capital, and therefore passing on will be slow and tardy. So not very, very bank positive. The banks are obviously an unhappy lot because of this. The other negative could be you're putting in so much liquidity. As and when inflation picks up, you should be alert to pull back this liquidity. I mean, that's just a warning for the future. Not that inflation is looking like rising, but I'm just saying that just puts the Reserve Bank on notice.
So a few negatives, but a Santa Claus policy, as Lata is calling it. Thank you so much for those details. Now, the bond market was largely steady after the monetary policy. The rupee remains within striking distance of the 90 mark against the US dollar. 10-year sovereign bond prices gained in trade, and the yield softened marginally to 6.5%. From the currency market to the equity market, Dalal Street cheered after the Reserve Bank slashed the repo rate by 25 basis points. All major indices closed higher. However, the market breadth was in favor of the declines. Sensex rose nearly 450 points, while Nifty jumped over 150 points. Nifty Bank outperformed, and nearly 40 Nifty stocks closed in the green. For the week, Sensex and Nifty ended the week flat after a volatile session. Mid-caps fell over 1%. Nifty Bank performed in line with the blue chips. IT was the biggest gaining index and posted biggest weekly gains in 2 months. Missed wedding receptions, delayed funerals, upended vacation plans. Nightmare for Indigo passengers continued for the 4th straight day as the airline cancelled over 500 flights in 4 major airports alone. Remember, Indigo accounts for an over 60% share of the domestic aviation market. The aviation regulator has diluted the new crew rostering rules for Indigo. They have granted Indigo a one-time exemption from night duty rules. The Airlines Pilots Association of India has flagged safety concerns and opposed the selective dispensation granted to Indigo. Last evening, Indigo had told the government that its operations will be fully normal only by February 10th. They had told them that they had not anticipated such a situation. All Indigo flights from Delhi Airport have been cancelled for the day. Here's an account of what has been a nightmare for passengers.
सुबह से खड़े हैं, ये बोल रहे हैं कि 2500 बैगेज मिसप्लेस है.
Trying to contact even the customer care, but no one is lifting the phone.
कस्टमर सर्विस क्या होता है? कस्टमर तो यू आर कस्टमर सर्विस. हमारे पीछे वाले फ्लाइट चले गए और हम लोग इधर ही है अभी तक.
Call center is not picking up the call. I'm putting my PNR, it's saying non-existent.
What is the half of the plate is not has been reached.
Shivani Bajaj joins us now with the details. Shivani, take us through the changes that have been made to the crew rostering norms for Indigo.
Well, yes, the Indigo crisis has now pushed the aviation regulator DGCA to water down key FDTL rules that were meant to tighten safety standards and reduce pilot fatigue. But to ease the operational strain on the country's largest airline, the DGCA has now granted temporary relaxations to Indigo on few of these rules till February 10th. First, the night duty definition. While the rule defines night duty as midnight to 6 a.m., Indigo has been allowed to operate under the older window of midnight to 5 a.m. now. This gives the airline more flexibility in rostering early morning flights. Second, the night landing cap. Pilots are normally limited to 2 night landings per week, but Indigo has been allowed up to 4. This is to help the airline stabilize operations and clear pending rotations. And third, the weekly rest rule. Now, this is not just for Indigo, it's for all the airlines. The DGCA has allowed a one-time exemption for all airlines, permitting weekly rest to be substituted in exceptional circumstances, a relaxation Indigo is also expected to use as it rebuilds schedule. So which means that the weekly rest can be substituted with weekly leaves, which are two different things under the new FDTL norms. All these relaxations are temporary, but they underscore the scale of disruption playing out across airports and the pressure to get Indigo's network back on track. Back to you.
Right, Shivani, many thanks for those details. Now, several passengers were left stranded at airports without access to food or water. Many took to social media to share their ordeal. A newlywed couple were forced to attend their own reception in Hubli online after their flight from Bhubaneswar to Bengaluru was cancelled. The couple joined the reception from a virtual set up in Bhubaneswar. Namita, who was scheduled to travel to Haridwar for the ash immersion ceremony of her late father, was stranded at the Bengaluru airport. Madiha Mujawar gets us a brief account of the passengers' ordeal from the Delhi airport.
We are at the Terminal 1 of the Delhi airport where passengers are stranded. They are very angry. Some passengers did not know that their flights have been cancelled and they only got to know about it once they arrived at the airport. आप कहाँ जा रहे थे और आपको नहीं पता था कि आपकी फ्लाइट कैंसिल हो गई है?
नहीं, हमको नहीं पता था हमारी फ्लाइट कैंसिल नहीं है. हम अपने घर से आए मैडम. उसके बाद में मेरा फ्लाइट था यहाँ दिल्ली से नागपुर, नागपुर से बेंगलोर. ठीक है, यहाँ आए तो हमको पता चला.
3 तारीख से बनारस टू सूरत का फ्लाइट था. एक्चुअली कनेक्टिंग फ्लाइट बनारस टू दिल्ली एंड दिल्ली टू सूरत का फ्लाइट था. बनारस को हमको 2 घंटा लेट से यहाँ लेके आ गए. जैसा यहाँ हमने लैंड किया उसने बता दिया कि आपका फ्लाइट कैंसिल है. शाम को 5 बजे हम लैंड किए. रात को 10 बजे तक रीशेड्यूल के लिए इतना दिमाग लाइन रस के साथ मगजमारी करके बाद में उसे रीशेड्यूल करके 5 तारीख का हमको टिकट दिया आज का. और बाद में होटल के लिए बोला तो बाद में 11 बजे नज़दीक के कोई होटल में जाके रख दिया. वहाँ 11-12 बजे सोए तो सुबह में 10 बजे होटल वाला बोलता है चेकआउट करो आप.
हम बाकू से आए हैं और अभी 1 बजे डिपार्चर था हमारा, लेकिन वो भी कैंसिल हो गया. अभी यहाँ आने के बाद कैंसिल हुआ है करके बोल रहे हैं.
उदयपुर से हम लोग 3 तारीख को दिल्ली में आए. शाम को बोले आपका फ्लाइट है 1 घंटा लेट हो गया है तो आप रुको. रुकने के बाद हमको 12:30-1 बजे तक बोले आ रही है. ऑल ऑफ अ सडन 4th को सुबह 6 बजे हमको एयरपोर्ट एयरलाइंस में बिठाया उन्होंने. मॉर्निंग 6 o'clock अंटिल जब हम लोग बोले कभी 1 घंटा हुआ है, 2 घंटा, कभी उड़ा पायलट कभी आएगा, बोले आ रहा है. बाद में हमारे पूना के एयरपोर्ट को लोग बदनाम करने लगे.
हमारा बुकिंग मिल गया है, वो भी स्पाइस जेट का, वो भी 45,000 का पर हेड टिकट खरीदी करके हम 45 लोगों का बुक कर चुके हैं. बाकी के 20 लोग हमारे वोल्वो से आ रहे हैं.
ये कौन पे किया है 45?
हमारे सब लोगों ने. हम जो है हमारा जो सेरेमनी था हमारे एमएलए आमदार महेश लांगे का उनका सेरेमनी वहाँ पे आए थे. हम हमारा कार्यक्रम होने के बाद यहाँ पे 3 दिन वेटिंग कर रहे हैं हम. हमारे साथ लेडीज लोग हैं, बच्चे लोग हैं, छोटे छोटे बुजुर्ग हैं, उनके कितना हाल हो गया. इंडिगो!
So the problems that passengers are facing here at the Delhi airport, different stories coming in of the inconvenience that they have been facing due to the large-scale cancellations by Indigo.
On that note, it is time for us to head into a short break. But coming up next, Russian President Putin gets a ceremonial welcome in New Delhi, holds bilateral talks with Prime Minister Narendra Modi. More details on the other side. Stay tuned. Welcome back. You're watching Business 360. India and Russia have inked agreements on migration, healthcare and food safety cooperation. Russian President Putin and Prime Minister Modi have also announced the Economic Cooperation Program 2030. Speaking at a joint press conference today, Prime Minister Modi said that President Putin's efforts to expand the partnership has taken the relationship to new heights. He added that the India and the Russia-led Eurasian Economic Union will work toward a free trade agreement. Meanwhile, President Putin said both the nations are aiming to take bilateral trade by $100 billion by 2030. He added that Russia is ready to continue uninterrupted fuel shipments to meet India's energy needs. This comes at a time when US President Trump has been claiming that India has significantly reduced its dependence on Russian oil. Earlier today, both the leaders had held bilateral talks at the Hyderabad House. Prime Minister Modi said that India is not neutral when it comes to the war in Ukraine, reiterating that India is on the side of peace. President Putin said that there are more opportunities for cooperation as India and Russia's economies grow.
आज हमने 2030 तक के लिए एक इकोनॉमिक कोऑपरेशन प्रोग्राम पर सहमति बनाई है। इससे हमारा व्यापार और निवेश डाइवर्सिफाइड, बैलेंस और सस्टेनेबल बनेगा। दोनों पक्ष यूरेशियन इकोनॉमिक यूनियन के साथ एफटीए के शीघ्र समापन के लिए प्रयास कर रहे हैं। क्रिटिकल मिनरल्स में हमारा सहयोग पूरे विश्व में सिक्योर और डाइवर्सिफाइड सप्लाई चेन सुनिश्चित करने के लिए महत्वपूर्ण है।
Last year, our bilateral trade turnover has grown by 12%, setting another record. We are up to the task of getting this number to the level of $100 billion. And to reach this important goal, we have harmonized the program of development of Russian-Indian economic cooperation until 2030. We are ready to continue uninterrupted shipments of fuel for the fast-growing Indian economy.
Parikshit Luthra joins us now with more details. Parikshit, take us through all the deals that have been signed by India and Russia.
Well, there was a lot of bonhomie that was on display between Prime Minister Modi and President Putin. Yesterday, the two leaders almost spent 2 hours, 15 minutes with each other, 15 minutes in that Toyota Fortuner from the airport to the Prime Minister's residence, 2 hours over dinner where they had extensive discussions. And today, their press conference was delayed as they were having very long conversations on taking the India-Russia partnership forward. There was a lot of speculation about big defense deals being on the table. Well, no defense deals have been signed this time around, and CNBC-TV18 had been reporting on this. Yes, both sides are discussing collaboration, co-production, co-development of defense platforms, but we're not expecting anything to be signed during this visit. Having said that, the big focus was on economic cooperation, and that economic cooperation roadmap 2030 is extremely significant because Russia has offered to open up its market to Indian pharmaceuticals, textiles, agriculture, marine products, especially shrimp for that matter. The Prime Minister made a very important point. He said that both countries will now embark on increasing trade, diversifying trade in a sustainable manner. India made its concerns very clear that there is a long-standing trade deficit. We import almost $64 billion worth of goods from Russia, but Russia only buys around $4.8 billion. So therefore, we are going to see increasing imports by Russia from India. Having said that, let's move on to the energy partnership. President Putin there, in a way, taunting the West by saying that we are forever ready to increase energy supplies to India and continue energy supplies uninterrupted and also support India with nuclear energy. So there were discussions on small modular nuclear reactors, their joint development, joint production in India, and also large nuclear reactors to support India's future energy needs. So possibly there could be agreements and discussions on that in future, not immediately during this visit. Fertilizers was a very important area of cooperation. Both sides agreed to increase production of urea. An agreement on supply chain of fertilizers was also inked. An Indian entity is going to set up a pharmaceutical plant for APIs in Russia. That too is very, very significant. There were discussions on space technology, future technology areas as well. They've adopted a joint statement which will guide the two leaders. Extensive discussions on the Russia-Ukraine war. Prime Minister conveyed once again that we're not neutral. We stand on the side of peace, and we hope that there will be a peaceful dialogue and end to the Ukraine-Russia conflict.
All right, Parikshit, many thanks for taking us through those details. A team of negotiators from the US are set to visit India next week for a fresh round of trade talks. Sources have said that the dates for negotiations are being finalized. Both sides are hopeful that a trade deal will be signed by the end of this year. Remember, the Trump administration has imposed 50% tariffs on Indian imports. In the first half of this year, India's exports to USA rose over 13% to more than $45 billion. And with that, it is a wrap on this edition of Business 360. More news and updates continue on the other side. Stay tuned.
Inflation at a benign 2.2% and growth at 8% for the first half of this year presents a rare Goldilocks period.
With these words, the Reserve Bank governor announced a 25 basis point cut to the repo rate, taking it to the lowest level in 3 years. In many ways, this was a Santa Claus policy. Apart from a rate cut, the governor did not entirely shut the possibility of another cut. Of course, he didn't promise one either. Growth forecast, of course, has been raised, but more importantly, inflation forecast cut for this year. More importantly, for the first half of next year, it's been cut rather drastically from their earlier forecast, with the governor also saying that if you count it ex gold, then the inflation falls way below 4% for the next year. He has also been very benevolent with liquidity, a 1.5 lakh crore rupee infusion in this month itself. So, is the central bank looking too liberal with liquidity? And is it also, wasting a cut? Will this get passed on by the bankers? To discuss all this and more, I'm joined by a panel of top-notch experts: Mridul Sagar, former executive director at RBI and former member of the MPC, Neeraj Gambhir, the head of treasury at Axis Bank, and Samiran Chakrabarti, the chief economist at Citi. In a bit, we will also be joined by the biggest banker of them all, SBI chairman C.S. Setty. But that's just a little later. First, our panel of economists and bond experts, market experts are here. Gentlemen, thank you very much indeed for your time. Samiran, your thoughts. Do you think that we are like the governor has managed to communicate as much dovishness that we will see bond markets continuing to trend lower? Do you think this is a positive for growth?
So if you look at it in this policy, the RBI has used the space that has been offered by inflation, and also their growth guidance has been slightly softer than where the current growth rates are. So that itself has also provided some space for the policy easing. And in our view, almost the entire focus of the MPC has been on this inflation growth dynamics and less on the other two factors that we were thinking could be also on the table, which is connected to financial stability, the issue of the balance of payment, and the fact that the banking system deposit growth is now lagging credit growth. But for the moment, that has not been the primary focus of RBI. And that's where the governor has sounded very dovish, not just through his rate cut, but also being very proactive about providing the OMO guidance for December. And now, obviously, this will translate into the bond market, thinking that till the time there is any upside surprise on inflation, the RBI's overall monetary policy approach is going to be very conducive for the bond markets.
Okay, thanks for that. Neeraj, what's your first sense about bond yields itself? Are you seeing them substantially lower or at least lower for now? Say, by up until February, before the budget, how low does it get?
I think the bond market has not been as enthusiastically responding to the RBI's policy moves of late. We've seen that this 25 basis point rate cut plus a 1 lakh crore OMO, the market kind of ended pretty much flat and similar to the level as the last time. I think gradually the market will buy into this rate cut as well, as my view. But I'm not seeing too much of a downside to the yields from here, maybe another 5 to 10 basis points.
Okay.
I think a lot will depend upon what is the total amount of GSEC purchases that Reserve Bank does as a part of its open market operations. Market was expecting around 2 lakh crores. We've already gotten 1 lakh crore for December. So we're going to see what happens for the month of Jan, Feb and March. That could continue to support the bond market.
Okay. Mridul, what are you, would you say that the governors pulled out all stops for growth and therefore chances of growth surprising on the upside are very high, would you say? Mridul Sagar, you can't hear me? Oh, I think there is a problem with the line. Okay, we'll redial Mridul. Neeraj, I wanted to ask you the other question which some bankers pointed out. Do you think bankers will pass it on at all? there were some bankers who said there is a depositor's resistance for lower rates. So there's no question of cutting deposit rates. What would you say?
So pass on of the rates to the real economy actually starts with the lending side rather than the deposit side. We know about 60 to 70% of balance sheets are linked to EBLR, which is in turn the repo rate. So as soon as the repo rate is cut within a quarter, this part of the balance sheet gets repriced almost immediately, and the benefit is passed on to the end borrowers. As far as deposits are concerned, there is a bit of a competition amongst the banks, and there is a bit of chase of the deposits that is going on. This chase intensifies as we get into the last quarter of the year. So we'll have to see whether there is sufficient liquidity in the system that can, in some senses, encourage the cuts on the deposit side. But I think there could be a little bit of skepticism there to see. Let's see if the deposit rates, deposit growth in turn, kind of picks up, and which then allows us to do some kind of rate cutting on deposits.
Okay. Well, are there chances that people will, I mean, how do you see credit growth? Do you think banks will now abandon things like home loans because you're not able to bring down your cost of funds? So why would you go to a low-priced product? Do you think there'll be a concentration on high-risk lending?
I think we've recently seen some kind of elevated credit costs on the unsecured side, and I think that episode is pretty recent for people to forget about it.
Okay.
I think it will have some bearing. So I don't see people abandoning, products like mortgages, which may be low yielding, but they clearly are far better in terms of credit cost. So I would think that a combination and a mix of the lending will continue, both on the retail as well as on the wholesale side.
Samiran, what's the sense you're getting on the rupee? Do you think the fact that the governor has given so much liquidity is an indication that, yes, I'm going to intervene, I'm going to supply as many dollars because now I've got this liquidity insurance? Will that scare some rupee bears?
So, in a theoretical sense, when rates are cut and the RBI is more active on the bond market through the OMOs, there would be a natural bias for the markets to play the currency from the depreciation side because the cost of carry becomes lower. However, as you rightly point out, that both these, the OMO as well as this 5 billion FX swap, it gives RBI more space to intervene from two aspects. One is the liquidity aspect, that there is now enough liquidity in the system, so they need not be worried that even if they sell dollars, the INR liquidity will tighten. And the other way is there's 5 billion adds on to the RBI's FX reserves. So optically, that headline FX reserves number remain better even if they're intervening. So from both sides, the flexibility, the degrees of freedom for RBI to intervene in the FX market increases because of these operations. But at a theoretical level, RBI will have to be conscious of this, that the bias for markets to play would be more from the short side.
Oh, okay. Well, at least for the day, the rupee has, stayed fairly steady and ended south of 90. We are at 89.98. Mridul Sagar we are finally connected with him, but only on phone. Mridul Sagar, would you worry that the RBI has been a bit too generous? Bankers have told us that they're a bit finding it difficult to pass it on because there is a depositor's resistance to lower rates. So they'll pass it on more slowly. And, the fear of excessive liquidity always means there can be a financial problem if suddenly inflation picks up or something happens. Do you think they've been way too generous?
Absolutely. There's a risk of it. So, Lata, RBI has done what it could in the sense of the rate cut. I think this is near the terminal of the rate cutting cycle, though, for central bankers never say never. And if you see the fan charts, there are probability that inflation could still slip below 2% with the 70% confidence interval, or could go up over like 6% ceiling with 50% confidence interval. So rates could still move both sides. Markets may anticipate no rate changes now. But the word is sitting on a bubble with the case Schiller cyclically adjusted price earning ratio at 40, the levels which have only been seen at the dot-com bubble side, not even in the Great Depression or the global financial crisis. So should that happen, rates could move anywhere. We have seen 4% during the COVID. We have seen 9% during the global financial crisis as well as the dot-com bubble.
Okay. Yeah, I'm just worrying in case, of course, the Reserve Bank can stay alert and roll back the liquidity in good time. But this is just, at some points, looks like too much of a good thing. Let me quickly get your rupee views as well. Neeraj, what's your sense? Is the rupee depreciation at its end now?
No, I wouldn't think so. I think the key issue for us is that we have roughly 1 to 1.5% current account deficit. Net capital flows into the country are almost flat. So we have to basically fund this deficit. And the only person to fund this deficit is RBI's reserves. So there will be pressure on currency. Although it may not be as high, given the fact that the US dollar may also be on the depreciating path. But I do expect steady weakness in the currency in months to come, till such time we see reversal of capital flows, particularly equity market flows. So I think that's the key marker for us to say. There could be a short-term blip up in the rupee-dollar rate if we have a trade deal announced, anytime soon. That could provide some support. But net, fundamentally, we are in a rupee weakness regime.
Okay. Samiran, we always say that India is not a country where people come in because of higher interest rates. People are coming to us because we are a growth economy. And now with the Reserve Bank going all out for growth, do you think this so far elusive foreign capital may return?
So obviously, in an optimistic scenario, we can see that happening next year. For that, I think three things have to fall in place. One is that the fresh allocation, people are looking at some sort of mean reversion in India's performance. This year has been a huge underperformance. So next year, some mean reversion of that can happen. Second is that the AI trade, which has sucked out capital from India and got deployed in other countries, that if next year that dynamics changes, or at least incrementally not that much of money flows into chasing that theme, then that could also be a positive for India. And third is that India in the last few months have very quietly started, in my view, a fundamental change in its policy reforms. At some point of time, if the investors start feeling that this reforms narrative is strong enough to cause a more sustainable improvement in the earnings outlook, then that could be another factor which can bring in the capital flows back to India.
Oh, yes, sir. We are noticing a bit of deregulation, or a good amount of deregulation, as well as labour codes. Yes, we are hoping that people catch that wind. A final question to you, Mridul Sagar. Do you think we are in a higher growth trajectory? I mean, this is out of syllabus. It's not a monetary policy question. But we are repeatedly getting surprised on the upside. Maybe are we refusing to recognize that India is indeed a 7% plus economy?
I can go with a 7% sort of number, though obviously the methodologies need some improvement in terms of double deflation in the service sector to have a convincing view that we are really growing that fast. Okay. So there are statistical issues. The MOSPI is trying to resolve that and making some headway, at least in the manufacturing sector. So let's wait and see how it is. But we need to rely also on high-frequency indicators, which are not bad, but maybe not like rocking 8% plus.
I agree with you. Everyone agrees the growth story is good, but it doesn't look like it's a higher trajectory. It doesn't look like a higher inflection point. But then we don't know. As you say, there is a whole new series of CPI and GDP on the way. So anything we say could be, negated, could look very different once the new series comes next February. So everything we say is only valid up until February. Thank you very much, Mridul Sagar, Samiran Chakrabarti and Neeraj Gambhir for joining me and helping us understand and parse the impact of the monetary policy just announced. We have to take a quick break, and thereafter, The biggest banker of the country joins us, SBI Chairman C.S. Setty, in a minute after this break. Welcome back to this monetary policy special. As we said, it's widely recognized that the Reserve Bank has announced a Santa Claus policy, cutting interest rates by 25 basis points, not entirely shutting the door on a next possible rate cut, but more importantly, giving 1.5 lakh crore of liquidity for this month itself. There could be more in the next quarter. Joining us to parse all this on the banking and the financial system and the economy is the SBI Chairman, Mr. C.S. Setty. Mr. Setty, thank you very much indeed for your time in what should be a very busy day. First up, sir, do you think with so much of positivity, rates as well as liquidity, you would want to up the loan growth forecast for the banking system?
Thank you, Lata, for having me on your show. I think you summed up very nicely in terms of the essence of this policy. What we have been saying that is more than the potential rate cut or no rate cut, what is important for the banking system is adequate liquidity. I think RBI and the governor always has been assuring us that they will ensure durable liquidity in the system, and they stuck to that. And we are very glad that particularly in the Q3, there would be a big amount of outflows on the advanced tax payments. And we are also seeing a good credit growth. The last time around when I spoke to you, I did say that with a lot of measures which were announced in the last MPC, there would definitely be uptick in the credit growth. And we are seeing that. In my earnings call also, I mentioned that we are revising our credit growth from 11 to 12% to 12 to 14%.
Yes.
So we are still sticking to that credit growth rate. And this adequate liquidity assurance, what we got from the RBI, and we are very confident of achieving that growth rates.
Well, when a giant like you can grow at 12 to 14%, I think you drag the average for the system itself. But Mr. Setty, the negative that some bankers point out is that depositors are resisting further, interest rate cuts. You can't cut deposits much or deposits at all. It's only the repricing of old deposits that will give you some margin impact. Will this mean that bankers will also drag their feet in terms of dropping lending rates? Only stick to high-priced products, don't go selling home loans. Is there likely some behavioral change in bankers?
There are certain products which are linked to repo, so there's no choice but to immediately pass on this repo rate. What we have been witnessing even in the last earlier cut also is that unless we reprice the deposits or recalibrate some of the interest rates on the fixed deposits, the MCLR, which is formula-driven, remains sticky.
Oh.
So that is what we have seen. But broadly, I think, as Governor mentioned in his speech, the transmission has been reasonably good. The one challenge banks will definitely have is in terms of especially those banks which have high CD ratio will find it with the credit growth coming back the way it is, they will find it difficult to readjust the interest rates.
Oh.
But as you mentioned rightly, we will get the full benefit. Two fronts. One is the whole stock of fixed deposit getting repriced fully in the next 3 to 4 months, and the full benefit of the CRR cut, which has happened in almost 1%, full 1% of the CRR cut. By 30th November, the cycle has been fully implemented, which means that there's an adequate earning funds which we can earn something. That also will contribute to protecting the margins.
Okay. Yeah, I take your point. But immediately, does it mean that bank margins have bottomed?
So in terms of the the rates of interest on the deposits, I think broadly we have all factored in that there won't be much of readjustment on the fixed deposit rates.
Okay.
So the only variable what has changed from before MPC and after announcement is the 25 basis rate cut.
Yes, yes.
As I mentioned, I think the 25 basis rate cut can easily be absorbed.
Okay.
Because in case of SBI alone, you can give the number, we got additional liquidity of almost 62,000 crores on account of CRR cut.
Okay, okay.
So even assuming that, you have SDF rate earning on that, so the rate cut impact can be neutralized to that extent.
Okay. So you're more or less telling me that margin impact will not be there. You have other things to, help you. Just a final point. Do you think you will see banks moving away from EBLR to MCLR in the next cycle?
So there are products which are mandated to be given through the EBLR. So there is, it all depends on the composition of your book. If it is predominantly retail, SME, there's nothing much we can do because those segments have to be mandatorily linked to the repo in terms of ensuring the transmission. Okay. In terms of the corporates, yes, in terms of corporates, I think we have an option either to give something which is linked to the T-bill, which gets repriced when the rate cut happens. There could be some movement towards MCLR, but again, every one of us is trying to build the book, right?
Okay.
On the corporate side. Obviously, I don't see much impact in terms of shift towards MCLR.
Yeah, the market will impose its discipline on bankers. Just a final one, sir. I mean, I've been throwing questions at you. Any key takeaway for the banking system or your bank that you want to tell us from the policy or generally from the banking system at this point?
Well, the key takeaway, I think, as I keep mentioning, is that today the fiscal measures and the monetary measures and the liquidity, what is available in the system, it is all helping us in terms of moving towards the growth trajectory, inflationary trajectory, everything what I think is all set for very robust growth rates in the financial system. The only thing what we are looking for is some capital expenditure to come back in some of the core sectors.
Okay.
While we do see that corporate growth rate at 10% in our books, but the growth rate, what is anticipated from the core capex has to come back.
Okay. That's a nice position to be in. We began this discussion by quoting the governor saying it's a Goldilocks economy with growth rates getting upped and inflation rates getting cut. We are ending with the SBI chairman saying that he sees a robust credit growth and would only wish it were even more robust, especially on the capex front. Thank you very much for joining us, Mr. Sethi.
Thank you, Lata.
That's it on this edition of this Monetary Policy Special. Thanks much for watching.
27 hours in India. Vladimir Putin's visit kicked off with some instantly viral moments. A warm hug between Putin and Prime Minister Modi. A shared 15-minute car ride to the Prime Minister's official residence, which is 7 Lok Kalyan Marg, and extensive talks over their 2-hour-long private dinner. That was day one. Day two, business mode on. The two met at Hyderabad House in New Delhi for the 23rd Annual India-Russia Summit, following a ceremonial welcome and tribute earlier in the day. After the summit talks, they held a press conference and rolled out a batch of new agreements governing and covering migration and mobility, healthcare, medical education, science, food safety cooperation, shipping, fertilizer supply, and more. Here are the key headline takeaways. India and Russia signed a big program targeting long-term economic cooperation, boosting trade, co-production, co-innovation. They reaffirmed a shared goal of $100 billion in bilateral trade by 2030. There's renewed emphasis on joint global action against terror and enhanced defense, technology, energy cooperation. On Ukraine, Prime Minister Modi reiterated India's preference for peace and described India-Russia friendship as a steady and guiding one like a pole star. Meanwhile, Putin pledged uninterrupted fuel supplies to meet India's energy needs.
बिजनेस के लिए सिंप्लीफाइड प्रिडिक्टेबल मैकेनिज्म बनाए जा रहे हैं। भारत और यूरेशियन इकोनॉमिक यूनियन के बीच एफटीए पर चर्चा शुरू हो गई है।
Last year, our bilateral trade turnover has grown by 12%, setting another record. We are up to the task of getting this number to the level of $100 billion. And to reach this important goal, we have harmonized the program of development of Russian-Indian economic cooperation until 2030. We are ready to continue uninterrupted shipments of fuel for the fast-growing Indian economy.
Joining me now to take this forward are Dinakar Perry, Fellow in the Security Studies Program at Carnegie, India; Jayant Dasgupta, former Indian Ambassador at the World Trade Organization; Manjeet Kriplani, Founder and Executive Director, Gateway House; and Tatiana Romanova, Associate Professor at St. Petersburg State University. Thank you very much, ladies and gentlemen, for being with us. Ambassador Dasgupta, trade. This was the big focus of talks between President Putin and Prime Minister Narendra Modi. Immediately after hearing the leaders, hearing them at the business forum, what do you think will be some of the immediate outcomes on the trade front, and how our trade, especially our exports to Russia, could increase?
I think a few areas have been already identified by President Putin and Prime Minister Modi. Pharmaceuticals is one of them. Auto components is another. Agricultural products is a third one. Engineering products is a fourth one, apart from auto components and autos. So there are these areas where there could be greater flow of trade. But what I wanted to emphasize, and I have picked it up from Prime Minister Modi's speech, he talked a lot about collaboration between the two countries in terms of sharing of technology, in complementing each other's strengths. For instance, in textiles, India is strong in cotton, but Russia is very strong in the man-made fiber segment because of its large petroleum base. So, Prime Minister Modi also spoke about utilizing the synergy between these two countries and the technology that they have to benefit third world countries like in Africa and other parts of the world. So I think it is a broader message to the rest of the world. It is not about Russia alone, India alone, and making these two countries great again. It is about taking everybody together. And therein lies a broader message to the rest of the world, I think, because trade will take place, it will increase, but the benefits will also be shared with other partners.
Right. Let me go across to Manjeet Kriplani. Manjeet Kriplani, how do you see the optics of the visit? A 15-hour car ride where they spoke and discussed things behind the scenes. 2-hour-long dinner. Today also, the bilateral talks and delegation-level talks spilled over. The press conference began late. Overall, how do you see the optics of the visit?
it makes India look like a very strong country, that it's a country that really doesn't care about global opinion. We are looking to our own interests, much like the US is doing for itself. It looks pretty good. Russia has been a strong friend to India for many years. And I think that if you had to ask anybody, what's your friendship like with the US, really people wouldn't have much to say. But if you ask them, what's your friendship like with Russia, they would say very strong. So the optics are looking pretty good. India is looking strong. And I think we're handling it quite well. Mr. Modi is a master of optics. And so we should trust in his instinct.
Right. Tatiana, if I were to ask you, this was an important visit for President Putin, keeping in mind the kind of pressure he is under from Europe and the United States to come to some sort of peace agreement with Ukraine. Apart from the strong economic component of the visit, we also saw the president launching the Russia Today India channel. What do you think this 23rd Russia-India Annual Summit does in terms of laying the foundation for the next few years in bilateral ties? Prime Minister Modi, in fact, thanked Putin in that press conference earlier for laying the foundation of India-Russia relations 25 years ago.
Well, I think Indian-Russian relations are very old, and they are based on strong traditions. Like, we can go back to the tradition of relations between the Soviet Union and India, when it was important for the Soviet Union to have good relations with the non-allied countries. And then nowadays, today's sort of like period, in fact, goes back to the year 2000, when the strategic foundation for the relations was laid. In present circumstances, Indian-Russian relations for Russia are about, of course, geopolitics, but geopolitics not in terms of making friendship against somebody, but rather geopolitics of making friendship for something. And in this particular case, for multipolarity, for polycentricity, for international relations being more democratic and not just based after Western-designed patterns. But it is, of course, also about economy, and the discussion is about mutual benefits, about a variety of logistical sort of like chains that are being created. So it's about broader foundations. It's not only about geopolitics in terms of multipolarity, it's obviously about economic and mutual benefits. And it's about cultural relations, because much has been also said about broader relations and about more information about Russia and India, about India and Russia, about more expertise, about more student exchanges, so about the dialogue that will be reaffirmed through societal links in a way.
Okay, Tatiana, I'm going to come back to you. Dinakar, welcome to the program. Let me ask you about the defense partnership. We had been told by multiple sources ahead of this visit that don't expect any big deal. And even in the press conference and the joint statements, we just saw a few lines by the leaders in the end where they said that we had good discussions on the military technical cooperation, which will continue. Russia will continue supporting India's needs. India said that we will look at co-production, co-development. What do you think would have actually been discussed behind the scenes realistically? Would it be the BrahMos 2? Would it be Su-57 or the S-500?
Thank you, Parikshit, for having me here, firstly. And so to get into the issue, as you rightly said, the sense was there'll be no one big ticket, defense deal to be signed in the visit. The visit, as we saw, and as you also rightly said, is high on symbolism, optics, sending a message. It's really high on that. And that said, Russia has actually put out a lot of things on the table for India. It has literally offered all its frontline platforms, more S-400s, S-500s, additional lease of Akula-class nuclear attack submarines, and so on and so forth. I mean, literally everything is on the table. But from an operational, practical sense for India, so what fits in? Where is the congruence between the two? post-Opsindur, India is definitely looking for more S400s. I mean, it's become pivotal. How the role played by S400 and BrahMos in Opsindur, we saw, how really they became game changers, as termed by both the Indian Air Force Chief and the Defense Minister. So there is interest in that, and a hypersonic version of the BrahMos is already under development. That's a natural progression. It's already happening. So more S400s, probably yes, once the current deliveries are completed, because 2 more regiments of the 5 contracted are still pending. So that's a priority right now. And Su-57, as you said. So that's a bit of a debate going on within the Indian Air Force right now. Indian Air Force and the MOD. So that's because the Indian Air Force is in a very precarious situation with respect to its fighter squadrons at the moment. So what do? Do they go for more Rafales or 114 Rafales, or split it between the Rafales and some 5th generation stealth Su-57s? So that's a debate ongoing. Russia has, from its end, offered full license manufacturing in India. That's offer stands, but we have to see the call taken. It's more of an operational and a military necessity. I guess that will cross it in the near future, probably, and the time is approaching. We have to take a call. So that's it. One step ahead. There's also some conversation of more joint projects. So what is it at the moment? We do not know as yet. Probably the joint statement may or may not give any sense, but probably we'll get some clarity in the near future. Another area is shipbuilding. So just one thing, shipbuilding is actually something which is going to go probably in a bigger way, because there is a significant overlap of interest. Russia wants India in the Arctic, in the Far East, because that also offsets Chinese presence there. For India, it's a good source of hydrocarbons, etc. So there is an agreement, understanding already for Russia to train Indian sailors in polar navigation and to assist Indian shipyards in building non-nuclear icebreakers. I'll stop there.
All right, we're going to take a short break. We have received the joint statement from the Ministry of External Affairs. We'll quiz our guests over that in just a bit. I'll request everyone to stay with us. We'll be right back.
It is basically an extension of an agreement we had with TAS since 2014. So it was expiring and we have renewed it. But the significance is that the renewal comes at a time when the world is changing. There'll be no third-party filter changing giving a slant or a different inflection to a story from India.
Welcome back. You're watching our special broadcast on the 23rd India-Russia Annual Summit. We still have with us Dinakar Perry of Carnegie India, Jayant Dasgupta, former Indian ambassador at the WTO, Manjeet Kriplani, Gateway House. Manjeet Kriplani, if I can ask you about the two agreements, one on migration and mobility of skilled professionals, and secondly, the Prime Minister's announcements on 30-day e-tourist visas for Russian nationals. How important are they in the current context?
The the mobility agreement is particularly important because Russia, as you know, a lot of their boys have gone up to the front. They used to have a lot of labor from the Uzbekistan, etc., Central Asia. That is not enough because Russia has to rebuild itself. Its defense factories have to go on. So our labor is really important. I think Mr. Modi had said in his statement that he is going to skill the labor and make them Russia ready, teach them the language. This is critical. We can't send enough of our labor to Russia. I mean, we can accommodate even up to 2 lakh of our young people going there. I have seen the labor travel to Russia. They prefer going to Russia rather than going to the Middle East because they say in Russia they're treated as equals. So you can see on the flights on Aeroflot from Delhi to Moscow, the first timers who go is sort of a little bit rough, and they come back, and the second timers are much more polished. It's a very different game from sending our labor to the Gulf. So I think this is the great way for them to also learn another language and to be in a European environment. And on the other, you talked about the e-visitors. Why not? We already have so many flights coming in from Russia, so many visitors who are all over the place. They're in Odisha, they're in Goa, they're everywhere, and they're coming on special flights, so why not? Actually, we need to send more of our people also to visit Moscow.
All right. Let me also get in Jayant Dasgupta. Ambassador Dasgupta, when it comes to fertilizers, there was an agreement signed on fertilizers. Secondly, both sides decided to increase production of urea. How important do you think this is?
This is extremely important because urea basically is a byproduct of the petroleum industry. And since the Russians have a lot of the feedstock, so their prices are globally competitive. And of course, it could be negotiated. So it would be a very steady source of supply for India, which requires a lot of urea. It doesn't produce enough in the country, and it does import a lot. So that would be a very good, I think, avenue to explore. And to get into this kind of an agreement for specific purposes, I think will bode well. So this is going to be a good thing.
Okay. My final question to Dinakar Perry. Dinakar, when it comes to the logistics agreement, the military logistics pact that has now been ratified, it is an older deal, but which has been ratified now. How important and significant is this, and how would you compare it to the LEMOA that we have with the US?
So, the RELOS, as it's called, the Russian version is called, it's been actually there, as you said, for many years now. I mean, for some reason or the other, it somehow did not get, see the conclusion. So now we have it. So what does it mean? It's more of an administrative arrangement. It simplifies. I mean, for example, India and Russia have actually been doing joint exercise for a very long time now, without an agreement. So this kind of simplifies that, improves the ease of, commonalities of, just simple things like fuel exchanges, exchanging personnel, where required. It removes redundancies in the cooperation. 1. 2, what is its significance for India? For India, this gives access to Russian military facilities in the Arctic. In the sense, for operational turnaround, again, for replenishment, for visits, exchanges. And why is that important? Because India is now investing in the Arctic. The earlier point I mentioned about the Arctic and shipbuilding cooperation, this in a way kind of juxtaposed into that in the larger sense. So this is significant in that. And for the Indian military, this is a series of these agreements which enable expanding their footprint. They reduce operational turnaround, ease of maneuver operation. You don't have to come back to Indian soil for everything. You can do it far away.
All right. We've run out of time, but thank you very much, Dinakar. Ambassador Dasgupta, Manjeet Kriplani and Tatiana for being with us. With that, it's a wrap on this edition of News Center. More updates when we return.
Let's talk money.
Hello and welcome to another edition of Let's Talk Money. I'm your host, Surabhi Upadhyay. As rising pollution levels become a pan-India problem for many months of the year, this week we have decided to turn the spotlight on health insurance. Now, claims relating to respiratory and other pollution-related ailments have been on the rise. So is our current health policy keeping us adequately protected? Or is there a need to do something more? Do we need more plans? Do we need add-on covers? Do we need to go back to the drawing board and check the math? Plus, we also need to understand how health plans are evolving in the zero GST era now that GST on health insurance has been cut down to nil. So joining me to discuss all of this are Priya Deshmukh of ICICI Lombard, Amit Chhabra of Policy Bazaar, and Sanjeev Bajaj from Bajaj Capital. Ladies and gentlemen, thank you so much for joining in. Really appreciate all of you taking out the time because we have an important issue at hand. When I thought about this subject itself, because we were getting some queries on it, my first instinctive answer was, no, it shouldn't really matter. Your adequate, current policy should be adequate if it's regular respiratory or cardiac ailments. But then I thought, no, let's check with the experts. So here we are. And Amit, I want to open with you because I know Policy Bazaar has been doing some research, some survey on this. I think you've gone back and studied pollution-related trends in the last couple of years. And it's showing that indeed there is a marked increase in claims relating to pollution. Tell us more about it.
Sure. So we a couple of interesting trends, came out, and we were looking at how the insurance claims data is linked to it, because one of the things that we hear from our customers a lot of times is that while pollution is an irritant, right, it probably causes a bit of headache, or you have a bad throat. It may or may not cause a long-term harm. That's part one. And the second thing is also, another view that a lot of people have is that if there is long-term harm, is it impacting me right now? So that's why we started looking at the claims data to understand what's happening. Now, a couple of, very serious trends came out. So one, and this we saw, across the years, there has been an increase in pollution-related claims post-Diwali. So typically around this October, November, December timeframe, we see an increase in claims related to pollution. Now, just to clarify, what does claim related to pollution mean? So these could be claims which are very directly attributable to air pollution. So typically respiratory problems, lung-related problems, these are the ones which get very directly attributed. There are a lot of longer-term effects as well, like for example, heart-related problems or cancer. Right now, these are the ones which typically happen over a longer term and may or may not have direct attribution to air pollution. But when it's directly caused, linked to throat or respiratory issues, that's why we sort of attribute it to air pollution. And there, one, we have seen a sharp increase. There's almost a 15% increase in pollution-linked claims. The second, and I would say, it's almost quite sad that the ones which are bearing the brunt, the most of this is actually children under the age of 10 years. So they form a very, very large proportion of the total claims coming. About 43% of the customers who are claiming are because of pollution are little children. Now that's also logical because the airwaves are smaller. They are also more susceptible to infections around pollution. So it's logical, but yeah, it's quite sad that is also happening.
Yeah, that's really important. And I think as the rest of our data, which is on the screen, will show our viewers, that this is not just a Delhi problem. These claims have been rising in other cities as well, in Mumbai, in tier 2 towns, or in other cities like even Hyderabad and Bangalore for that matter. Bangalore was an interesting one that really struck me, that even in a city like Bangalore, which arguably has one of the best temperatures and climates in the country, there is an increasing incidence of claims relating to pollution-linked illnesses. Sanjeev, your opening thoughts. What are you observing? And that really critical question, that could there be an outer chance that in my current policy, usual, health policy, there could be inclusions which keep me away? That's the biggest worry, I think, among the customer base.
See, the biggest problem right now is that most of the people are not adequately insured. They are not keeping into the mind that, look, their salary is increasing in single digit, but the health insurance inflation is in double digit. So if a treatment which costs 20 lakh today is in 20 years is going to cost 2.8 crores. So, that is the kind of medical inflation that we are seeing, and most of the people are underinsured. And what they don't realize that the medical claims are very long, especially pollution related. If you get something happens to your lungs, or you are having severe asthma or asthma related, these are very expensive claims. This is not something you can go and pay 30,000, 50,000 or 1 lakh. What we have seen is not only the quantum of the claims, but it is also the amount per claim in case of pollution claims is very high. People are getting sick, they're getting pneumonia, they're getting hospitalized in the hospitals for a longer term. So the average claim size is also gone up. And the first thing you need to do is increase your sum insured. And you have to insure for the sum insured you require in 10 to 15 years, not what you require today. Because if you increase it later, then whatever pre-existing has happened, the unconditional claims payment will not happen if you really, because that will only be for the sum insured you were carrying in the past. So I think for the pollution, the biggest impact that people need to keep in mind is that the size, the quantum of a pollution-related claim is very high because pneumonia takes at least 2 weeks to 3 weeks to clear out. The hospitalization is much longer. Also, another thing that people need to keep in mind is that claims for newborn babies which are being born during the high pollution time, there are a lot of problems they are facing. And most of the time, these babies are not covered in any policy. So we have not bothered to take a policy which covers newborn babies. So if you are pregnant or you are planning a child, must make sure that you have a protection for your newborn baby also because of this pollution. These are a couple of things that you need to keep in mind.
That's a great point, and I think one that would be easily missed otherwise. When do you start insuring a child, a newborn? In fact, Amit, let me throw that to you. So one point that Sanjeev has made, that make sure that your cover itself is big. And by big, you gentlemen can define big. I'm guessing big these days has to be above maybe 1 crore. And then weigh in on the point of covering infants, because your study is also saying that it's children who are getting impacted the most.
So I think very pertinent points, Surbhi. See, a question that we get a lot as well is what is adequate sum insured, and depends. So I'll just take this. It's a very important point. One, it depends on what city you're living in, because the cost of hospitalization in, let's say, a Delhi, Mumbai, Bangalore, Hyderabad versus a cost of hospitalization in a relatively smaller city is different. So if you are somebody who stays in a tier 1 city, you should at least look to have 10 lakh rupees per person of sum insured. So let's say if you're a family of 3, then you must have about at least 30 lakhs sum insured. If you're in a smaller town, you can live with a slightly lower sum insured as well. So you could live with, say, even 20 lakhs or 15 lakhs of sum insured instead of 30 lakhs for the same family type. But here is the catch. The cost of the higher sum insured is actually very minimal. So let me give you a perspective. If the cost of 10 lakhs sum insured for a family is, let's say, 100, then the cost of 1 crore, which is 10 times the sum insured, is going to be about 115, 120. So it's not significant delta to get a very high sum insured. So as you just said, the right sum insured to buy is a 1 crore sum insured. It protects you now, it protects you forever, because this is a lifelong renewable product. So it protects you forever against any illness, be it pollution linked, be it cancer, heart.
Sure.
It could be anything, right? And see, it's also very important to understand that today, because a very common perception that we see specifically amongst the younger people is that I'm young and fit and healthy and nothing's going to happen to me. So I would buy a higher sum insured when I get, when I get older. Maybe I can buy at 60, 55, 60, or that age.
Sure. No, and Amit, I'm sorry coming in, because of lack of time. And this is something we've covered in the past as well, that you need to have plenty of coverage and it needs to be a very comprehensive health cover. And both of you are reiterating that point. I completely take it. But on the point of covering children and infant, now if there's a newborn, I don't know if a family floater automatically covers the newborn. What should you do to ensure that young children in the family are adequately protected, not just the mother and father?
So, sorry, this is for me, I'm assuming.
Yes, Amit. Yeah.
So by default, every floater policy, in every floater policy, you can add a newborn after 90 days. Typically, that is the standard process that is there in health insurance right now. So after 90 days of childbirth, you can add. The only catch is if you've already bought a policy which covers for maternity, there are some special policies which cover the child from day one itself. So if you're somebody who's planning a family right now and this is something that does bother you, you may want to buy some specialized policies which cover the child from day one. if you have an existing policy already, don't worry. After 90 days, a child can be added by default. There is a good health declaration that is required. So, the insurance companies typically want to check that there is no pre-existing disease, something congenital that the child may already have. But beyond that, it's a very, very standard process. Children are covered. And if there's any problem linked to pollution or otherwise, they are all covered in the health insurance policy.
Okay, that's helpful. That's helpful to know that you can take add-on covers for absolute newborn infants. But otherwise, after 90 days, a family floater can also cover the children. Priya, very quickly, to close the loop on the pollution-related subject, tell us what should be the most important questionnaire list, the checklist for us, the policy buyers, to ensure that we are fully covered and that we don't hit any exclusions when we actually go in for a claim, which could be related to lung. I mean, I don't know if insurers right now are making a distinction. You can have pneumonia due to X number of cases. Pollution could be one of them.
That base insurance policies do cover pollution-related claims, and typically, these claims are related to upper respiratory tract, lower respiratory tract, so a couple of eye kind of ailments. So all of these are covered typically in the base insurance product. So from a checklist perspective, I guess, what is the sum insured that you're covering yourself and your family for? And any pre-existing disease that is, connected to any of these ailments that I mentioned should be very clearly declared. So I don't see a reason that, customers like yourself or any member should be concerned whether pollution-linked claims can be paid.
Okay, all right. We'll take a very quick break on that note, come back on the other side. And then the other big development, right? Now, we don't have to pay 18% GST on our health insurance plans. What does that mean in terms of coverage, in terms of the features of the product? We'll discuss it with our panel of experts after the break.
Let's talk money.
Some legacies are not written, they are heard, passed from hand to hand, string to string, and breath to breath. For over 2 centuries, the Senior Beankar Gharana has carried a sound older than memory, yet alive in every generation that holds the Sarod close to its heart. 5 artists, 3 generations, 1 unbroken lineage, discipline, and divine music. A family not bound merely by blood, but by a shared destiny to keep a centuries-old tradition singing into the future. At the center of this extraordinary lineage stands a maestro whose life has been inseparable from his music. A prodigy shaped by the rigorous discipline of his father, Ustad Hafiz Ali Khan. A child who took the stage at 6. For more than 60 years, he's carried the Sarod from Gwalior's courts to the world's grandest halls. Carnegie, Royal Albert, the Nobel Peace Prize concert, becoming a bridge between cultures and generations. A legacy so profound that the city of San Diego marked April 13th in his name, Amjad Ali Khan Day. Honored with global accolades, he remains the eternal student, a tireless guru and the beating heart of the Sarod. Today, we celebrate a legacy carried forward across 3 generations and bring together all 5 torchbearers of this extraordinary musical dynasty. It is my honor to welcome the living legend himself, Sarod Maestro Ustad Amjad Ali Khan. Khan Sahab, what an absolute pleasure and an honor it is to have you join us on the Young Turks Reloaded podcast. I was just telling you, we were here shooting in your wonderful home a little over 20 years ago. So life has come a full circle for us and life has come many circles for you. I want to start by asking you, Khan Sahab, about the last 60 years. What is your first, most vivid memory of picking up the Sarod?
I'm very fortunate that I'm born in the family of musicians. All the men in our family played Sarod, and my father tried on everybody, my uncle, my brothers. My eldest brother used to travel with my father, he used to perform. Then second brother traveled, then third brother traveled. But somehow, in between, they were not serious, or they didn't give enough time. So all my father's friends, father's disciples, अब तुम्हें ही करना है, you have to do, you are the Khalifa and you have to do that. So, to make me realize my responsibility. But I could not, because of that, I could not enjoy my childhood, the freedom of childhood. My father did not want me to go to school. He didn't believe that it's necessary. वालिद साहब हमारे कहते थे हम एक जीवन में एक ही काम कर सकते हैं. You can't do everything. या स्वर को समझ लो. स्वर का मतलब the sound, the music, या किताब को समझ लो. And because my father was most revered and respected and very popular, and he was called Aftab-e Sarod, Prophet of Sarod, Sarod Wizard, and this and that. तो उस वजह से मुझे भी लोग बचपन से बुलाने लगे. I mean, I must have been... but my first concert, according to my biography, I was 6 years old when I was pushed onto the stage. सूली पे चढ़ा दिया जैसे. तो ग्वालियर की एक ऐसी हिस्ट्री रही. Gwalior produced many musicians. I mean, legendary Tansen. Mia Tansen was born in Gwalior. His samadhi is in Gwalior. और लेकिन वो माहौल, यानी आज का जो माहौल है ग्वालियर का कि हर आदमी एक नेता बनना चाहता है, अब वो साधना वाले लोग अब वहाँ नज़र नहीं आते हैं. तो हम भी 1957 में वी शिफ्टेड टू दिल्ली. तो आज जो कमानी हॉल है, रविंद्र भवन है, हम लोग वहीं रहते थे पहले. वहीं था भारतीय कला केंद्र, और यानी वहीं से बंगाली मार्केट, दैट मंडी हाउस एरिया, सो वी यूज्ड टू लिव देयर. तो व्हाइल आई वाज ऑल द ग्रेट म्यूजिशियंस, ग्रेट डांसर, बिरजू महाराज के अंकल लोग, शंभू महाराज जी, पंडित शंभू महाराज, डागर ब्रदर्स, उस्ताद मुश्ताक हुसैन, बड़े बड़े म्यूजिशियंस, दे वर टीचिंग इन भारतीय कला केंद्र. तो मिसेस चरतराम, सुमित्रा चरतराम, she took a lot of interest in Bharatiya Kala Kendra, and she persuaded my father and many other disciples that I should go to school. My principal was very kind, Mr. M.N. Kapoor. तो वो विंटर में 2 घंटे का फुटबॉल का पीरियड हो रहा है. आई यूज्ड टू प्ले फुटबॉल, हॉर्स राइडिंग भी करी. मैंने कहा सर 2 घंटे में फुटबॉल खेल के क्या करूँगा, प्लीज़ अलाउ मी टू गो होम, मैं जाके रियाज करूँगा जाके. तो ही वॉज वेरी काइंड. he used to allow me to go home. कागज़ के ऊपर मुझे मैथमेटिक्स समझ नहीं आता था. अब मैथमेटिक्स हमारी लाइफ में इतना है, लयकारी जिसको बोलते हैं, रिदम, ये सारी चीज़ें, this is mathematics. Then one day my father took me to Mr. Emil Kapoor कि साहब इनका मैथमेटिक्स कैसे ठीक होगा. कपूर साहब ने कहा, खान साहब ये मैथमेटिक्स में कोई पास नहीं करेंगे और मैं इनको कभी फेल नहीं करूँगा क्योंकि ये सरोद बजाने के लिए आए हैं. Then 1963 a delegation was going to America, including पंडित बिरजू महाराज. और बिरजू महाराज ने कहा, भाई आप मेरे साथ सरोद बजाइए, मैं आपके साथ तबला बजाऊंगा. He was a good tabla player also. And there were many dancers, musicians, and the leader of the delegation was Srimati Naina Devi. She created Rag Rang organization in Delhi. But my father was afraid of flying. He never flew. अब बच्चा अमेरिका जा रहा है तो और भी उनको he was so tense and worried. अब सब लोगों ने बहुत परसुएड करा, उनको अपील करा कि ये इजाज़त दे दीजिए. इट्स इन्विटेशन फ्रॉम एशिया सोसाइटी ऑफ न्यूयॉर्क. So finally we all went to America, and that was my first foreign tour. And for 2 months we were traveling all over America performing. और फिर एक ऐसा कॉन्सर्ट हुआ, मैं नाम भूल गया उस ज़माने में. इट वॉज ए एरिना स्टेज. चारों तरफ ऑडियंस बैठी है, बिरजू महाराज बोल रहे हैं, यार मुंह किस तरफ करना है. मैंने कहा, भाई हम लोग अपना अपना पीठ जोड़ के बैठ जाते हैं और वी विल ट्राई टू रोटेट लिटिल बिट. तो वो इट वाज वेरी I really enjoyed, and that was the time Indian classical music was being realized. And बचपन से मेरा obsession था और ख्वाहिश थी that I wanted to sing through my sarod. Sarod was, in every era, there were great sarod players and they all contributed a lot. कुछ लोगों को भगवान ने अपने हाथ से बनाया हुआ होता है. अब जैसे जाकिर हुसैन अचानक चला गया, वो भगवान का बनाया हुआ बंदा था. वो हमारे साथ कितने कॉन्सर्ट्स उसके देश में भी हुए, विदेश में भी हुआ. कुछ सिक्स सेंस था उसको, म्यूज़िक का, रिदम का, तबले का. ही बिकेम द फेस ऑफ तबला. तो बिस्मिल्लाह खान साहब भी एक ऐसा शहनाई प्लेयर पैदा हुए जो आप उनकी जवानी के रिकॉर्ड सुने तो फायर वर्क है उनके अंदर. उनकी वजह से ही शहनाई पॉपुलर हुई और वो ही हैड ए कंप्लीट लाइफ. उसके बाद वो आज भी आपको शायद मुश्किल होगा कि इफ आई आस्क यू हु इज द सेकंड शहनाई प्लेयर, शायद आप नाम नहीं बता पाएंगे जी. हु इज द सेकंड तबला प्लेयर, आप उसका भी नाम नहीं बता पाएंगे शायद. तो सम पीपल वर सेंट बाय, भगवान ने भेजा दुनिया में.
You didn't have a formal education, so to speak of, but yet today, ironically, you have residency programs across a whole host of colleges in the world.
Yes.
How does that make you feel as you enter a classroom today to try and explain what music is, what music should be? How do you explain Indian classical music to an audience that may not necessarily be
You see, those few years in school, because of that I could face the world. And because of that, I did residence in Stanford University. I was there for 2 months. I was teaching them, not sarod, but music in general. What is music? What is the difference between Western music, Indian music? Any country, all the musicians of the world, we are like a family. We are using the same 7 musical notes. Da, ra, 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 ra. यही सुर है 7, सब कोमल तीवर मिला के 12 हो जाते हैं. तो whether it is folk music, whether it is western music, but western music में क्या है कि they write music, they read music, वो भी एक अलग ही दुनिया है. You know, certain things are good for the Western world, certain things are good for India. But one, AI cannot help the whole world. AI cannot help my music. Because you need... अब ज़रा सी बात है ये कि पूरी दुनिया में they write music, they read music, but लेकिन हम जो ये काम करते हैं अब ये लिखा नहीं जा सकता
तो AI पे बनाया भी नहीं जा सकता
नहीं कुछ नहीं Music is a precious gift of God. Music does not belong to any religion, like flowers, air, water, fire, fragrance, colors. And music has connected the world. I could never imagine that in 21st century people will still kill each other or fight each other on account of religion. I'm very sad to see Russia-Ukraine war, Israel-Palestinian war. Today's human being has become the most ferocious animal. I'm sorry to use this word. क्योंकि बेरहमी इतनी बढ़ गई है, arrogance इतना बढ़ गया है कि I'm afraid what kind of future our younger generation will have. तो ये सारी बीमारी है. जैसे कैंसर का इलाज हो रहा है, arrogance का इलाज नहीं हो सकता. I think the medical world, they have to produce a tablet how to become kind and compassionate.
We have to leave it to the scientists. We have to leave it to the scientists to do that.
Because we are using tablets for everything.
Forward the legacy into its seventh generation, Aman and Ayan Ali Bangash have carved a global presence of their own. With performances from Carnegie Hall to the Kennedy Center, collaborations with artists like Derek Trucks, Sharon Isbin and Evelyn Glennie, and their recent Global Music Award-winning album, Peace Worshippers, they fuse tradition with contemporary experience.
बजे से खड़े हैं, ये बोल रहे हैं कि 2500 बैगेज मिसप्लेस।
Trying to contact even the customer care, but no one is lifting the phone.
कस्टमर सर्विस क्या होता है? कस्टमर तो युवा कस्टमर सर्विस। हमारे पीछे वाले फ्लाइट चले गए और हम लोग इधर ही है अभी तक।
Call center is not picking up the call. I'm putting my PNR, it's saying non-existent.
What is the half of the sector? It is not every week.
हमको नहीं पता था, हमारी फ्लाइट कैंसिल नहीं है, हम अपने घर से आए।
1 बजे डिपार्चर था हमारा, लेकिन वो भी कैंसिल हो गया।
यहाँ पे 3 दिन वेटिंग कर रहे हैं हम।
जैसा यहाँ हमने लैंड किया, उसने बता दिया कि आपका फ्लाइट कैंसिल है।
Hello and welcome to this special broadcast. I am Shivani Bajaj. 4 days into the crisis at Indigo and the government has buckled. The crew rostering norms, which mandated fewer allowable night duties and longer mandatory rest periods, have been paused. In a statement, the Civil Aviation Minister said that the government has also announced an inquiry into the disruptions at Indigo. Meanwhile, ordeal for Indigo passengers continued for the 4th day with over 500 flights across India cancelled. Remember, Indigo accounts for an over 60% share of the domestic aviation market and had earlier told the government that the new rostering rule had led to the shortage in availability of adequate pilots. However, the pilots' associations have attributed the crisis to the airline's arm-twisting tactics. They claimed that Indigo's prolonged, unorthodox, lean manpower strategy is the reason behind the current flight disruptions. My colleague Madiha Mujawar joins us from outside Delhi Airport. Madiha, the FDTL rules had become a reality after a long legal fight. Why was Indigo not prepared despite a 2-year transition time?
Well, Shivani, right now, as you said, I am outside Terminal 1 of the Delhi Airport, where hundreds of passengers, frustrated, disgruntled, are stranded, clueless, waiting for clarity what is happening with their flight because they didn't know their flights are going to be cancelled. All flights, all departures from Delhi Airport, as we have been mentioning, have been cancelled for today. So let's first explain the very rules that are now put in abeyance. The revised FDTL norms were introduced in January 2024. They faced a lot of opposition from the airlines. Airlines said that it will, disrupt their schedules and increase their costs. Then the Delhi High Court had to order the implementation, and the DGCA then rolled out the implementation in 2 phases. The first phase was implemented on the 1st of July. The second phase was implemented on the 1st of November. Now, what these new FDTL norms do, they provide more rest to the pilots. So to mention about the rules, weekly rest was increased from 36 hours to 48 hours. Night landings were restricted to 2, and the definition of night was expanded from midnight to 5 a.m. to midnight to 6 a.m. Now, what did this do? It required airlines to hire more crew, and which is what happened at Indigo. Indigo told the aviation ministry yesterday that it misjudged the situation and it underestimated the requirement of crew that it will need to fulfill this gap, and the cracks started to show up exactly because Indigo has a large chunk of the 2,200 flights in the night. And the restriction on night landings and the expansion of night definition hit its operations, and it fell short of about 300 pilots to operate its flights. It had expanded its winter schedule, it had added more aircraft, but inadequate number of pilots to operate these flights, and that is what has led to these large-scale cancellations that we've seen in the last 3 days, and which is what has led to this situation, and which is what has triggered the aviation ministry to put these rules in abeyance.
Right, Madiha. Right. To now take this discussion forward, we are now joined by M.R. Sivaram, former Directorate General of Civil Aviation, and Captain Anil Rao, General Secretary of Airlines Pilot Association. Gentlemen, thank you so much for joining us on this program. Let me begin by asking you the first question, Mr. Sivaram. Putting FDTL norms in abeyance may help Indigo operationally right now, but does this compromise pilot fatigue safety? How, in your view, does the DGCA justify easing safety norms to fix an airline's scheduling crisis?
I don't think it can justify at all.
because these rules were announced in late 2023, and it was a phased introduction of these rules. Therefore, the airlines should have been prepared for this. Airlines should have acted on it. Probably they did not do it. And I fully agree with the Pilots Association that the airlines probably wanted to economize on employing more manpower. The second point I want to mention here is I flew into Bangalore from Varanasi only about 5 days ago on 25th of November, 10 days ago. And till such time, the Indigo flights were absolutely on time. But I found on the airport at least 15 to 20 Indigo aircraft parked there without the engines. So these aircraft would have been in the fleet till such time the engines were working or they were sent abroad for repair or whatever it was. Therefore, they had those pilots. What happened to those pilots? So there has been some bungling in the scheduling of the crew, particularly after the DGC announced the forceful implementation of the new FDTL. The third point I want to mention here is that these FDTL rules are not new. They were there in existence for the last 30 years, excepting that they have been tightened a little more in giving more rest to the pilots and a little bit of tightening on the night landing of the aircraft to give more rest to the pilots. So the airline should have, such a big airlines which has been functioning so well for so long and garnering almost 60% of the passenger traffic, should have known this, that it was coming. Why didn't they employ the pilots? So the blame is entirely on the airline. Secondly, I would also to a certain extent put the blame on the DGCA. They should have been also watching whether the airlines were implementing the rules that were to come into force. Now, buckling when it has reached a crisis stage is probably not appropriate, but I would certainly pity the DGCA because he has no other alternative but to buckle now, because the passengers, thousands and thousands of them have been stranded, and the intensity of traffic will increase in the next few days. Further to that, there will be also problems with landing in Delhi with the fog coming in.
Well, let us now bring in Captain Anil Rao of the Airline Pilots Association also in the discussion. Captain Rao, you were already fearing that this is going to happen, that this is an arm-twisting tactic by the airline to force the DGCA to withdraw these norms, and that has finally happened. The Aviation Ministry has put the rest norms in abeyance. Do you feel it was an engineered crisis?
Thank you, Madhya, to have me on your news channel today. To begin with, the onset, I'm quite surprised that you have informed me that is it that the whole FDTL has been put on abeyance or the phase-wise implementation is put on abeyance? I'm still not very sure. I just heard from you saying that it's been put in abeyance because we just about a while ago had a meeting. The Pilot Association, other unions had a meeting with the MOCA himself, and we were not aware that the whole rule would be put in abeyance. Quite surprising that where we were expecting something to come positive out of it and enhance safety, the whole scenario has changed to now accommodate an airline's request or demand, I would say, for commercial interest. To begin with, it is quite surprising. I'm quite surprised. I don't know how to express this. If it isn't put in abeyance, then we are just repeating history. The first rule, FDTL rule, the car was made in 2007. And if you go back in history and see the 2007 rule after made, it was put in abeyance. India is probably the only country which puts rules in abeyance after being implemented. It took 4 years, exactly 4 years for a new rule to come in 2011. Till then, we flew with an old archaic FDTL rule. That was not an FDTL rule. It was called a circular, AIC 1992, for almost 20 years. So my worry here is, are we going back to the same time again in Jurassic Age, that we buckle under the pressure of the operators and their commercial interest, and not only have we not given them dispensation and variation and exemptions, we have taken the whole rule out of the book and put it in abeyance. Abeyance means forever. We don't know, for how long is this rule going to be in abeyance? And we've gone back to the 2019 rules, FDTL rules, which was modified and upgraded for safety. Now the whole question is, what are we looking at? Are we looking at safety, passenger convenience, or do we all put together that it is more to do with commercial interests of the operators? And that's quite surprising that we have put in a regulation or a rule or a law in abeyance again. So how long do we keep doing this and putting people's lives in danger? Because the car or the FDTL is not for any pilot welfare or their families and all. It is for passenger safety only. That is why these rules are made, so that the pilots who are flying the aircraft are not fatigued and cause compromise to the the passengers flying. So what we have been telling is, point number one, if I come to the crew shortage, I'm not very sure if it is crew shortage, because we do not see any crew shortage. Why? Because
the Director General of Civil Aviation, the DGCA, in the morning had issued a statement urging pilots' unions to cooperate and also assured that the FDTL norms will be implemented in letter and spirit. And few hours later, we got the statement from the ministry that the norms have been put in abeyance. So it's a relief for airlines, but a setback for pilot unions.
So I don't know what to say. They say trust us, cooperate with us, and when we are here to cooperate and trust, and this is what we get back is a total shock to us and a wishy-washy rules and regulations. Then why have a rule in the first place? First, to get the rule. In 2023, ample amount of time was given to them to implement their rules. Then they did not implement it. Then the Federation of Indian Pilots went on to the court. Court said implement in 2 phases. It took almost 2 years to get this implemented. So we cannot say that the operator did not have ample amount of time and suddenly overnight he wakes up and says he doesn't have a crew to fly. No, all airline operations work on planning, right? They plan winter schedule, they plan summer schedules. So when they had planned winter schedule, they knew the numbers and they increased their winter schedule operations, and that was again it was approved by the DGCA. So that means the DGCA also knew that they have enough manpower.
Right, there were ample time to be for the compliance of this rule. I'll come to you, Mr. Shivaraman. Again, ample amount of time to comply with these new FDTL rules. Shouldn't the DGCA have anticipated this crisis earlier? With months of warning from pilots about fatigue and rostering, why did the system reach this breaking point? What is your view on that?
To be very frank with you, the pilots also knew about it. I am fully in sympathy with whatever Captain Rao has stated. Fully in sympathy with him, because when I was DGCA, I used to interact with all the pilots. There was only one airline at the time, Indian Airlines and Air India, but most of the pilots I knew by name also. Some of them are alive even now. Captain Paneshwar, for instance, who came on TV yesterday. Now, the point is, the pilots were also aware of the rules. The airline was aware of the rules since 2023. And also from January 2024, the DGCA was aware of the rules. Why were they not following it up with the airlines to ensure that the rules were properly implemented, for which if more pilots were needed, they should have recruited them? Therefore, there has been a failure on the part of all the three. The pilots also should have been warning the airline that you are not implementing the rules, you are not getting ready to implement the rules. The DGCA should have also periodically checked with the airlines to find out whether they were really getting prepared for implementing the rules. So there has been part failure on all the part of the three, on all these three agencies, and particularly so I would say blame first the airline, second the DGCA, and lastly only the pilots. The DGCA should have also monitored it. After all, they are conducting investigations, they are conducting safety checks, safety audits periodically. They should have found out about this. Pilots also should have been very careful to see whether the airlines was implementing the FDTL, new FDTL. If it comes, as Captain Rao says, there is no shortage of crew. Maybe he's right, because he's in a better position to say that. Because till November 25, everything was on time. Suddenly, Did they implement these rules only 3-4 days ago? Why did they not start implementing it from the beginning of this current year at least? They didn't do it. So therefore, there has been something wrong on the part of the DGCA, mostly on the part of the airlines, and the pilots should have been more watchful to see whether they were implementing the rules properly.
But Mr. Shivaraman, does DGCA now need more robust independent fatigue reporting system directly from the pilots then in that case, beyond the airlines, so that the regulator isn't relying on the airline's internal rostering data during such crisis?
As I told you earlier, the Indian Airline Pilot Association, Air India also had, at that time, Air India also had a separate association. They were periodically interacting with the DGCA and personally with me. I knew almost all the pilots by name because they used to teach me how to fly these aircraft in their simulators. So I knew them personally. Whenever I used to be on board an aircraft, they used to greet me, they used to talk to me, they used to tell me their problems. As Captain Rao said, in those days in 1992-93, we didn't have too many aircraft, maybe 100 aircraft, 120 aircraft we had. In my time, the skies were thrown open to private airlines. Then only private airlines started coming in. At the time also, it was relaxed. And we were very strict about the monthly duty time of the pilots, restricting to 75 to 80 hours a month. We did not specify these rest hours in those days. Maybe there was some, I can't remember it now, but there was some flight duty limit. But now, because the passenger traffic has increased, the intensity has increased, the routes have increased, therefore there is pressure on the airlines to make more money, and the pilots also want to fly to the extent that they can do safely. So that's very important. All the three have failed. And you look at the DGCA, 50% of the sanction posts are vacant. And repeatedly I've been saying this. Why are they not recruiting the vacant posts? So that they could at least be in touch with the airline to see whether the rules and regulations are properly implemented or not. So there has been a failure on the part of everyone.
Right. So better regulation and better compliance of rules clearly needed. Thank you so much, Mr. Shivaraman and Captain Rao, to speak to us in this special broadcast. Time for a break. But coming up next, the global CEO of Amazon Web Services plays down fears of an AI bubble, even as he expects some froth among startups. We get you that exclusive conversation when we return. Welcome back. The global CEO of Amazon Web Services had downplayed fears of an AI bubble, even as he expects some froth among startups. Speaking exclusively to CNBC-TV18's Ashmit Kumar, Matt Garman said he's upbeat on India and added that the company plans to invest nearly $13 billion by 2030. Listen in.
It's a question that we get asked a lot, and what I would say is absolutely not. And there's a couple reasons for that. I think that what AI agents have the promise of doing, and what people are so excited about, is that when you think about what you do in your daily job, or what most people do in their daily job, a huge percentage of that is not particularly value added. It's kind of like going and pulling data or doing repetitive tasks where you have to do it in order to get the information together to make good decisions in order to go build. And I think really at the core, people would love to spend more of their day focused on the things that's really value added, that's out creating value for customers, that's interacting with customers, that's doing kind of interviews like this, and those pieces, as opposed to that other piece where you're kind of compiling data and just going and doing some of that information. And so what I do think, though, is that employees are absolutely going to need to be flexible and learn, and they're going to want to adapt, because anytime there's a massive technology disruption, it does require learning new ways of working. It requires learning new technologies. It requires adjusting a little bit. But never have I seen in the history of the world, like the world hasn't seen this, has technology all of a sudden made it so no one has to work anymore. Like that really, or you know, it's just, that hasn't how it happened before. It's unlikely to happen going forward.
Let's talk about some of the other announcements that we saw. Trainium 3 being released, becoming generally available. In the keynote, you teased Trainium 4 as well, which you assure will be 6 times as powerful as Trainium 3. Are you pitching this to your customers as perhaps a cheaper, a more cost-effective solution when you compare it to, say, an NVIDIA GPU?
What I say is I think customers want choice. And so in some cases, yes, I think that Trainium can provide a much better price performance offering for some workloads than some customers. And we see that. We see some customers that build their solutions on Trainium. In fact, we had someone in our keynote today, a startup named Descartes, who talked about how they are seeing 4x better performance on Trainium 3 than they were seeing previously at half the cost. That is an incredible savings for them. I don't think every workload will necessarily see that same savings. Theirs is particularly well suited to run on Trainium, but I think lots will. And so we're very excited. And by the way, we continue to have a great partnership with NVIDIA, and I think many customers will continue to see NVIDIA as the absolute best platform for them to run on. They will continue to get the best price performance on NVIDIA, and that's why we're such good partners with them, and where we have the most robust and the best performing NVIDIA GPU infrastructure.
Let's take a step back and let's look at AI from a foundational technology perspective. There's a lot of conversations that the markets, that the industry raises when it talks about, are we in a bubble? Not very far back, we also had Mr. Bezos talk about how AI as a technology is perhaps in an industrial bubble. There are markets, while they're rewarding companies with trillion-dollar valuations, they also ask questions if there is value behind the hype. They're asking questions if this momentum that we see on hundreds of billions of dollars spent in CapEx every year, will that continue going forward? That's a question, that's a concern that many raise. How would you respond?
Yeah. Well, so what I would say is, you know, I've gotten this question a couple of times, and I think there is no, I think, homogenous answer to what AI is. I think AI as a technology is nowhere near being a bubble. When I ask customers today, do you get positive returns and ROI from AI, and do you think you're going to be getting more positive returns 6 months from now? Almost ubiquitously, people say yes. They absolutely say, yeah, I'm getting value from AI in my business today, and I see a path where 6 months from now, I'm going to be getting much, much, much more value as I integrate it into my production workloads and things like that. I've never seen a world where a company getting positive returns and positive ROI just stops doing it because they think it's a bad idea. Like, that just doesn't happen.
I'll just shift the focus to India. India is a market to which AWS has made a sizable commitment. If I remember the figures correctly, it's $12.7 billion till 2030.
That's right. It's a big source of where our investment is going, and so it's we're making big investments in the country for sure.
I just want to understand when you to your outlook as far as the India market is concerned. It's delivering double-digit growth for you, CAGR basis. What I want to understand is, firstly, on the investment side, over $12.5 billion. Is that going primarily towards building capacity, data centers, or is it going towards talent or AI labs? Just a sense
That's our capex investment. So that doesn't count as people. That is investment in power, data centers, server, networking, et cetera. And so we invest in people on top of that, of course. But we're incredibly bullish about the opportunity in India. We think that the economic potential for the country is just incredible. And we see demand across the startup ecosystem where there's incredible invention that's coming out of India today that has massive need for cloud capabilities, that has massive need for AI. And so we're investing to build that infrastructure so that both domestic as well as global companies who want to come and work to support the Indian economy can do that. And it's coming from startups, it's coming from established enterprises, folks like Apollo Tires and others like that that have a long history of manufacturing, and even folks like that are really leaning into AI on AWS to transform businesses that have been around for a really long time, which is exciting to see. So it's exciting to see the transformation hitting existing established companies as well as brand new startups that are just being formed in the garage.
I think these are investments that India is welcoming, given as how there's a shortage of data capacity. I believe the data center capacity is about 1.5 gigawatts, so India is looking to expand on that as well. Amazon committing to that. I just want to follow up on that. When you talk of the India market, at the end of this investment cycle, towards the end of 2030, when you're done investing and putting in this money in capex, do you have a vision for where you see the India market performing for you vis-a-vis the other geographies? Do you have a target as a top 3, top 5 market that you're looking for India?
It's hard for me to say, other than I think the potential in India is probably bigger than almost anywhere else. Like, it is just, I think as an economy, it is so well situated to take advantage of some of the technologies. And one of the signals that I see of that is just the willingness to move fast, the willingness to innovate, the willingness to lean into technologies. I think is impressive for the country, and so where it ends up. I think the growth is massive. We're seeing growth across industries across the world too. So, with our own teams, it's a healthy competition to see who can grow faster, and nobody wants to be told that they're lagging. So I think everybody is pushing forward to grab the opportunity ahead of us. But I don't know that there's any place that has potential to grow more than India for sure.
That's all we have on this edition of Newsmakers. Many thanks for watching.
Hello and welcome to Startup Street. I'm Arundhati Ramanan and these are the top headlines from the startup world. Zaggle acquires Rio Money for 22 crore rupees in a bid to enter consumer credit on UPI. Zaggle plans to invest 75 crore rupees post-acquisition to scale up the firm's suite of products. Nexus Venture Partners has announced the closing of Fund 8, a $700 million fund to back founders building AI, enterprise software, consumer and fintech startups at inception, seed and Series A stages in India and the US. EdTech firm Neuron has backed 40 crore rupees in pre-Series A round. This non-dilutive growth capital is aimed towards accelerating the company's entry into international school management domain. The growth facility was extended by Axis Finance. The global CEO of Amazon Web Services plays down fears of an AI bubble even as he expects some froth among startups. Matt Garman is upbeat on India and the company's plans to invest nearly $13 billion by 2030. That's an exclusive. Netflix buys Warner Brothers in an $83 billion deal, which includes film and television studios, HBO Max and HBO. The deal is a cash and stock transaction valued at $27.75 per Warner Brothers share. Those were the headlines that we're tracking for you this evening. But on What's Brewing today, Square Yards, one of India's fastest growing real estate platforms, has just raised $35 million, pushing its valuation close to $900 million and fueling talk of a unicorn status soon. With FY25 revenue at 1,410 crore rupees and a trailing 12-month run rate hitting 1,670 crore rupees, the company is now reportedly lining up a larger $100 million fundraise ahead of a planned 2,000 crore rupee IPO in 2026. Joining me now to discuss this further is Tanuj Shori, the founder and CEO of Square Yards. Tanuj, thank you so much for taking time out and being here with us on Startup Street. You know, you've just raised this $35 million and at a valuation of around $900 million, right? So if you could sort of take us through what you do and the key milestones that convinced investors to back this round.
Thanks, Arundhati, for having me here. So Square Yards is India's largest consumer home buying journey platform. In simple words, we help consumer search homes, transact homes, finance homes, and renovate homes. We are one of the most of the consumer, unlike most of the other consumer tech segments, we are category defining leaders in very, very large TAMs, practically no competition. The next largest player is not even 1/3 of our size. One of the few consumer names which are growing at fairly high clip, close to double-digit margins. So I would say fairly attractive story to invest in. I won't comment on the valuation. I think that's just a number through the journey. But I believe what we have built over the last decade is just a start, still a day zero, fraction of the market, and hopefully we'll look to build something meaningful over the next few years.
Look to build something meaningful over the next few years. But you know, you're reportedly also in advanced talks to sort of raise another $100 million via a mix of equity and debt, right? Now, if that's successful, that would obviously take you beyond the unicorn threshold. How will you sort of use this capital? How will you deploy it? And what's the time you're looking at for like closing that round?
So I'm not sure if I'm allowed to answer a couple of confidential things there, but only thing I can say there is there are always growth opportunities. Even though the business is now generating free cash flow, we believe there is an opportunistic growth capital need out there, along with some restructuring on the cap table. There are discussions in advanced stages. Can't comment further, but hopefully we'll be able to announce something interesting over the next quarter.
So hopefully you will be able to announce something over the next quarter. But if you could tell us how you plan to spend the funds that you've raised?
It's a combination of growth capital as well as restructuring of the cap table. I think it's still a precursor to the much larger milestone, which will be accessing public markets, I think, over the next 12 to 18 months.
All right. And, you know, given the integration of real estate brokerage, home loans, rentals, interiors and property management, which business segments are driving growth for now? And where do you sort of see the highest margin or scale potential over the next 12 to 18 months?
And just to put numbers in perspective, we move close to 16,000 crores of real estate every year. We help originate almost 10,000 crore plus of loans every month. If you put these numbers in perspective, we would be amongst top 5, even if you compare us to the manufacturers of real estate and the credit. which is fairly sizable scale. But more importantly, we acquire almost 15,000 plus consumers every month. And a lot of these consumers keep coming back to the platform to use other services across the home buying journey. So we believe that mix will continue. Our ability to remonetize the consumer across various stages, influence their decision-making process, more importantly, help them navigate very, very complex ecosystem. As far as the segments is concerned, the business is equally divided between PropTech and FinTech. Both segments growing at fair clip, both segments profitable, moving towards double-digit margins.
Sure, moving towards double-digit margins. And, with FY25 revenues at about 1,410 crore rupees, like you pointed out, EBITDA turning positive. Could you sort of take us through where you hope to end this year? And what does this say about, your plan to sort of gear up for an IPO? What are the key milestones you want to hit before you do that?
So, thankfully, post-COVID has been a fairly good run for us. So we have grown at a CAGR of almost 52% over the last 5 years. This year, again, been a very strong year. We look to close to 2,000 crore plus revenue, which will be around 40 to 43% growth. Our growth rates should continue in the same domain over the next few years. But more importantly, we are going through a very, very strong operating leverage curve. Our EBITDA this year should jump almost 4x over last year, close to 180 crores. And should double over the next 12 months. So nothing to do with IPO, I think, but it's just that the phase where we are in, I think over the next 2-3 years, we'll be moving towards our goal of close to 20% steady state EBITDA margin, growth continuing being 40% plus.
Sure. And when will we see you hit the last state all on track to have an IPO by next year?
So going public is a complicated process, I think, in terms of preparation as well. Like every other entrepreneur, our dream was to take Square Yards public when we started. We have been working very, very hard behind the scenes on ramping up our compliances, corporate governance to ensure they are best in class. We understand going public is not just a capital raising event, should not just be a capital raising event. It's a massive responsibility you owe to public shareholders in terms of trust, transparency, and very, very high performance and governance standards. We believe we are fairly better prepared in all these aspects now. As I mentioned earlier, going through a very, very important, interesting mix of high growth and improving margins. And we would love for larger public shareholders to participate in our growth story, value accretion story. Hopefully with the TAMs we play, with large TAMs we play, growth we continue to deliver. I believe, I hope public markets will affirm and value our ability to, basically we are the only asset light play to the very, very large urbanization housing story in India.
Sure.
So.
All right, Tanuj, thank you so much for taking time out and being here with us on Startup Street. We wish you all the best on this journey going forward.
Thank you, Arindhati. Take care. Thank you.
And moving on, India's beauty and personal care market is one of the most fiercely competitive consumer categories today, driven by Gen Z demand, new age D2C brands, and a global shift towards skin-first makeup. Cutting through that noise is Favour Beauty, a homegrown inclusive brand that's built its identity around diverse shade ranges and skincare-infused formulations. Favour has now raised 17 crore rupees in fresh funding led by Spring Marketing Capital, with plans to double down on product innovation, expand hero categories like lip and eye, and strengthen its omni-channel presence across marketplaces, quick commerce, and offline retail. Joining me now in the studio is Karishma Keval-Ramani, the founder and CEO of Favour Beauty. Karishma, you're literally sitting on the hot seat. Thank you so much for taking time out and being here with us in the studio today.
Thank you for having me.
Absolutely. You're sort of building a brand and it's called Free and Equal Beauty. That's what Favour stands for, right?
Yep.
So if you could sort of tell us, what was the gap that you saw in this, fiercely competitive market that made you say, I can build something that nobody else has? So what are you trying to do? Who are you trying to target, and what was it that you were trying to build?
Yeah, we often get asked, by incoming investors and everyone in the market, what makes you different? And for us, it's very basic. It's to ensure that every single woman, no matter your skin tone, type or texture, finds products that actually work for their skin tone at a price point that doesn't break the bank. It's as simple as that. It's building India's most inclusive skincare and makeup brand, focused on color, efficacy, and focused on products that actually have skincare benefits despite being in the color cosmetic category.
Absolutely. Absolutely. And you've raised the 17 crore rupees, right? If you could sort of take us through what your top deployment priorities are right now, how much of this capital goes towards new product development, expanding your shade range and scaling your omnichannel presence as well? We'll get into details, but how do you plan to spend these funds?
So I think, of course, priority number one would be to expand the product range, right? Today we have only 100 SKUs. We want to bring that to around 500 in the next 24 months. Another big presence in this category is to build what offline means for Faye. Today, offline is extremely broken for beauty. You often get told to wear shades that are 2 shades lighter than your actual skin tone because of the bias of light skin is better in this category. And so we want to actually change what beauty means in an offline experience. So actually figuring out how we'll go offline, how we'll actually create a beauty experience that is empowering and not intimidating. And then, of course, ensuring that our distribution is stronger. So pan-India replication across different channels.
Absolutely. And you've also spoken about doubling down on face-forward categories and skinification of makeup, right? So what new formulations or hero products can we expect in the next, 12 to 18 months?
Yeah, I think I have one right here. It's our newest product. It's called Ideal Kajal. It is a non-irritant, dermatologically tested kajal. It lasts all day, doesn't smudge. And that's the kind of product innovation that we're trying to bring to market, right? To ensure that all our products have some sort of skinification benefit. This one has moringa and calendula, so it actually soothes the eyes as you use it. And we have tons of other innovations like that in the pipeline.
All right. And Faye is already present across Amazon, Nykaa, Blinkit, Tira and more, right? So which, sort of channels are seeing the fastest adoption? You were also talking about your offline play right now, right? So what is that looking like?
So offline for us is nascent. We're just beginning. We're not really present offline right now. Online, of course, Nykaa leads the charge. It is the place where our target audience tends to shop and discover. And then, of course, quick commerce is scaling extremely quickly. And it's amazing to see how effective the channel is to be able to get a product within 6 minutes of thinking about it or seeing an ad about it. So quick commerce and Nykaa are scaling very, very fast for us.
So quick commerce and Nykaa is where you're seeing most of your sales. You've also built strong traction with Gen Z and millennials, right? What are you sort of hearing from your consumers about shade matching, skincare-infused makeup, and authentic representation? So what's sort of driving repeat purchases? And if you can tell us, what are your top-selling products right now?
Sure. So I'll answer the first one. Repeat purchases at Faye are driven by loyalty. We've built a community of people who really believe in the mission of free and equal beauty, who really believe in diversity, representation, and authentic representation. We have the largest shade range of foundations in India by an Indian brand, and that's what keeps people coming back, trying products that actually work for their skin tone. Our best-selling products, our top heroes, are Lip Whip and Kajal, a lipstick and a Kajal. If you haven't tried anything from Faye, that's the product to try.
That's the product to try, the Lip Whip. As a new age beauty brand operating in a high-growth market, right? What does the next stage look like for Faye? Where do you sort of see the biggest growth drivers, product channels or geographic expansion? Where are you seeing the next, level of growth coming from? And also it's a fiercely competitive market. We've got so many options in the beauty care market, right? So how do you plan to stay ahead of that? Stay ahead of your competition?
I think for Faye, it's always been very clear. Stay authentic to why we exist. We don't want to get into every single category just because everybody else is doing it. We don't expect to get into bath and body care. What we will do is we will do authentically with diversity in mind, with representation in mind. And I think that is what's worked for the brand. We've been around for 6.5 years. And the fact that we've stuck to our guns of being diverse, inclusive, and having depth of shade range is what's worked. So that's what we'll continue to do.
All right. So those are the key things you pointed out, which is making it work for you. If you could sort of then tell us, what are the kind of revenues that you've clocked so far? Where do you sort of hope to end this year? What's the plan for, the next 1 year? Give us that range.
Yeah, we should close this year at 60 crores ARR. That's where this money will take us. And 100 crores very fast after that. So we're looking at 100 crores ARR in the next 18 to 20 months and 50 in the next 12 to 15.
Right. And if you could sort of take us through your presence then, right? Where are you seeing most of the demand coming from? And how much do you want to expand this by? Where are you looking at next? Is international expansion on the cards for you?
Not yet. I'm a strong believer that there is a lot to be done in India. We're just at the tip of the iceberg. So we'd like to really tap into the potential of India before looking outwards. So right now, that's the priority. For us right now, primary geographies are tier 1 cities, metros. And so we're beginning to expand that presence with this money, with more diverse categories like Kajal, for example, that tends to be more of a commoditized product. So slowly starting to penetrate different tiers. Right now, it's metros.
So right now it's the metros. And are you seeing any sort of demand from the tier 2 and beyond markets as well?
Absolutely. we have a lot of sort of aspirational target audiences, right? Men and women who maybe wanted to buy a Mac might not be able to afford a Mac, so will actually come in and buy Favour because you'll get that international feel and experience and efficacy. So we see a lot of interest even from Tier 2 cities.
So you're seeing a lot of interest from Tier 2 cities, but currently looking to expand in those metros and Tier 1 cities. All right, Karishma, thank you so much for taking time out and being here with us on Startup Street, and we wish you all the best on this journey going forward.
Thank you. So lovely to be here.
Absolutely. On that note, it is time for us to head into a short break. But coming up next, Quadria Group launches its third fund with a $200 million target. We decode the fund strategy and expected timelines. On the other side, stay tuned. Welcome back. You're still with us on Startup Street. Health Quad, the healthcare-focused investment platform of the Quadria Group, has brought Rahul Agarwal on board as partner just as the firm launches its third fund with a $200 million target and a $300 million hard cap. On the sidelines of the IVCA Green Returns Summit 2025, Rahul Agarwal spoke exclusively to Aishwarya Anand about the fund's strategy, expected timelines, and where the next decade of healthcare returns will be created. Take a look.
The theme is to invest in healthcare innovation. Now, we've done 2 funds so far, highly successful, $350 million in total AUM across those 2 funds. And the first fund has delivered few successful exits, 2.6x dollar cash return, 3x Indian rupee cash return already delivered to the investors. And we are continuing to do that in Fund 3, which we are now raising. And the thesis will be pretty much similar to what we have done in Fund 1, Fund 2. We'll also keep adding new segments, which are now finding good growth in India, as we have seen. Fund 1, Fund 2 were a bit more focused on health tech and novel healthcare delivery, which is these out-of-hospital, single specialty daycare models. Fund 3, we are also looking to add more allocation to medtech and biopharma tech.
Any number that you have in mind that how many companies would you like to back from this fund?
So in Fund 3, which is a $200 million target, $300 million hard cap, we will look to do about 12 to 15 companies. We this gives enough diversification to the fund investors, but also helps us maintain slightly concentrated portfolios because ours is an active investment style.
And by when do we expect that you'll close this fund?
So we're looking at a first closing towards the end of first quarter of next year, and then a final closing somewhere about 12 to 15 months from there on. That's the global standard, for funds mostly. It's a difficult fundraise environment, but we are fortunate to get backing from many global and Indian institutional investors who are looking to invest with us in Fund 3.
Okay, all right. Now, with healthcare infrastructure, diagnostics and preventive care gaining traction in India, which geographies and subsectors within healthcare do you believe will generate the strongest returns for you in the next 3 to 5 years?
So I think we are seeing these innovation models come out of now literally everywhere in India, right? It's not just about metros and tier ones, very smart founders. And a big part of our thesis is social impact. And there we are seeing now greater growth, even technology, digital, AI healthcare models, finding adoption, finding support in tier 3, tier 4 and rural markets in India, right? So they are building out of those non-metro locations and they're serving more and more healthcare consumers, even, filling the gender gap because women get left behind in healthcare access, and some of our digital tech models are able to reach the underprivileged communities, fill the gender gap, which traditional healthcare sometimes can't. In terms of which segments we see delivering better growth or returns over the next, let's say 5 to 10 years, 4 segments we are backing: health tech, med tech, biopharma tech, and novel healthcare delivery, which are these out-of-hospital care models. So some of our companies in Fund 1, Fund 2, and about 1/3 of the portfolio is now, you won't believe, above 400, 500 crore in annual revenue, right? And 2/3 of the portfolio is now about 150 crore in annual revenue. And these are all digital tech models who are focused more and more on tier 3, tier 4 rural consumers, and they've been able to create that sort of growth, serving those sort of customers. So we're pretty excited about that opportunity going forward as well.
Now, the Indian healthcare sector just launched its first dedicated ESG framework with your sign-off. So how is ESG shaping investment decisions at HealthQuad, and how do you balance this with the growth and return expectations of institutional LPs?
No, great. We worked with Aspire Impact, and we were co-authors for that report, Quadria and HealthQuad, and that is the first organized ESG scoring, measurement and reporting system for Indian healthcare that could be adopted for global healthcare as well. And why we wanted to do with Aspire Impact was because we truly believe that ESG and social impact are now key pillars of not only our investment thesis, but increasingly of LPs who are allocating capital to healthcare or other segments in India and globally as well. So we wanted to take a pole position, be at the forefront of helping other GPs, other managers, the entire healthcare ecosystem on how can they measure, report, and then communicate those metrics, ESG and social impact performance metrics, back to LPs. And for us, it is as important as financial returns.
One final question. Now, exits remain a key concern for LPs, right? So with new capital entering India, what are the exit frameworks HealthQuad believes are realistic in the 3 to 5 years? Are we talking about domestic listing, strategic trade scale, or cross-border acquisitions?
We've been, I think we have a very solid track record of returning money back to investors. Across both the fund families, we've returned over $1.8 billion back to investors over the years. HealthQuad Fund 1 has seen multiple successful exits, and these have come from strategic sales to Indian strategics, very, very interestingly. And I think that Indian strategic buyer ecosystem is also developing very, very fast, which is good for, I think, companies and managers such as us. And now in Fund 2, we expect 2 to 4 companies to go IPO as well, because they've really scaled up, they are profitable, and there'll be very new age models, which we believe that public market investors would love to participate in.
On to all the other stories that we're tracking for you this evening. Social media giant X has been slapped with a $140 million fine by the European Commission. This over an alleged breach in transparency obligations. The Commission said the breach included the deceptive design of its blue check mark, the lack of transparency of its advertising repository, and the failure to provide access to public data for researchers. An outage at internet infrastructure firm Cloudflare forces dozens of websites to go offline across the world for a brief period. Online trading platforms like Zerodha, Grow, Upstocks and others were affected in India. Services gradually began to stabilize as Cloudflare initiated fixes. The company said that the issue has been solved and is now being investigated. This is the second such outage in a little over 2 weeks. It is Friday and it's time to take stock of all the startup deals of the week. According to Venture Intelligence, this week saw 15 deals worth $153 million. Some of the notable deals include electric bike maker Ultraviolet, which raised $45 million from Zoho and Lingoto. Optical interconnect solutions provider Mixed Technologies got $33 million from TDK Ventures, while trading simulation platform StockGrow bagged $17 million in a Series B round. That's not all. Data aggregator for BFSI sector FinFactor got $15 million from 361 Capital, DMI Group, Varanium Capital and Westbridge, while underwater inspection solutions provider Planis Technologies raised $11.1 million from Ashish Kacholia, Pratiti Investments and others. According to Venture Intelligence, this year has seen a total of 877 deals worth a whopping $8.8 billion. And with that, it is a wrap on this edition of Startup Street. More news and updates coming up on the other side. Stay tuned.
Inflation at a benign 2.2% and growth at 8% for the first half of this year presents a rare Goldilocks period.
With these words, the Reserve Bank governor announced a 25 basis point cut to the repo rate, taking it to the lowest level in 3 years. In many ways, this was a Santa Claus policy. Apart from a rate cut, the governor did not entirely shut the possibility of another cut. Of course, he didn't promise one either. Growth forecast, of course, has been raised. But more importantly, inflation forecast cut for this year. More importantly, for the first half of next year, it's been cut rather drastically from their earlier forecast, with the governor also saying that if you count it ex-gold, then the inflation falls way below 4% for the next year. He has also been very benevolent with liquidity, a 1.5 lakh crore rupee infusion in this month itself. So, is the central bank looking too liberal with liquidity? And is it also, wasting a cut? Will this get passed on by the bankers? To discuss all this and more, I'm joined by a panel of top-notch experts: Mridul Sagar, former executive director at RBI and former member of the MPC; Neeraj Gambhir, the head of treasury at Axis Bank; and Samiran Chakrabarti, the chief economist at Citi. In a bit, we will also be joined by the biggest banker of them all, SBI chairman C.S. Setty. But that's just a little later. First, our panel of economists and bond experts, market experts are here. Gentlemen, thank you very much indeed for your time. Samiran, your thoughts. do you think that we are like the governor has managed to communicate as much dovishness that we will see bond markets continuing to trend lower? Do you think this is a positive for growth?
So if you look at it in this policy, the RBI has used the space that has been offered by inflation, and also their growth guidance has been slightly softer than where the current growth rates are. So that itself has also provided some space for the policy easing. And in our view, almost the entire focus of the MPC has been on this inflation growth dynamics and less on the other two factors that we were thinking could be also on the table, which is connected to financial stability, the issue of the balance of payment, and the fact that the banking system deposit growth is now lagging credit growth. But for the moment, that has not been the primary focus of RBI. And that's why the governor has sounded very dovish, not just through his rate cut, but also being very proactive about providing the OMO guidance for December. And now, obviously, this will translate into the bond market, thinking that till the time there is any upside surprise on inflation, the RBI's overall monetary policy approach is going to be very conducive for the bond markets.
Okay, thanks for that. Neeraj, what's your first sense about bond yields itself? Are you seeing them substantially lower or at least lower for now? Say, by up until February, before the budget, how low does it get?
I think the bond market has not been as enthusiastically responding to the RBI's policy moves of late. We've seen that this 25 basis point rate cut plus a 1 lakh crore OMO, the market kind of ended pretty much flat and similar to the level as the last time. I think gradually the market will buy into this rate cut as well as my view. But I'm not seeing too much of a downside to the yields from here, maybe another 5 to 10 basis points.
Okay.
I think a lot will depend upon what is the total amount of GSEC purchases that Reserve Bank does as a part of its open market operations. Market was expecting around 2 lakh crores. We've already gotten 1 lakh crore for December. So we'll have to see what happens for the month of Jan, Feb and March. That could continue to support the bond market.
Okay. Mridul, what are you, would you say that the governor's pulled out all stops for growth and therefore chances of growth surprising on the upside are very high, would you say? Mridul Sagar, you can't hear me? Oh, I think there is a problem with the line. Okay, we'll redial Mridul. Neeraj, I wanted to ask you the other question which some bankers pointed out. Do you think bankers will pass it on at all? There were some bankers who said there is a depositor's resistance for lower rates. So there's no question of cutting deposit rates. What would you say?
So pass on of the rates to the real economy actually starts with the lending side rather than the deposit side. We know about 60 to 70% of balance sheets are linked to EBLR, which is in turn the repo rate. So as soon as the repo rate is cut within a quarter, this part of the balance sheet gets repriced almost immediately and the benefit is passed on to the end borrowers. As far as deposits are concerned, there is a bit of a competition amongst the banks and there is a bit of chase of the deposits that is going on. This chase intensifies as we get into the last quarter of the year. So we'll have to see whether there is sufficient liquidity in the system that can, in some senses, encourage the cuts on the deposit side. But I think there could be a little bit of skepticism there to see. Let's see if the deposit rates, deposit growth in turn, kind of picks up and which then allows us to do some kind of rate cutting on deposits.
Okay. Well, are there chances that people will, I mean, how do you see credit growth? Do you think banks will now abandon things like home loans because you're not able to bring down your cost of funds? So why would you go to a low price product? Do you think there'll be a concentration on high risk lending?
I think we've recently seen some kind of elevated credit costs on the unsecured side. And I think that episode is pretty recent for people to forget about it.
Okay.
I think it will have some bearing. So I don't see people abandoning, products like mortgages, which may be low yielding, but they clearly are far better in terms of credit cost. So I would think that a combination and a mix of the lending will continue both on the retail as well as on the wholesale side.
Samiran, what's the sense you're getting on the rupee? Do you think the fact that the governor has given so much liquidity is an indication that, yes, I'm going to intervene, I'm going to supply as many dollars because now I've got this liquidity insurance? Will that scare some rupee bears?
So, in a theoretical sense, when rates are cut and the RBI is more active on the bond market through the OMOs, there would be a natural bias for the markets to play the currency from the depreciation side because the cost of carry becomes lower. However, as you rightly point out that both these, the OMO as well as this 5 billion FX swap, it gives RBI more space to intervene from two aspects. One is the liquidity aspect, that there is now enough liquidity in the system, so they need not be worried that even if they sell dollars, the INR liquidity will tighten. And the other way is there's 5 billion adds on to the RBI's FX reserves. So optically, that headline FX reserves number remain better even if they're intervening. So from both sides, the flexibility, the degrees of freedom for RBI to intervene in the FX market increases because of these operations. But at a theoretical level, RBI will have to be conscious of this, that the bias for markets to play would be more from the short side.
Oh, okay. Well, at least for the day, the rupee has, stayed fairly steady and ended south of 90. We are at 89.98. Mridul Sagar we are finally connected with him, but only on phone. Mridul Sagar, would you worry that the RBI has been a bit too generous? Bankers have told us that they're a bit finding it difficult to pass it on because there is a depositor's resistance to lower rates. So they'll pass it on more slowly. And, the fear of excessive liquidity always means there can be a financial problem if suddenly inflation picks up or something happens. Do you think they've been way too generous?
Absolutely, there's a risk of it. So, Lata, RBI has done what it could in the sense of the rate cut. I think this is near the terminal of the rate cutting cycle, though, for central bankers never say never. And if you see the fan charts, there are probability that inflation could still slay below 2% with the 70% confidence interval, or could go up over like 6% ceiling with 50% confidence interval. So rates could still move both sides. Markets may anticipate no rate changes now. But we are the word is sitting on a bubble with the Case-Shiller cyclically adjusted price earning ratio at 40, the levels which have only been seen at the dot-com bubble side, not even in the Great Depression or the global financial crisis. So should that happen, rates could move anywhere. We have seen 4% during the COVID. We have seen 9% during the global financial crisis as well as the dot-com bubble.
Okay. Yeah, I'm just worrying in case, of course, the Reserve Bank can stay alert and roll back the liquidity in good time. But this is just, at some points, looks like too much of a good thing. Let me quickly get your rupee views as well. Neeraj, what's your sense? Is the rupee depreciation at its end now?
No, I wouldn't think so. I think the key issue for us is that we have roughly 1 to 1.5% current account deficit. Net capital flows into the country are almost flat. So we have to basically fund this deficit. And the only person to fund this deficit is RBI's reserves. So there will be pressure on currency, although it may not be as high, given the fact that the US dollar may also be on the depreciating path. But I do expect steady weakness in the currency in months to come, till such time we see reversal of capital flows, particularly equity market flows. So I think that's the key marker for us to say. There could be a short-term blip up in the rupee dollar rate if we have a trade deal announced anytime soon. That could provide some support. But net fundamentally, we are in a rupee weakness regime.
Okay. Samiran, we always say that India is not a country where people come in because of higher interest rates. People are coming to us because we are a growth economy. And now with the Reserve Bank going all out for growth, do you think this so far elusive foreign capital may return?
So obviously, in an optimistic scenario, we can see that happening next year. For that, I think three things have to fall in place. One is that the fresh allocation, people are looking at some sort of mean reversion in India's performance. This year has been a huge underperformance. So next year, some mean reversion of that can happen. Second is that the AI trade, which has sucked out capital from India and got deployed in other countries, that if next year that dynamics changes, or at least incrementally not that much of money flows into chasing that theme, then that could also be a positive for India. And third is that India in the last few months have very quietly started, in my view, a fundamental change in its policy reforms. At some point of time, if the investors start feeling that this reforms narrative is strong enough to cause a more sustainable improvement in the earnings outlook, then that could be another factor which can bring in the capital flows back to India.
Oh, yes, sir. We are noticing a bit of deregulation, or a good amount of deregulation, as well as labor codes. Yes, we are hoping that people catch that wind. A final question to you, Mridul Sagar. Do you think we are in a higher growth trajectory? I mean, this is out of syllabus. It's not a monetary policy question. But we are repeatedly getting surprised on the upside. Maybe are we refusing to recognize that India is indeed a 7% plus economy?
I can go with the 7% sort of number, though obviously the methodologies need some improvement in terms of double deflation in the service sector to have a convincing view that we are really growing that fast. Okay. So there are statistical issues. The MOSPI is trying to resolve that and making some headway, at least in the manufacturing sector. So let's wait and see how it is. But we need to rely also on high-frequency indicators, which are not bad, but maybe not like rocking 8% plus.
I agree with you. Everyone agrees the growth story is good, but it doesn't look like it's a higher trajectory. It doesn't look like a higher inflection point. But then we don't know. As you say, there is a whole new series of CPI and GDP on the way. So anything we say could be, negated, could look very different once the new series comes next February. So everything we say is only valid up until February. Thank you very much, Mridul Sagar, Samiran Chakrabarti and Neeraj Gambhir for joining me and helping us understand and parse the impact of the monetary policy just announced. We have to take a quick break, and thereafter, the biggest banker of the country joins us, SBI Chairman C.S. Setty, in a minute after this break. Welcome back to this monetary policy special. As we said, it's widely recognized that the Reserve Bank has announced a Santa Claus policy, cutting interest rates by 25 basis points, not entirely shutting the door on a next possible rate cut, but more importantly, giving 1.5 lakh crore of liquidity for this month itself. There could be more in the next quarter. Joining us to parse all this on the banking and the financial system and the economy is the SBI chairman, Mr. C.S. Sethi. Mr. Sethi, thank you very much indeed for your time in what should be a very busy day. First up, sir, do you think with so much of positivity, rates as well as liquidity, you would want to up the loan growth forecast for the banking system?
Thank you, Lata, for having me on your show. I think you summed up very nicely in terms of the essence of this policy. What we have been saying that is more than the potential rate cut or no rate cut, what is important for the banking system is adequate liquidity. I think RBI and the governor always has been assuring us that they will ensure durable liquidity in the system. And they stuck to that. And we are very glad that particularly in the Q3, there would be a big amount of outflows on the advanced tax payments. And we are also seeing a good credit growth. The last time around when I spoke to you, I did say that with a lot of measures which were announced in the last MPC, there would definitely be uptick in the credit growth. And we are seeing that. In my earnings call also, I mentioned that we are revising our credit growth from 11 to 12% to 12 to 14%.
Yes.
So we are still sticking to that credit growth rate. And this adequate liquidity assurance, what we got from the RBI, we are very confident of achieving that growth rates.
Well, when a giant like you can grow at 12 to 14%, I think you drag the average for the system itself. But Mr. Sethi, the negative that some bankers point out is that depositors are resisting further, interest rate cuts. You can't cut deposits much or deposits at all. It's only the repricing of old deposits that will give you some margin impact. Will this mean that bankers will also drag their feet in terms of dropping lending rates? Only stick to high-priced products, don't go selling home loans. Is there likely some behavioral change in bankers?
There are certain products which are linked to repo. So there's no choice but to immediately pass on this repo rate. What we have been witnessing even in the last earlier cut also is that unless we reprice the deposits or recalibrate some of the interest rates on the fixed deposits, the MCLR, which is formula-driven, remains sticky.
Oh.
So that is what we have seen. But broadly, I think, as Governor mentioned in his speech, the transmission has been reasonably good. The one challenge banks will definitely have is in terms of, especially those banks which have high CD ratio will find it with the credit growth coming back the way it is, they will find it difficult to readjust the interest rates.
Oh.
But as you mentioned rightly, we will get the full benefit, two fronts. One is the whole stock of fixed deposit getting repriced fully in the next 3 to 4 months. And the full benefit of the CRR cut, which has happened in almost 1%, full 1% of the CRR cut. By 30th November, the cycle has been fully implemented, which means that there's an adequate earning funds which we can earn something. That also will contribute to protecting the margins.
Okay. I take your point. But immediately, does it mean that bank margins have bottomed?
So in terms of the the rates of interest on the deposits, I think broadly we have all factored in that there won't be much of readjustment on the fixed deposit rates.
Okay.
So the only variable what has changed from before MPC and after announcement is the 25 basis rate cut.
Yes, yes.
As I mentioned, I think the 25 basis rate cut can easily be absorbed.
Okay.
Because of, in case of SBI alone, you can give the number, we got additional liquidity of almost 62,000 crores on account of CRR cut.
Okay.
So even assuming that, you have SDF rate earning on that, so the rate cut impact can be neutralized to that extent.
So you're more or less telling me that margin impact will not be there. You have other things to help you. Just a final point, do you think you will see banks moving away from EBLR to MCLR in the next cycle?
So there are products which are mandated to be given through the EBLR. So there is, it all depends on the composition of your book. If it is predominantly retail, SME, there's nothing much we can do because that those segments have to be mandatorily linked to the repo in terms of ensuring the transmission. Okay. In terms of the corporates, yes, in terms of corporates, I think we have an option either to give something which is linked to the T-bill, which gets repriced when the rate cut happens. There could be some movement towards MCLR, but again, every one of us is trying to build the book, right? Okay. On the corporate side. Obviously, I don't see much impact in terms of shift towards MCLR.
Yeah, the market will impose its discipline on bankers. Just a final one, sir. I mean, I've been throwing questions at you. Any key takeaway for the banking system or your bank that you want to tell us from the policy or generally from the banking system at this point?
Well, the key takeaway, I think, as I keep mentioning, is that today the fiscal measures and the monetary measures and the liquidity, what is available in the system, it is all helping us in terms of moving towards the growth trajectory, inflationary trajectory, everything what I think is all set for very robust growth rates in the financial system. The only thing what we are looking for is some capital expenditure to come back in some of the core sectors. Okay. While we do see that corporate growth rate at 10% in our books, but the growth rate, what is anticipated from the core capex has to come back.
Okay, that's a nice position to be in. We began this discussion by quoting the governor saying it's a Goldilocks economy with growth rates getting upped and inflation rates getting cut. We are ending with the SBI chairman saying that he sees a robust credit growth and would only wish it were even more robust, especially on the capex front. Thank you very much for joining us, Mr. Sethi.
Thank you, Lata.
That's it on this edition of this Monetary Policy Special. Thanks much for watching.
27 hours in India. Vladimir Putin's visit kicked off with some instantly viral moments. A warm hug between Putin and Prime Minister Modi. A shared 15-minute car ride to the Prime Minister's official residence, which is 7 Lok Kalyan Marg, and extensive talks over their 2-hour-long private dinner. That was day 1. Day 2, business mode on. The two met at Hyderabad House in New Delhi for the 23rd Annual India-Russia Summit, following a ceremonial welcome and tribute earlier in the day. After the summit talks, they held a press conference and rolled out a batch of new agreements governing and covering migration and mobility, healthcare, medical education, science, food safety cooperation, shipping, fertilizer supply, and more. Here are the key headline takeaways. India and Russia signed a big program targeting long-term economic cooperation, boosting trade, co-production, co-innovation. They reaffirmed a shared goal of $100 billion in bilateral trade by 2030. There's renewed emphasis on joint global action against terror and enhanced defense, technology, energy cooperation. On Ukraine, Prime Minister Modi reiterated India's preference for peace and described India-Russia friendship as a steady and guiding one like a pole star. Meanwhile, Putin pledged uninterrupted fuel supplies to meet India's energy needs.
बिजनेस के लिए सिंप्लीफाइड प्रिडिक्टेबल मैकेनिज्म बनाए जा रहे हैं। भारत और यूरेशियन इकोनॉमिक यूनियन के बीच एफटीए पर चर्चा शुरू हो गई है।
Last year, our bilateral trade turnover has grown by 12%, setting another record. We are up to the task of getting this number to the level of $100 billion. And to reach this important goal, we have harmonized the program of development of Russian-Indian economic cooperation until 2030. We are ready to continue uninterrupted shipments of fuel for the fast-growing Indian economy.
Joining me now to take this forward are Dinakar Perry, Fellow in the Security Studies Program at Carnegie, India; Jayant Dasgupta, former Indian Ambassador at the World Trade Organization; Manjeet Kriplani, Founder and Executive Director, Gateway House; and Tatiana Romanova, Associate Professor at St. Petersburg State University. Thank you very much, ladies and gentlemen, for being with us. Ambassador Dasgupta, trade. This was the big focus of talks between President Putin and Prime Minister Narendra Modi. Immediately after hearing the leaders, hearing them at the business forum, what do you think will be some of the immediate outcomes on the trade front, and how our trade, especially our exports to Russia, could increase?
I think a few areas have been already identified by President Putin and Prime Minister Modi. Pharmaceuticals is one of them. Auto components is another. Agricultural products is a third one. Engineering products is a fourth one, apart from auto components and autos. So there are these areas where there could be greater flow of trade. But what I wanted to emphasize, and I have picked it up from Prime Minister Modi's speech, he talked a lot about collaboration between the two countries in terms of sharing of technology, in complementing each other's strengths. For instance, in textiles, India is strong in cotton, but Russia is very strong in the man-made fiber segment because of its large petroleum base. So, Prime Minister Modi also spoke about utilizing the synergy between these two countries and the technology that they have to benefit third world countries like in Africa and other parts of the world. So I think it is a broader message to the rest of the world. It is not about Russia alone, India alone, and making these two countries great again. It is about taking everybody together. And therein lies a broader message to the rest of the world, I think, because trade will take place, it will increase, but the benefits will also be shared with other partners.
Right. Let me go across to Manjeet Kriplani. Manjeet Kriplani, how do you see the optics of the visit? A 15-hour car ride where they spoke and discussed things behind the scenes, 2-hour-long dinner. Today also, the bilateral talks and delegation-level talks spilled over. The press conference began late. Overall, how do you see the optics of the visit?
it makes India look like a very strong country, that it's a country that really doesn't care about global opinion. We are looking to our own interests, much like the US is doing for itself. It looks pretty good. Russia has been a strong friend to India for many years. And I think that if you had to ask anybody, what's your friendship like with the US, really people wouldn't have much to say. But if you ask them, what's your friendship like with Russia, they would say very strong. So the optics are looking pretty good. India is looking strong. And I think we're handling it quite well. Mr. Modi is a master of optics. And so we should trust in his instinct.
Right. Tatiana, if I were to ask you, this was an important visit for President Putin, keeping in mind the kind of pressure he is under from Europe and the United States to come to some sort of peace agreement with Ukraine. Apart from the strong economic component of the visit, we also saw the president launching the Russia Today India channel. What do you think this 23rd Russia-India Annual Summit does in terms of laying the foundation for the next few years in bilateral ties? Prime Minister Modi, in fact, thanked Putin in that press conference earlier for laying the foundation of India-Russia relations 25 years ago.
Well, I think Indian-Russian relations are very old, and they are based on strong traditions. Like, we can go back to the tradition of relations between the Soviet Union and India, when it was important for the Soviet Union to have good relations with the non-allied countries. And then nowadays, today's sort of like period, in fact, goes back to the year 2000, when the strategic foundation for the relations was laid. In present circumstances, Indian-Russian relations for Russia are about, of course, geopolitics, but geopolitics not in terms of making friendship against somebody, but rather geopolitics of making friendship for something. And in this particular case, for multipolarity, for polycentricity, for international relations being more democratic and not just based after Western designed patterns. But it is, of course, also about economy, and the discussion is about mutual benefits, about
All right.
a variety of logistical sort of like chains that are being created. So it's about broader foundations. It's not only about geopolitics in terms of multipolarity. It's obviously about economic and mutual benefit. And it's about cultural relations, because much has been also said about broader relations and about more information about Russia and India, about India and Russia, about more expertise, about more student exchanges, so about the dialogue that will be reaffirmed through societal links in a way.
Okay, Tatiana, I'm going to come back to you. Dinakar, welcome to the program. Let me ask you about the defense partnership. We had been told by multiple sources ahead of this visit that don't expect any big deal. And even in the press conference and the joint statements, we just saw a few lines by the leaders in the end where they said that we had good discussions on the military technical cooperation, which will continue. Russia will continue supporting India's needs. India said that we will look at co-production, co-development. What do you think would have actually been discussed behind the scenes realistically? Would it be the BrahMos 2? Would it be Su-57 or the S-500?
Thank you, Parikshit, for having me here, firstly. And so to get into the issue, as you rightly said, the sense was there'll be no one big ticket, defense deal to be signed in the visit. The visit, as we saw, and as you also rightly said, is high on symbolism, optics, sending a message. It's really high on that. And that said, Russia has actually put out a lot of things on the table for India. It has literally offered all its frontline platforms, more S-400s, S-500s, additional lease of Akula-class nuclear attack submarines, and so on and so forth. I mean, literally everything is on the table. But from an operational, practical sense for India, so what fits in? Where is the congruence between the two? post-option door, India is definitely looking for more S400s. I mean, it's become pivotal how the role played by S400 and BrahMos in option door we saw, how really they became game changers as termed by both the Indian Air Force Chief and the Defense Minister. So there is interest in that, and a hypersonic version of the BrahMos is already under development. That's a natural progression. It's already happening. So more S-400s, probably yes, once the current deliveries are completed, because 2 more regiments of the 5 contracted are still pending. So that's a priority right now. And Su-57, as you said. So that's a bit of a debate going on within the Indian Air Force right now. Indian Air Force and the MOD. So that's because the Indian Air Force is in a very precarious situation with respect to its fighter squadrons at the moment. So what do? Do they go for more Rafales or 114 Rafales, or split it between the Rafales and some 5th generation stealth Su-57s? So that's a debate ongoing. Russia has, from its end, offered full license manufacturing in India. That's offer stands, but we have to see the call taken. It's more of an operational and a military necessity. I guess that will cross it in the near future, probably, and the time is approaching. We have to take a call. So that's it. One step ahead. There's also some conversation of more joint projects. So what is it at the moment? We do not know as yet. Probably the joint statement may or may not give any sense, but probably we'll get some clarity in the near future. Another area is shipbuilding. So just one thing, shipbuilding is actually something which is going to go probably in a bigger way, because there is a significant overlap of interest. Russia wants India in the Arctic, in the Far East, because that also offsets Chinese presence there. For India, it's a good source of hydrocarbons, etc. So there is an agreement, understanding already for Russia to train Indian sailors in polar navigation and to assist Indian shipyards in building non-nuclear icebreakers. I'll stop there.
Time for a short break, but before we slip away, amid a slew of announcements during Putin's visit, the government-owned channel RT India was launched. At the same time, a formal cooperation agreement was renewed between TASS, which is the Russian news agency, and the Press Trust of India. We leave you with a commentary from PTI CEO Vijay Joshi on this agreement. Listen in.
It is basically an extension of an agreement we had with TASS since 2014. So it was expiring and we have renewed it. But the significance is that the renewal comes at a time when the world is changing. There'll be no third-party filter changing giving a slant or a different inflection to a story from India.
Welcome back. You're watching our special broadcast on the 23rd India-Russia Annual Summit. We still have with us Dinakar Perry of Carnegie India, Jayant Dasgupta, former Indian ambassador at the WTO, Manjeet Kriplani, Gateway House. Manjeet Kriplani, if I can ask you about the two agreements, one on migration and mobility of skilled professionals, and secondly, the Prime Minister's announcements on 30-day e-tourist visas for Russian nationals. How important are they in the current context?
The labor is, the mobility agreement is particularly important because Russia, as you know, a lot of their boys have gone off to the front. They used to have a lot of labor from the Uzbekistan, etc., Central Asia. That is not enough because Russia has to rebuild itself. Its, its defense factories have to go on. So our labor is really important. I think Mr. Modi had said in his statement that he is going to skill the labor and make them Russia ready, teach them the language. This is critical. We can't send enough of our labor to Russia. I mean, we can accommodate even up to 2 lakh of our young people going there. I have seen the labor travel to Russia. They prefer going to Russia rather than going to the Middle East because they say in Russia they're treated as equals. So you can see on the flights on Aeroflot from Delhi to Moscow, the first timers who go is sort of a little bit rough and they come back, and the second timers are much more polished. It's a very different game from sending our labor to the Gulf. So I think this is the great way for them to also learn another language and to be in a European environment. And on the other, you talked about the e-visitors. Why not? We already have so many flights coming in from Russia, so many visitors who are all over the place. They're in Odisha, they're in Goa, they're everywhere, and they're coming on special flights, so why not? Actually, we need to send more of our people also to visit Moscow.
All right. Let me also get in Jayant Dasgupta. Ambassador Dasgupta, when it comes to fertilizers, there was an agreement signed on fertilizers. Secondly, both sides decided to increase production of urea. How important do you think this is?
This is extremely important because urea basically is a byproduct of the petroleum industry. And since Russians have a lot of the feedstock, so their prices are globally competitive. And of course, it could be negotiated. So it would be a very steady source of supply for India, which requires a lot of urea. It doesn't produce enough in the country, and it does import a lot. So that would be a very good, I think, avenue to explore. And to get into this kind of an agreement for specific purposes, I think will bode well. So this is going to be a good thing.
Okay. My final question to Dinakar Perry. Dinakar, when it comes to the logistics agreement, the military logistics pact that has now been ratified, it is an older deal, but which has been ratified now. How important and significant is this, and how would you compare it to the LEMOA that we have with US?
So the RELOS, as it's called, the Russian version is called, it's been actually there, as you said, for many years now. I mean, for some reason or the other, it somehow did not get, see the conclusion. So now we have it. So what does it mean? It's more of an administrative arrangement. It simplifies. I mean, for example, India and Russia have actually been doing joint exercise for a very long time now, without an agreement. So this kind of simplifies that, improves the ease of, commonalities of, just simple things like fuel exchanges, exchanging personnel, where required. It removes redundancies in the cooperation. 1. 2, what is its significance for India? For India, this gives access to Russian military facilities in the Arctic. In the sense, for operational turnaround, again, for replenishment, for visits, exchanges. And why is that important? Because India is now investing in the Arctic. The earlier point I mentioned about the Arctic and shipbuilding cooperation, this in a way kind of juxtaposed into that in the larger sense. So this is significant in that. And for the Indian military, this is a series of these agreements which enable expanding their footprint. They reduce operational turnaround, ease of maneuver operation. You don't have to come back to Indian soil for everything. You can do it far away.
All right. We've run out of time, but thank you very much, Dinakar. Ambassador Dasgupta, Manjeet Kriplani and Tatiana for being with us. With that, it's a wrap on this edition of News Center. More updates when we return.
Good evening. Thanks for joining us on India Business Hour. I'm Shireen Bhan. The top stories that we're tracking for you this evening. India and Russia ink 24 inter-government and commercial deals after a bilateral summit between Prime Minister Modi and President Putin in New Delhi. Both nations pledged to achieve $100 billion in bilateral trade by 2030 and agree to begin talks on a free trade deal. India secures supplies of fertilizer. Putin promises uninterrupted fuel supply to India. RBI cuts the repo rate by 25 basis points to its lowest level in 3 years. Governor Malhotra says benign inflation and growth at 8% present a rare Goldilocks period. Hints at room for further rate cuts if inflation continues to remain soft. RBI raises its GDP growth forecast by 50 basis points to 7.3% for this financial year. The central bank will inject 1 lakh crore rupees this month through open market operations. Governor promises to ensure liquidity remains sufficient in the banking system. The government buckles and puts crew rostering norms in abeyance as over thousands of Indigo's flights are cancelled across India today. Pilots Association protests. Indigo CEO Peter Elber says cancellations were at its highest levels today as they were rebooting systems and schedules. Expect less than 1,000 flight cancellations tomorrow and return to normalcy by the 15th of December, but remain silent on what caused a disruption of such a massive proportion. Netflix agrees to buy the studio and streaming business of Warner Brothers Discovery for $72 billion. The merger will create a media behemoth that could reshape the entertainment industry and is likely to face regulatory scrutiny. A U.S. delegation is scheduled to visit India next week to hold trade negotiations. Sources say dates are being finalized. Both nations remain hopeful of signing a framework deal this month to address the 50% U.S. tariffs imposed on India. RBI grants in-principle approval to Fino Payments Bank to become a small finance bank. Fino can offer lending services once it gets the license. Fino will be the first payments bank to transition into a small finance bank. An outage at internet infrastructure firm Cloudflare forces dozens of websites to go offline across the world. Online trading platforms like Baroda, Grow, Upstocks and others affected in India. The global CEO of Amazon Web Services plays down fears of an AI bubble even as he expects some froth among startups. Matt Garman is upbeat on India and the company's plans to invest nearly $13 billion by 2030. That's an exclusive. Simone Tata, the mother of Noel Tata and the stepmother of the late Ratan Tata, no more. The woman who built the Lakme and Westside brands passes away at the age of 95. Well, let's start with the RBI monetary policy. The repo rate has been cut by 25 basis points to its lowest level in 3 years. Remember, the state was divided. Governor Malhotra delivering that cut today. Now, this is the 4th rate cut in 2025. Governor Sanjay Malhotra said benign inflation and growth at 8% present a rare Goldilocks period that has allowed the space for a cut. The governor has also hinted at room for more cuts if inflation continues to remain soft. The central bank has also raised its GDP growth forecast by 50 basis points to 7.3%. That is the number for this financial year. It also sees stronger growth of 6.7% in the first 2 quarters of FY27. So that's the GDP forecast there. Now, the inflation forecast for the year has been lowered, but the central bank has warned that inflation could inch higher in the first half of the next financial year. The RBI will also inject 1 lakh crore rupees this month through open market operations. The governor has promised to ensure liquidity remains sufficient in the banking system. Listen in.
Inflation at a benign 2.2% and growth at 8% for the first half of this year presents a rare Goldilocks period. Globally, contrary to earlier expectations, growth has been relatively strong. Evolving geopolitical and trade environments, however, continue to weigh on the outlook. Going forward, we expect benign inflation, and so if the inflation continues to be the way it is, we expect the rates, the policy rates, to be low and not high. Whether now what rate it will be, that will be, getting into speculation.
Well, that's Governor Sanjay Malhotra. Lata joins us now with more on the monetary policy. Lata, you know, the street was divided going into this policy, the governor delivering another 25 basis point cut. But more importantly, the commentary, what did you make of it?
Well, I think it was a giving policy, a Santa Claus policy, because not only the kind of partially expected rate cut was given, he did not quite shut the door on another cut. But he didn't promise one either, to be fair. What he said was that he's bringing inflation down so much in the first 2 quarters of next year. You know, the original forecast for April, May, June of FY27 was actually 4.9. It was brought down to 4.5 last time and now 3.9. And then for the next quarter, Q2, it's as low as 4%, with the governor repeatedly saying that if you subtract gold from this inflation index, then you get an inflation number which is half a percentage point lower than 4%. So you're talking of 3.5. That kind of repeatedly saying benign inflation can trigger a hope that if the need arises, he is not averse to cutting, though he didn't say. He said it would be speculative to expect a cut. The other positive Santa Claus policy, part of the policy, was the liquidity. Ample liquidity given only for the month of December. He's going to buy bonds, what you call OMO bond purchases of 1 lakh crore, December 11th and 18th. And on 16th December, they're going to do a 3-year FX buy-sell swap. Basically, that's jargon for putting another $50 billion is what? Half a trillion. So that's 1.5 lakh crore of rupees coming into the system, which also gives the rupee bears a bit of a scare. See, if they've put that much liquidity, they are ready to supply bonds in the market, supply dollars in the market. So in a way, all markets today reacted positively, and that's the positive. If you want to get the key takeaway, all 3 markets, stock markets, bond markets, and rupee, reacted positively to what the governor said. So we should expect, NBFC companies, real estate companies, anybody who benefits from lower interest rates, consumer durables, all of them reacted positively. What may be the downsides? One is that banks are not happy. You know, they are not going to be able to pass on this rate cut because depositors will not deposit if you keep on cutting. The repo can go anywhere, but depositors have their minimum threshold. So they can't cut down their cost of capital, and therefore passing on will be slow and tardy. So not very, very bank positive. The banks are obviously an unhappy lot because of this. The other negative could be you're putting in so much liquidity. As and when inflation picks up, you should be alert to pull back this liquidity. I mean, that's just a warning for the future. Not that inflation is looking like rising, but I'm just saying that just puts the Reserve Bank on notice.
Yes, that caveat was on the table. Lata, many thanks for joining us. Well, the bond market largely steady after the monetary policy. The rupee remains within striking distance of the 90 mark against the dollar. 10-year sovereign bond prices gained in trade and the yield softened marginally to 6.5%. So that was the money market snapshot for you. But from the currency market to the equity market, Dalal Street cheered after the Reserve Bank slashed the repo rate by 25 basis points. All major indices closed higher. However, the market breadth was in favour of the declining stocks. Sensex rose nearly 450 points. The Nifty was higher by about 150 points. The Nifty Bank outperformed nearly 40 Nifty stocks closing in the green today. And the Sensex and the Nifty, of course, closed flat finally. Mid-caps declined over 1%. IT stocks gained the most over the week and posted their biggest weekly gains that we saw in the last 2 months. That's the Nifty IT index up by 3.5%. India and Russia have inked 24 intergovernment and commercial deals, including agreements on migration, healthcare and food safety cooperation. Russian President Putin and Prime Minister Modi have also announced the Economic Cooperation Programme 2030. Speaking at a joint press conference today, Prime Minister Modi said that President Putin's efforts to expand the partnership has taken the relationship to new heights. He added that India and the Russia-led Eurasian Economic Union will work towards a free trade agreement. Meanwhile, President Putin said both nations are aiming to take bilateral trade by $100 billion by 2030, adding that Russia is ready to continue uninterrupted fuel shipments to meet India's energy needs. This comes at a time when President Trump has been claiming that India has significantly reduced its dependence on Russian oil. Earlier today, both leaders held bilateral talks at the Hyderabad House. Prime Minister Modi said India is not neutral when it comes to the war in Ukraine, reiterating that India is on the side of peace. President Putin said that there are more opportunities for cooperation cooperation as India and Russia's economies grow.
हम सबको मिलकर के शांति के रास्ते तलाशने चाहिए और पिछले दिनों जो प्रयास चल रहे हैं मुझे पूरा विश्वास है कि विश्व फिर से एक बार शांति की दिशा में लौटेगा। भारत न्यूट्रल नहीं, भारत का पक्ष है और वो पक्ष शांति का है।
Last year, our bilateral trade turnover has grown by 12%, setting another record. We are up to the task of getting this number to the level of $100 billion. And to reach this important goal, we have harmonized the program of development of Russian-Indian economic cooperation until 2030. We are ready to continue uninterrupted shipments of fuel for the fast-growing Indian economy.
Well, both leaders there at the Hyderabad House joint press conference. Parikshit Luthra has been tracking all the developments. He joins us now. Parikshit, as President Putin departs from India, what does he take back? And more importantly, what does he leave on the table here?
Well, this was an important visit for President Putin to show the West that his allies are intact and his relationships with countries like India and China are stronger than ever before. Having said that, the Foreign Secretary summed up the visit very well, said that trade and a balanced trading relationship was really the driving impulse of talks during the 23rd Russia-India summit. Now, what happened was this. India urged Russia to open up its markets for Indian pharmaceuticals, automobiles, marine products, agriculture products and textiles. We urged Russia to address the trade deficit. Currently, India imports $64 billion worth of products from Russia and exports just about $4.8 billion. The Prime Minister made it very clear that we need to correct this imbalance and must remove all kinds of impediments to trade and regulatory barriers. In that direction, it is very important to note that both sides will not just accelerate work on a free trade agreement, but they'll also fast-track work on a bilateral investment treaty to promote and protect investments. I would say the migration and mobility agreement is extremely crucial as well. The Foreign Secretary said that Russia right now has a big requirement of skilled workers, and therefore the migration mobility agreement will allow greater movement of Indian construction workers, IT workers, engineers to Russia for employment in the future as well. Defense, always a big area of cooperation, no big ticket deals this time around, but India made one issue very clear, that we've had problems with regard to service and maintenance of aircrafts, and therefore we need greater Make in India of defense components to support Russian origin weapon platforms in the future. There were discussions on nuclear energy, on continuing the oil trade as well. India will also be granting e-tourism, e-visa facilities to Russian nationals. So those were really big agreements that were signed during the Putin visit. The agreement on fertilizers, very crucial for the Indian economy, and both sides have signed an agreement on long-term supply of fertilizers.
And we saw the fertilizer stocks up and about in trade today. Parikshit, many thanks for comprehensively wrapping up the Putin visit to India. Now, the big story that we've been tracking, 4 days into the crisis at Indigo Airlines and the government has buckled. The crew rostering norms, which mandated fewer allowable night duties and longer mandatory rest periods, have now been put in abeyance. In a statement, the Civil Aviation Minister said the government has also announced an inquiry into the disruption at Indigo. Indigo CEO Peter Elber said that over 1,000 flights were cancelled today. He added that he expected less than 1,000 flights to be cancelled tomorrow and a return to normalcy by the 15th of December. However, he was silent on what has caused a disruption of such massive proportion. Earlier, the airline had told the government that the new rostering rules had led to a shortage in the availability of pilots. However, pilots' associations have attributed the crisis to Indigo's arm-twisting tactics. They claim that Indigo's prolonged, unorthodox, lean manpower strategy, in their words, is the reason behind the current flight disruptions. Several passengers were left stranded at airports across India without access to food or water. Many took to social media to share their ordeal. A newlywed couple on your screens were forced to attend their own reception in Hubli online after their flight from Bhubaneswar to Bengaluru was cancelled. Namita, who was scheduled to travel to Haridwar for the immersion ceremony of her late father, was stranded at the Bengaluru airport. Here's a brief account of what has been a nightmare for passengers across India.
खड़े हैं, ये बोल रहे हैं कि 2500 बैगेज मिसप्लेस।
Trying to contact even the customer care, but no one is lifting the phone.
कस्टमर सर्विस क्या होता है? कस्टमर से युवा कस्टमर सर्विस।
हमारे पीछे वाले फ्लाइट चले गए और हम लोग इधर ही है अभी तक।
Call center is not picking up the call. I'm putting my PNR. It's saying non-existent.
What is the half of the flight is not has been reached.
हमको नहीं पता था, हमारी फ्लाइट कैंसिल नहीं है, हम अपने घर से आए।
1 बजे डिपार्चर था हमारा, लेकिन वो भी कैंसिल हो गया।
यहाँ पे 3 दिन वेटिंग कर रहे हैं हम।
जैसा यहाँ हमने लैंड किया, उसने बता दिया कि आपका फ्लाइट कैंसिल है।
Immediate concern is to provide all the support to the passengers at the airports, especially, like I mentioned, the senior citizens and the differently abled. That is the immediate one. But we are observing deeply into this system. We are seeing the scheduling network that is there. We are seeing the FTTL norms that are there. We are going to thoroughly look into it and ensure all the airlines follow the due diligence, because ultimately in aviation, no matter other networks, but aviation, we have to keep safety as a very important factor. We can't compromise on safety. That is the most important thing.
I, on behalf of all of us at Indigo, would like to extend our sincerest apologies for the major inconvenience this has caused to many of our customers. With these actions, we expect tomorrow to have cancellations below 1,000. The support of DGCA in providing specific FDTL implementation relief is of great help. Still, there's lots of work in progress, but going forward from here, in alignment with the Ministry of Civil Aviation and DGCA, we do expect to further improve every day. Given the size, scale, and complexity of our operation, it will take some time to return to a full normal situation, which we do anticipate between the 10th and the 15th of December.
Well, expect stability to return by the 15th of December. That's Peter Elbers, the CEO of Indigo, but not commenting on what led to that debacle of epic proportions. Madiha Mujawar joins us now from the Delhi airport. Madiha, what is the situation on the ground? Finally, the government has been forced to put the FDTL norms in abeyance. Indigo CEO saying that things will return to some degree of normalcy by the 15th of December. Is there any let-up on the ground at this point?
Not really, Shireen. Scenes at the Terminal 1 of the Delhi airport are something that you don't get to see very often. And it also shows that how certain decisions by one airline can disrupt hundreds of lives. And what you see behind me are all affected passengers who came here at the airport for a normal journey and got to know that their flights have been cancelled. They are now sitting helpless, clueless, waiting for answers. They're looking they are asking anyone that they're finding here. They are looking for Indigo staff, security officials, anybody, to help them understand what's happening with their flights. Several passengers impacted here. Some are elderly, there are babies, there are couples who are waiting, and you can see the queue inside. Everybody is now waiting for answers. What has happened to their flight? When will be their next flight? And there are no answers. There is no certainty. We'll take you to some passengers who are sitting here since morning and have no idea what has happened to their flight. आप कब से वेट कर रहे हैं यहाँ पर?
हम सुबह 11 बजे से कर रहे हैं। 11 बजे इधर आए हैं, हमारा 2 बजे फ्लाइट था, तो वो कैंसिल हुआ है। ये सुबह पर पता चला हमें, सुबह 8 साढ़े 8 बजे पता चला। तो ऐसा कैसे, मतलब 2-3 दिन पहले पता चल जाता तो हम कुछ कर सकते थे। अभी डायरेक्ट पता चला है तो कैसे क्या करने का। हम इधर क्यू में लग गए रीशेड्यूलिंग और कैंसिलेशन करने के लिए, तो इधर 5-6 घंटे लग गए हमें रीशेड्यूलिंग करने को, ये करने को। गवर्नमेंट का कुछ भी कंट्रोल नहीं है इसके ऊपर।
We'll speak to more passengers here who are all impacted. You can see everyone is sitting here. They're waiting for answers from the Indigo staff. They don't know when their next flight is. आप कब से wait कर रहे हैं यहाँ पर?
मैं मैम कल का वेट कर रहा हूँ.
कल से वेट कर रहे हैं. कहाँ जा रहे थे आप?
मुंबई से दिल्ली, दिल्ली से मुंबई, मुंबई से दुबई.
आप कहाँ जा रहे थे और आपकी फ्लाइट कहाँ?
I was traveling from Delhi to Bangalore and the flight got delayed by 20 hours approximately. And now when we are trying to reschedule the flight, that is on Monday supposedly, that is what they said. There's no confirmation that they will be giving us a confirmation on the tickets or on the flight will. So apparently passengers are waiting since night. I actually came yesterday as well. And the worst part is there was no communication from the airline. That is the worst part. So it was a terrible experience.
So as you can see, there are hundreds of passengers here impacted and waiting for answers. Indigo, of course, is assuring after the government's decision as well that the operations will come back to normal. But looking at the scale of the impact, it doesn't look like the situation is going to normalize anytime soon. It will take probably some weeks for operations to normalize. Back to you, Shireen.
Many thanks for joining us, Madiha, from the Delhi airport. Shivani joins us now as well. Shivani, what was the DGCA statement which had initially announced a relaxation only for Indigo, but then a few hours later, the Civil Aviation Minister saying that now the FDTL norms for the entire sector will be held in abeyance?
Well, yes, it's been a dramatic day for Indian aviation. Early this afternoon, the DGCA issued an emergency notification, night landings and permitting substitutions against weekly rest, all aimed at helping the airline stabilize its network after days of disruption. But within just 2 to 3 hours, there was a complete turnaround. The Ministry of Civil Aviation stepped in with a fresh order, putting all revised FDTL norms in abeyance, not just for Indigo, but effectively across airlines. The ministry said this pause was essential to ensure passenger convenience and restore normalcy as cancellations surged and congestion worsened at major Indian airports. This rapid shift raises important questions. If the DGCA believed safety-driven FDTL rules could be relaxed only for Indigo, what changed so quickly that the entire framework was suspended industry-wide? And crucially, what does it mean for pilots' fatigue and safety when rules meant to protect both have been paused on such short notice? What is clear is India's fatigue management rulebook has now been put on hold to tackle an immediate crisis. How long this pause continues and what conditions airlines must meet before the rules return, we'll have to wait and watch for that. Back to you.
Yes, lots of unanswered questions there, Shivani. Many thanks for joining us. Up next on India Business Hour, Netflix agrees to buy the studio and streaming business of Warner Brothers Discovery for $72 billion. That mega deal when we return. Catch all of CNBC-TV18's news and updates on YouTube, Facebook, Instagram, X and Jio Hotstar. Subscribe to CNBC-TV18 Access for our exclusive news breaks. Another important story, a team of negotiators from the US are set to visit India next week for a fresh round of trade talks. Sources tell us that dates for negotiations are still being finalized. Abhimanyu is here with the details. Abhimanyu, so possibility of further movement, some sort of a breakthrough, perhaps even as far as that reciprocal framework is concerned?
Government sources have told CNBC-TV18 that a US trade delegation is expected to visit India next week. The dates for the visit are being finalized, even as both the sides remain hopeful of reaching a framework deal by the end of 2025 to address the issue of tariffs. Now, currently, 50% tariffs are imposed by the United States on exports from India, which includes 25% reciprocal tariffs too. So India is looking to address both these aspects before reaching any deal with the United States, including the first tranche of a bilateral trade agreement. Now, this expected visit would come less than a week after the visit of Russian President Vladimir Putin, as well as a Russian trade delegation to New Delhi. Now, India is looking to curb its overall trade deficit with Russia, which is currently around $59 billion. It intends to export several marine products, agri-products, and consumer goods to Russia. On the other hand, as far as increasing trade with the United States is concerned, both the sides had earlier indicated plans to sign the first tranche of a BTA by the fall of 2025. And both the sides remain hopeful of an equitable deal as early as it is decided. So, of course, all eyes would be on the talks which are taking place virtually, and technical discussions are also continuing on non-tariff barriers between India and the United States, even as both the sides are remaining hopeful of signing a deal to address the issue of tariffs soon.
Well, could we see a breakthrough before Christmas? That's the big story. And the big global corporate story, a media behemoth in the making. Netflix has agreed to buy the studio and streaming business of Warner Brothers Discovery in a $72 billion deal. Rachna joins us now with more on this mega transaction that's currently underway. Rachna.
Netflix has sealed a deal to buy Warner Brothers Discovery, bringing an unexpectedly quick close to a tense bidding race that also drew interest from Paramount, Skydance and Comcast. This agreement mixes cash and stock and values Warner Brothers Discovery at $27.75 per share, taking the total enterprise value to about $82.7 billion. And the equity value of this deal is at $72 billion. The deal gives Netflix control of Warner Brothers' film studio and HBO Max. Warner Brothers Discovery will now move ahead with its plan to spin out Discovery Global, which includes TNT, CNN, and other major broadcast networks. That separation is expected in the third quarter of 2026, after which the acquisition will close. Now, this combination brings one of the largest streaming platforms in the world together with one of Hollywood's most influential studios. The merged library includes The Wizard of Oz, Casablanca, Citizen Kane, Harry Potter, Friends, the DC Universe, and HBO titles like The Sopranos, Game of Thrones, House of Dragon. It gives Netflix expanded creative reach and deeper control of major franchises. Netflix co-CEO Ted Sarandos said the combined catalog will allow the company to give audiences more of what they love. Under the final terms of the deal, Warner Brothers Discovery shareholders will receive $23.25 in cash and $4.5 in Netflix stock for each Warner Brothers Discovery share that would be after closing. Now, before the deal was announced, there was heavy maneuvering around the sale right until the finish. David Ellison's Paramount sent a letter to Warner Brothers Discovery board questioning whether the bidding process was tilted. Now, WBD lawyers replied that the board had fully met its fiduciary duties, but Ellison also met President Donald Trump's officials and lawmakers in Washington, D.C. yesterday to argue against WBD choosing Netflix, even as Paramount reportedly submitted a higher bid of about $30 per share. However, the offer by Netflix involved 85% cash component, which is the reason why this deal swung in its favor. Now, a key point to note here is that Netflix and HBO are two of the top global streaming services. One absorbing the other is expected to attract strong competition scrutiny because of the scale of the content consolidation it would go through and the potential impact on consumers. If and when regulators clear it, this could become one of the most defining media deals of the decade and reshape the balance of power in global entertainment. Back to you.
Not just the decade, this will be one of the mega deals of all times in the media and entertainment space. Rachna, many thanks for joining us. That is the big global story. And that brings us to a wrap on this edition of India Business Hour. Remember, do continue to watch CNBC TV18. We've got plenty lined up for you. We've got some very interesting weekend programming as well, so do tune in for that. But for now, from all of us here, goodbye. Thanks very much for watching.